Good afternoon, guys. So we'll start off with our marathon videos of CA Foundation. Okay, let us start the important topics of your part 2, which is your company accounts. Right? Now, this entire thing, we'll try to divide this whole company accounts into 3 parts. Your topic 1 is theory. Along with it, you will also get certain theory questions. Now your theory is going to be around 4 to 5 marks of this paper, and you will end up getting 2 more questions, which can be both 10 marks or 110 another 5. Company accounts overall will be for 20 marks of the paper. So 5 is definitely for theory, another 5 will be for the part 2 that we are going to be doing, that is tomorrow, or it can come for 10 also, whatever I am doing tomorrow. Today, whatever I am doing is part of your 10 marks part of your paper. Or sometimes if he wants to get really tough on you guys, he will combine part 1 and part 2 and give you only 1 question for 10. That is if I really want to screw your happiness. But 15 marks minimum you will end up getting in this paper. Please don't ignore the theory part, because revision I am only focusing on the practical side of the paper. Right? I'll try to see if possible to send you all the theory notes of all the chapters. If I get some time, I am trying to struggle to make notes for this only. So if I get some time, I'll definitely try to send you guys across. Right? Now, in this chapter, we are going to be covering today 4 scenarios. Right? Scenario number 1, when shares are issued at face value, premium and discount. Second scenario we are going to be learning is about shares fully subscribed, shares undersubscribed, shares oversubscribed. Under oversubscribed, we are going to learn 2 more cases. Case number 1 is going to be just refund the excess. Case number 2, which is pro rata. So pro rata is the difficult question. Till here whatever I have done is the part of the easy part of your paper. Now last part is calls in arrears, calls in advance, along with share forfeiture and reissue. This is the 10 marks part of your paper. Right? When they come in with share issue, forfeiture and reissue, that will be a 10 mark. If this is all easy, if you understand the flow. If I want to make the paper difficult, what I will do is I'll combine the pro rata with shares forfeiture with reissue. Instead of giving the complete reissue, I'll give the partial reissue. That is the only difficult part of the chapter. Everything else is easy. This is the last part which we are going to be doing is the difficult part. Difficult only again like the bills of exchange, you just have to understand the sequence and apply the logic. It's very easy. And this is the 3rd question I'll be answering in the paper. Company accounts will be the 3rd question I'll be answering. Which was the first question I told you? BRS. Second one? Bills of exchange, and this is going to be my 3rd question. Are you clear? Right? So let's start. First one is called as the authorized capital. Now what do you mean by authorized capital? Authorized capital is the maximum capital that the company can raise to it, and divide parts each of 100 rupees each. That means it will become what? 1 lakh shares of 100 each. Right? So this 1 lakh is called as a share, and this is my share capital. Right? Now the company can issue how many shares to the public? 1 lakh shares. And what's the face value? 100. If they are issuing above face value, we call it as premium. If it is issued below face value, we call it as discount. There is no upper limit on what is the premium that you can charge in the market. So you can charge at any value. So there is no limit at all. Are you clear? Done? Now, what is the maximum capital I told you can raise?
1 lakh.
1 lakh of
100 each.
1 crore. Let's say the company decides that they want to issue 80,000 shares at 100. So they are planning to collect how much? 80 lakh. Now in this 80 lakh, let's say public's, look into it, public applied through prospectus. What is prospectus? Prospectus is the invitation from the company for the public to subscribe to the shares of the company. So company gave applications, let's say out of 80,000, some 3 scenarios. Scenario number 1, let's say out of 80,000, company received applications for 70, company received applications for 80, company received applications for 90,000, company received applications for 75,000. These 4 scenarios happened. If you have received for 70, we say shares are undersubscribed. 80 fully subscribed, 90 oversubscribed, 75 again undersubscribed. Now we need to look at a rule saying that if the shares are subscribed more than 90%, more than what? 90%, you will allot those shares. You'll allot how many shares? Only the shares. If it is below 90%, then you will refund all the application money. You will refund all the. So in this case, this 70,000 gets refunded. Are you clear? Done with this? Now comes the further part. Let's assume that the company has issued 1 lakh shares for how much? 100. This can be further divided into parts of collection: application,
Allotment, first call, final call.
Let's assume this was 20, 30 and 40. Sorry, 20 total comes to the 100. Are you clear? Guys, are you clear till now?
Yes, sir.
Now, in this 100, what is there? What I try to do is, I'll try to do a breakup of it a little further. How do I try to do a breakup? Look into it. Now, usually, when they are paying the money, during application, they will be paying first what? Application money. So, first, listen to the sequence. At the time of application, first you will receive the money and then you will give them the shares. First you will receive the money and then you will allot them the shares. After this, for all the 3 things, once you become a shareholder of a company, the company will be making a call first. That means the money will become due first and then you will receive the money. The money will become what? Due first and then you will receive the money. Now, once you call, if you pay, no problem. If you don't pay, the calls will be in arrears. So that means you have called and you have not paid. It will become what? Arrears. Before calling only, you pay. We call that as calls in advance. Till here, are you fine? Any doubt till here? Clear with the entire concept? Now comes the last scenario of the theory. I have 1 lakh shares of 100 each. I have 1 lakh shares of 100 each. The company decided to issue 80,000 shares of 100 each. Now out of this 80, let's say 79,000 shares were subscribed. So this will become my subscribed capital, which is what? 79 lakh. In this, let's say the company has called application plus allotment plus first call. Right? That means how much was it? 20 plus 30 plus 30, which is 80 into 79,000. This will be as what? Called money. Or this will be called as my called up capital. In this money, let's say there was 10,000 shares who has not paid 30 rupees. This will be called as my calls in arrears, because you have called and not paid. Now, I have another 10,000 shares. These guys have paid even the final call money. Then we call this 20,000 as. Are you all clear? What is uncalled now? 20, 30, 30, 80. So out of 100 you have called 80. What is uncalled capital? 20 per share. Are you all clear till now?
Yes, sir.
Any problem?
No, sir.
Guys, are you all clear? Shall we go further? Now, what do you mean by preference shares? Now, when I say a preference shares basically means a share which is having a preference over equity under two things. Which are the two things? One is the payment of dividend. The second one is what? Repayment of the capital at the time of winding up. At the time of winding up, if if you repay the capital before paying to the equity shares, then we call it as the preference shares. Are you clear till now? Now, there are different kinds of preference shares which are there. Now, what do you mean by a cumulative preference share? A cumulative preference share is a share where if the company does not make profit, you still have to pay the dividend when the company makes profit. So, for an example, let's say I have to pay a dividend of 1 lakh this year. The company is under loss. Next year, when the company makes profit, you will pay not only the current year dividend, but also the previous year which was not paid. That is called as cumulative. If only you pay for the current year, not for the previous one. Let's say last year I did not have profit, you did not pay. This year profit, I'll only pay for this year. Then we call it as non-cumulative. What do you mean by profit participating and non-participating? When I say a participating preference share, that means not only will they get dividend, but also a share of profits from the equity shares. Non-participating means they'll only end up getting what? Their differences. Then redeemable means you have to end up paying their capital back, and there is no in India we cannot issue irredeemable preference shares. Irredeemable means you don't have to pay them money at all back. You cannot do that. Minimum or the maximum period for which a preference shares has to be redeemed is 20 years. So 20 years within 20 years you have to pay back the capital, right? Convertible preference shares means you have to convert them into equity. So till here, any doubt in the theory? Right? So now what I have done is, for the examination purpose, I have tried to keep one set of entries so that from every account we only know what's the differences which is going to happen from the examination side. Okay. Now see one by one. First thing, in the application stage, what did I say will happen? First, you will receive the money and then you will transfer it to the share application. So your journal entry will be bank to share application. Next one, when you transfer the application money, what you will do? You will be transferring it to the share capital account. Now, here is where it happens. This case will only happen only if it is oversubscribed or fully subscribed or undersubscribed more than 90%. If it is undersubscribed but it is less than 90, at this stage I shall be refunding it. We'll see the later. Are you clear? Then from the next 3 stage onwards, I will have to first do what? Pass the due entry and then the receipt entry. Due entry is done by passing this share allotment account debit to share capital, bank account to share allotment, first call to capital, bank to first call, final call to capital, bank to final call. So first you will always do the due and then you will collect the money. Are you clear?
Yes, sir.
Now just see the scenarios just for all our understanding. So we are talking of cases where it is fully subscribed, undersubscribed, oversubscribed and other stuff. Let's try to look at. There might be some errors, so we'll just look into it. Now what? Let's say the company has issued 1000 shares. Now how are you collecting? 2 rupees, 4 rupees, 2 and 2. Application 2, allotment 4. So the shares, how much is it? 1000 shares of how much? 2, 4, 2 and 2. On application stage, how much will you collect? 1000 into 2, 2000. So the journal entry will be bank account to share application 2000, 2000. Then share application to share capital. Because I have applied 1000 and I have also been allotted 1000. From allotment onwards, what did I say? First pass the due entry and then you will be receiving the money. So the due entry will be share cap allotment account to share capital 4000, then bank account to share allotment 4000, 4000. Next one, first call. Again, first you will be doing the due entry, bank account to first call, then first will be first call to share capital and then bank to first call. Last one, for the final call, what will be your journal entry? Final call and bank account. Is it easy?
Yes, sir.
So no matter what happens in any question, please make sure that first entries are passed. This will not change whatsoever with any of the cases. Now let us try to understand. 1200 shares means what? Oversubscribed, because I issued how many shares? 1000. Now look into it. First let us understand the story and then the journal entry becomes easier. On application, how much did you get? On application, how much did you get? 1200. Remember this, company can never allot shares more than what they have issued. They cannot allot shares more than what they have issued, except there is something called as green shoe option that you will cover it later. Now that means how many shares did the company issue?
1000 shares.
How much extra I have got?
200.
So remember this, application money will be received on 1200 shares, whereas the allotment will only happen for 1000 shares. The balance 200 shares shall be refunded. once the refund happens, your allotment, first call, final call, all these three will be done for 1000 shares only. All this will be done for how many shares? 1000 shares only. Are you clear?
Yes, sir.
Done. Now see here. How was the breakup? 2, 4, 2 and 2. So see here. Bank account to share application 1200 into 2, 1200. In this,
Should be in the first entry or the second entry?
which one?
Refund.
Refund is the second or the anything, however you want. But first entry has to be for the application money. Then out of this 1200 into 2, I think oh they've
200.
yeah. Right? 1000 into 2 will be transferred to the share capital. What's the journal entry for that?
Share application or to share.
Share application,
To share capital.
share application to share capital. How much is it? 2000, 2000, and the 400, which is 200 into 2, will be refunded. That will be share application to bank account. This is the entry for the refund. Are you clear? Now let's come to the undersubscribed 800 shares.
When it is refunded in the first stage, they will give it in the question also if it will be refunded.
It has, even whether they give or not, until and unless they say something called as pro rata allotment, that means it shall be refunded. Now tell me this, what will happen in this case?
Undersubscribed.
What portion?
200 shares should be subscribed.
First thing I have to check, 800 by 1000. How much percentage is it?
80.
How much percentage is this?
80% is subscribed.
That means it is less than my threshold of 90%. That means entire application money
Should be refunded.
should be refunded.
First you have to pass the entry
First
for
pass the entry for receiving application,
Then reverse the entry.
bank account to share application, then you will refund the money.
Share application to bank.
Are you guys clear?
Yes, sir.
Right? Now if it is more than 90%, 950 shares, now what will happen?
only 9.
All my calculations will be done for 950 shares only. All the calculations will be done for how many shares? So application will be 950 into 2. Allotment will be, first call will be,
950 into 2.
final call.
950 into 2.
Are you clear?
Yes, sir.
Done. See the journal entries. Bank account to share application 950 into 2, 1900, 1900. Then next one,
950 into 4, 3000.
share application to share capital. Then allotment money due. Then your
Receipt of allotment.
allotment. Then first call, receipt or first call. Then your final call. Are you clear?
Yes, sir.
So are you clear with how oversubscribed and undersubscribed works?
Yes, sir.
No problem.
Yes, sir.
Right? So guys watching online, if you have liked it, just put it across yes so that I can go forward. And what did I say calls in arrears is?
Calls in arrears is we have called up but they have not
Okay.
paid.
When all will they would have called up? Can I say allotment?
Allotment, first call.
So at application there can never be a calls in arrears. Remember that. You have to share, he'll become a shareholder only after he becomes a only after the application stage. So now in all these three cases you first did which entry? Due entry, and then you collected the money. So remember this, if you pay the money before the due date, then it is,
Calls in advance.
after calling also you don't pay,
Calls in
Calls in
arrears.
arrears.
calls in arrears. Right? So let's say for an example, 1000 shares, 20 rupees is the allotment money. What will be your first journal entry for due entry?
For allotment.
For allotment?
Share allotment to share capital.
Share allotment
To share capital.
to share capital
2000.
with 20,000. Now in this, let's say 50 shares did not pay allotment money. 50 shares did not pay allotment money. What will be the journal entry?
Bank account debit.
Bank account debit.
Calls in arrears account debit.
Now bank account debit, let's say out of 1000, how many guys did not pay money? 50, right? So that means 950 into 20 paid you money, which is
19,000.
19,000 is the money received.
50.
Calls
Calls
in
in arrears
arrears, 50 into 2,
100,000.
1000,
So 50 into 20.
20,000
To share allotment
To
account.
share
20,000.
allotment 20,000. Hi Lakan. Done? Any doubt till you? Calls in arrears, calls in advance. Understood?
Yes.
Now, remember this. Whenever a calls is given, remember you have to calls in advance. You are supposed to be paying an interest of 12%, and calls in advance,
10%.
it is, calls in arrears, it is 10%. Are you guys clear?
Yes, sir.
Okay.
Yes.
Now, company cannot issue shares at discount. They can issue shares at discount only to the employees or the directors of the company. Are you clear?
Yes, sir.
You're giving us money. I was like, okay, I thought she's giving some Guru Dakshina. Take. Just looking. So afternoon, big party she's giving now. She got 100. Done till you?
Yes.
Now let's go one by one. Shares I told you cannot be issued at premium. Sorry, it cannot be issued at discount. Now what do you mean by premium? If you are issuing anything over and above the face value, then we call it as the premium. There is two parts which are missing in the question. I think it just got erased out. So just mark this in your study material. There is a theory which is there, section 52. There are 5 points to it. Just make sure that you read the theory and explain the theory part of it. Whenever you are issuing the shares at premium, there is no limit on the premium for which you can issue to it. That means a 10 rupee share can be issued at 1 lakh rupees also. Right? There is no upper limit at all. But there is a restriction on the utilization of the profits. There is a restriction on what? Utilization of the profits. What all can you utilize for? This can be part of your MCQ question. What all can you utilize for? Shares, whatever issued on premium, I'm talking of not the cash, I'm talking of the profits on the liability side. that can be utilized, one, to issue fully paid can be paid for what? For fully paid,
Capital redemption reserve.
right? They can issue.
Preliminary expenses.
So this is one of the cases where security premium can be utilized for the purpose of fully paid bonuses. What's the second case?
Preliminary expenses.
To write off
Bank.
preliminary expenses. Third case
Redemption.
is buyback of shares. Now we have a chapter called redemption. Redemption of debentures or preferences. Now when you are redeeming it, means you are paying back the money. When you are paying back the money, you can pay them also premium. You can pay them also what?
Premium
That premium
will be taken from this premium.
can be utilized from here. What's the last case?
Discount.
Commission discount done. Commission on issue of shares or discount. These are the 5 cases that you can utilize. Are you clear? Now, this premium what we are paying, the company can tell at what stage will they collect that premium. The company can tell what stage are they going to be collecting the premium. Are they going to be collecting the premium at application stage, allotment stage, or the call stage? Right? This should be mentioned in the question. If nothing is mentioned, we are going to consider it is taken at what stage?
Allotments.
Allotment stage. What is the journal entry for security premium? Look into it.
Bank.
First journal entry, let's say for application.
Bank account debit.
Bank to
Share application to securities.
to share application, let's say the price was this 2, 4, 2 and 2 and premium was 2 rupees which is paid on application. That means how much has he paid on application?
4 into 1000 share.
Yeah, so that means he has paid 4 rupees,
4,000.
4,000,
But 2,000.
4,000. Now you will write share application to share capital. Out of 4,000, what will go to share capital is only the money received towards face value. The balance will go to the Are you clear with this? But the same thing if it's done at the stage of allotment, then look into it. In allotment, what do I pass first?
Allotment account.
First is the
allotment to share
due
capital.
entry. Due entry is what?
Share allotment to share capital.
Let's assume 4 plus 2. Share allotment account.
Sir,
What cell?
so this one, first you have to pass share allotment to share capital 4,000 and then bank account 6,000 to share allotment 4,000 to bank to
This is right.
That is not right then.
Which one?
What I told? That way.
The previous one.
No. What I told now, I said first we have to pass share allotment to share capital 4,000.
Okay.
Then the next entry, bank account 6,000 to share allotment 4,000 to share securities premium 2,000.
What did I say?
First due entry.
Due entry. If the money is due on allotment, how much is the money due on allotment?
4,000.
4 plus 2. I'm doing scenario 2. If the premium is collected on allotment, so that will be what? 4 plus 2, 6.
Sir, but before when they taught us, they just told share allotment should be only for the actual.
Yeah, share capital.
No.
How much money you have to receive on allotment? You tell me that. Forget whatever your teacher has taught. You apply your logic. How much should you collect on allotment?
4 rupees. per
How
share.
for? Premium who will collect?
But
If you are saying, I'm talking not of the first scenario, second scenario, if I am telling you that the money has to be collected along with your allotment, what is your actual money due on allotment? 4 rupees or 6 rupees? Accounting accrual concept talks about 6 only. I don't know about what your teacher has thought. I am just following what the law or what the rules talk about, right? Rules cannot be wrong. Whatever you say.
so in so in the next entry we have to write only bank account debit 6,000 to share allotment 6,000.
Yeah. Sorry, one second. Done. Next entry will be what?
Bank account to
Bank
share
account to share allotment. 4,000.
6,000.
How much money am I getting on allotment? 6,000. Bank to share allotment 6.
So even for the call stage, due entry only have to pass
Correct.
securities premium.
Yeah. So see this question. We'll look into it. On Pioneer received applications for 2,50,000 of 100 each. Premium payable as follows: 25. Allotment including premium. That means what? 50 plus 25. Balance whenever is required. First thing, bank account to equity share application 6250. Share application to share capital 6250. That is 25,000 into. Then see here, equity share allotment 18750. How did you get 18750? 2,50,000 into 75. In this, 50 will go to the face value, that is equity share capital account. Then the balance will go to the securities premium. Finally, you receive the money bank to share. Done.
Yes.
Now see here. Oversubscription and pro rata. This is the question. We'll try to just understand it one more time. Shall we start?
Yes, sir.
Now, what do you mean by pro rata allotment? Now see here, pro rata allotment means proportionate allotment. Now there are multiple ways of doing proportionate allotment. In the usual stock markets, what happens is There are different categories of shareholders. For an example, there is a category for retail investors, then there is a category for FIIs, then there is a category for institutional investors, right? Now what typically happens is they will say, if in case of an oversubscription, sometimes they'll say we'll do lottery. Now, you know, in Tata Technologies, for every one share, 3,000 shares were applied. So out of 3,000 people, how many people will get share?
Only 1,000.
That means they'll close their eyes, draw one lot, whoever name comes in, they will get the share, whoever does not get, they'll lose it. So like this, they were doing the allotment. One more case is there. Let's say for an example, the company is trying to issue 30 shares. Okay. All the 4 of you guys gave 30. Company, okay, let's make 40 shares. Company wanted to issue how many shares? 40 shares. All the 4 of you gave 40. Company said, you know what, let me treat it fair. What I will do, I'll give all of you based on the proportionate that you have applied. So since you have all applied equally, I'll end up giving for all of you 10 shares. Now what is that 30 shares ka application money you have to refund? Now what I will see, boss, anyway I have to refund you that 30 ka money. Again I have to call you for allotment. Rather what I'll do, I'll keep the allotment money myself and I will refund the balance money. Okay. Now this way what we do of holding the money which you have paid excess for and then refunding the money becomes part of a pro rata allotment. Right? Pro rata means proportionate allotment. Pro rata means what?
Proportionate allotment.
Are you all clear? So pro rata means what? Proportionate allotment. Now rule is simple. Whatever extra shares you have applied for, I will only keep that additional money for what? Allotment. Balance everything I will refund. Please just keep this logic right. That's all is the chapter for 10 marks and it's a lottery if you get it. So keeping this logic, we'll try to apply a question and let's look into this. JHP is having an authorized capital of how much? 10 lakh in equity shares of 10 each, of which 6 lakh shares have been already issued and paid. The company is trying to make a further issue of 1000 shares. So now how many shares are they issuing?
Total.
Now how much are they issuing? They are issuing 1 lakh shares. Now how are they issuing this 1 lakh shares? They are saying you have to pay 2 on application, allotment 5 including premium. They are issuing here price of 10 each for 14 each. That means what's the premium
4
value?
rupees is the premium, 1 rupee is the allotment.
Okay, that means in this 5 rupees, face value is what? 1. Premium is 4. The final call and the balance has to be made further. How much is the balance call then? Out of 14, I have received 2 plus 5, 7. I should still be receiving. What is the issue price? 14. What is the money I have collected towards face value? 7. 2 plus 3. 2 plus 1, 3. I have to collect 10 as the face value. I've collected 3, so our balance, how much I should be collecting? 7 rupees. Are you all clear till now? Done?
Yes.
Now, how many shares they wanted to issue? 1 lakh. How many shares were received?
3,55,000.
That means we are talking a case of what? Under oversubscription, I told you there can be what? 2 cases. Case number 1, refund the excess money. Case number 2, now we are doing which case? So that means I have to do some proportionate allotment for. Now see here, applicants of 5,000 shares were received in full. What does this mean? Out of 3,55,000, 5,000. Now for my easier thing, I'll do like this: applied, allotted. How many shares did he apply? 5. He got how many shares? How many shares did you apply?
5.
And how many did you get allotted? 5,000. Next category. Applicants of 3,000 shares were allotted 1 share for every 2 shares applied.
50,000.
No money was returned to these applicants, the surplus being used for the allotment. So, see here, you applied how many shares? 30,000. And he said what? For every 2 shares, no? For every 2 shares applied, you will give them 1 share. That means if you have applied for 30,000, how many shares you would have got?
15,000.
Then he told applicants for 3,20,000 shares received an allotment of 1 share for every 4 shares applied.
80,000.
That means he has applied for 3,20,000. You have received how much?
80,000.
80,000. That is 1/4 number of shares. Now do the count always in the exam, whether this is coming to 3,50,000 and whether this is coming to 1 lakh.
First one.
Done? So whatever they have issued, they have applied. Now see this calculation. For all the calculation purpose, look into it. I am going to be doing like this: applied, applied 5, got 5, applied 30, got 15, applied 80,
No, sir, applied 3,20,000.
sorry, applied 3,20,000, got 80,000. Right? Now how are they giving the money? On application, how much? 2. On allotment, it was 5, which is 1 plus 4. Then final call 7. Now let's understand this. How much was the application money received? How much was the application? Remember, this application money will be received on the shares that I have issued for. That will be 5,000 into 2, 10,000. This was the money received. Whereas the application money due will be on 1 lakh shares. That will be on the shares allotted. Yes or no? That will be 50,000 into 2, 10,000. 15,000 into 2, 30,000. Now see how much excess the first category guy has. His money due was what? 10. He paid you what?
10.
That means this guy 60. He has paid. 30 was the due. So he has an excess of how much? 30,000. Last case 6 lakh 40, 1 lakh 60. How much is the excess?
4 lakh
4 lakh
80.
80,000. Done till here? Can we go next? Now let's come to the stage of allotment. Now for all the allotment purpose, what is the numbers that I am going to be taking? Is this what is issued is what I am going to consider. How much was the money due on allotment? 5 rupees. So see here, 5,000 into 5 money due. Because from allotment and all, first I have to do is the due and then we go to the payment. How much is the money due? Second category, 15 into 5. And the last category, 80 into 5, which is 4 lakh. Now look into it. What should be received? The first guy has 0 excess. That means, can I say this entire 20,000, 25,000 he has to pay to us? So this will be 25. What about this guy? He has to pay 75. You already have an excess of 30. How much will you collect from him?
45.
How much will you collect from him?
45.
40. How 45? Because you already have an excess of 30, so you'll be collecting the back. See the last guy.
80,000.
Yes, an
Excess is 80,000.
excess is 80, right? Now what did I tell you? After allotment, if there is any excess, what you should do? You will refund how much? 80,000 only for the category number 3 guy. Did you all understand this? Right? Now when we come to the final call, I don't even care because everyone has to pay 7 rupees no matter what happens. Right? So that will be 5,000 into 7, 35,000. 15,000 into 7, 1 lakh 5,000. Then 80,000 into 7, 5 lakh. Total comes to 7 lakh. This will be the money due and this will be the money paid. Did you all understand the calculations? Right?
So only for application you will be considering the applied issued amount. Then for allotment and final call you will consider the
No. For application, you will consider the applied amount. After that, it will all be on the allotment.
allotted.
Are you clear?
Yes, sir.
Did you all understand the table? Online, John, Monica, Lakan. Right? So now you can go back and watch the journal entries. Entries will remain the same. The totals you have to take it, whatever is the due, refund and other stuff. Did you understand the working note? Now let's come to the forfeiture of a share. This is the, so we are done with the first part of your company accounts. We are now coming to the second part, which is the forfeiture and the reissue. That's what we'll be doing today, and we'll wind up the class, the last part of it. Now, first thing, understand, forfeiture means cancellation of the share. Forfeiture means what?
Cancellation.
Why did you cancel the share? Because you have a unpaid amount, which is the due amount. If the money is due and not paid, you can cancel. When the money is due and not paid, what do we call that as? Calls in arrears. And because of calls in arrears is where the share forfeiture happens. Are you clear till here? Right? Now, in the share forfeiture account, rule is simple. Look into it. The journal entry for share forfeiture is cancellation of a share. Share capital is a debit balance or a credit balance? Share capital is a credit balance. That means if you have to cancel it, the journal entry will be share capital account debit to calls in arrears to in the exam also, if you don't get any part of the question right, make sure that you at least do these two entries, because that carries 4 marks out of the entire paper. Even if you don't know anything, you can blindly follow the method I am saying, you will get the entry. So just look into it. Share capital will be debited with the amount called towards face value. Share capital account will be debited towards what? Amount called towards the face value. Are you clear?
Yes, sir.
Now, share calls in arrears account will be money which is called, remember this, which is called but not paid. And share forfeiture account will be money paid towards face value. So again I am repeating, if you understand this, you are done with your 2 marks of the entry. Share capital will be what? Amount called towards the face value. Calls in arrears is what? Called but not paid. Forfeiture will be what? Money already paid towards the face value. Now we'll apply this logic and see here. Let's say the face value of the share is 10. Application to allotment for first call to, let's say 400 shares. Company has called, and in the exam also you can make the table like this, and the shareholder has paid this one, these two. If you can make a table like this, see the way you can pass a journal entry. What did I say your journal entry will be? Share capital account will be to the extent of the money called. How many shares?
400 shares.
What is the called up value? All you have called, no? 1, 2, 3 and 4, 10.
4,000 called.
So it will be share capital account
Share capital account 4,000.
4,000.
2 calls in arrears.
2 calls in arrears.
1,600.
Money which is not paid. Called but not paid. 400 into 4. 1,600. 2 share forfeiture.
2,000.
What is paid already? 2 plus 2, 4. 4 into 4, 2,000.
400.
Is the journal entry easy?
Yes, sir.
Okay. We'll make it little complicated then. Now let's go. See the journal entry. How much have they called?
8.
6.
Called.
8. 6. 8.
Called 8. Right? Now share capital account, see here, will be share capital account debit. What did I say? Amount called for. How much did you call? 400 into 8.
3,200.
2.
Calls in arrears. 1,600.
Wrong. That's what I told you. Money
Ah,
called,
sorry.
called but not paid. How much is called and not paid?
2 rupees
Is 2.
600.
2. 2 into 400.
800.
2 share forfeiture will be money called but not paid. How much is the money called? Sorry, money called and paid.
Paid.
Money called and paid. What?
6 into
6.
400.
2,400.
Which is
6 into 400.
6 into
400.
Are you all clear?
Yes, sir.
Are you all clear till here?
Yes, sir.
Understood what is called, what is not? Madam, confusing.
No.
So then for final call, no entry will be.
Nothing, you have not called only, no? You have not called only, so why are you looking into it? Done. Now see the last scenario. Whenever they say share forfeiture, you are supposed to be looking for this, which is important. That is, whether the money called, is there a security premium? Is there a security premium? If security premium is called and paid, ignore it. If security premium is what? Called and paid. Ignore the security premium from the question only. If it is called but not paid, then you reverse the security premium entry. You reverse the you will reverse the security premium entry. What does that mean? If you remember, what was the journal entry for share allotment? Allotment to capital to premium. Now it will become premium capital to calls in arrears to forfeiture. Are you clear? This will be what? When called and not paid. This is one thing that we have to check. If you have already called and not received it already, we don't have to worry about it. Are you clear? So let's try to see a question. And we'll only apply the proper table format so that we are all clear with it. X Limited forfeited 5,000 shares of 100 each. Fully called up. That means what? They have called up the entire 100. Face value. We look at face value, not the number of shares. Called up means what? They have called up the entire 100, which were issued at a premium of 20%. Now let me just make a table so that it's easier. Application, allotment, first call and final call. Look into it. What are they telling? What is the money due to it?
20 on application.
20 on application. 50 including premium. So how much is the premium? 100 ka 20% will be what? 20. 100 ka 20% is 20, right? So that means out of 50 rupees, 30 is towards face value, 20 is towards the security premium. Then first and final call, they have only one call, first and final call 50. So I'll make it called, paid. Has he called all the things?
Yes, sir.
What all has he paid? Look at only application money was paid by the shareholder. Only this was paid. This too. So that means what? Security premium is coming in the second category. It is
Not paid.
called but not paid. That means I have to reverse it. Clear? So what is the called amount? 100. What is the premium amount? 20. How many shares are there? 5,000. So see the journal entry. Equity share capital account 5,000 into 100, 5 lakh. Security premium will be what for me? 5,000 into 20, 1 lakh. 2 calls in arrears. Look at it. 2 calls in arrears. How much is the calls in arrears for me? Called but not paid.
50.
Called but not paid.
100.
100, no? They have called the allotment, they have called the first call, you did not pay.
100.
Or even if you are getting confused with it, always do the other way around. 2 share forfeiture you can do first. What is share forfeiture?
Whatever they already received.
Called to share forfeiture
Called
account.
and
Called
paid.
and paid. Only this is called and paid.
20.
So do that. 2 forfeiture 1 lakh. Automatically the balancing figure will be. Did you understand this?
Yes, sir.
So what if security is called then? Same entry, sir.
What?
Securities premium called.
called and paid.
Ah.
So that means this won't come. So let's say they did not pay, same question only, let's assume that they did not pay only the final call. Right? If they don't pay the final call, what will be the journal entry? Share capital account 5 lakh. What have they called and paid?
Called and paid. Application and allotment.
Application, just take the face values of it. That will be what? 50. So this will become 2 calls in arrears. 50 into 5, 2.5 lakh. 2 share forfeiture will be 2.5 lakh. This will not be there. See this question, you will understand this. No, this also is with premium only. Okay, done till here?
Yes, sir.
Okay, last entry, last part of the question, the most easiest or the difficult part. Look into it. 2 logics you have to apply. 2 logic you have to apply for the reissue of the share forfeiture. Logic number 1. Now in the previous question, let's assume like this. 10 rupees is the face value, fully called. He paid application to allotment 4. What is unpaid?
Final.
Unpaid is 4. Now, when you are reissuing it, the price at which you have to reissue should always be 4 plus. When you are issuing it, it should always be above the
Unpaid money.
unpaid portion. Okay. Or the other way they ask you is, the maximum discount that you can give on the share is the paid portion. The maximum discount you can give on the share issue is how much? 6 rupees. So your minimum price at which you have to issue will always be 4 plus. That's the maximum discount you can give. But you cannot give discount more than the paid money. So 6 rupees is the minimum money you can give the discount for, and 4 rupees is what you have to minimum collect for. Clear till you? That's the rule number 1 that you have to apply. Rule number 2, let's say for an example, in the, how much did he pay already? 2 plus 4? What he did not pay is 4 rupees. Now let's say it was reissued at 7 rupees. Can I reissue it at 7? I told you the minimum price at which I have to issue is 4. Anything more than 4 can I issue? Can I reissue it at 7?
Yes.
Right? So I reissued it at 7. What's the journal entry for share reissue? Bank account to share capital. Bank account to share capital will always be the face value. Share capital will always be the bank account. You have received only 7. Balance whatever is there will go to share forfeiture account. Balance whatever is there will go to which account? Share forfeiture account. Are you clear?
Yes, sir.
No problem?
No problem.
Done? Now see the other part of it. This is the second scenario. Now the third scenario you have to pass. That's why this entire thing is 3 to 5 marks. Third scenario we have to pass. Look into it. What was the first time I received money? 6.
6.
Second time how much I received?
7.
Total I received what? 30.
30.
What is the face value?
10.
That means you made a 3 rupees profit on a 10 rupee share.
Yes.
This will go to capital reserve. So the journal entry will become share forfeiture, capital reserve 3 and 3. This is how we calculate. If you follow this, it is the most easiest to do the share forfeiture account. Again, if you want, I'll just repeat it. Look into it. I will write what is called and paid here. Then I will write the reissue price. bank account to share capital. Share capital will always be the face value. Bank account will be the reissue price. The difference will go to the forfeiture. Story 1 over. Now what I will do, what was first received? 6. What was reissued received? Total 13. Compare it with the face value, which is 10. 3 rupees is the profit, so 3 rupees will go to the forfeiture. Clear?
Yes.
Now I want you guys to try out the next set of questions which have been given to it. This is along with the solution. I would want you guys to try that out before you come to tomorrow's class. Tomorrow we'll be doing the new syllabus which is there, which is part of your debentures redemption and also a bonus issue which was not covered in the old syllabus. It is there, so that we'll be doing it tomorrow. We'll run through this. The first part of the chapter is very easy. It is like revise all the things today. The first part will be done within half an hour. The second part is little bit of law and accounting that we'll try to cover it in the second. Yeah. Good afternoon, guys. So we'll start off with our marathon videos of CA Foundation. So we'll be doing 3 topics today. One is your BRS, then we'll be doing inventory, and the third one we'll try to finish off doing your bills of exchange before today. So what we'll be doing is we'll cover up all the basic concepts, do all the 3-4 questions including some past paper questions. After that we are going to be trying to see all the study material questions just to see that have we covered all the thing. One of the thing that you are supposed to be making sure is that after you are done with every chapter, all the MCQs and theory questions that you will have to read it, because that is going to constitute 30 marks of your paper. So please don't ever ignore theory. Theory is the one which will give you guys that exemption. It's not the practical, it's the theory. So even if it means that you have to mug up a bit, make sure that you're going to be following it across. Are you guys fine? So let's start. Your first topic, which is your BRS. Now the first thing in BRS that we are going to be looking at in terms of it is the what is a passbook and what is a cash book. Now there are 2 guys who are going to be maintaining certain transactions. It is the cash and the bank. When I am talking of a cash book, it is the customer who is preparing a transactions whichever has happened with the bank. And what is a passbook? Passbook is basically the statement of all the transactions the customer has done with the bank. So who maintains cash book? The customer. And who maintains the passbook? It's the bank, right? Towards the end of the year, we need to make sure that the cash book and the passbook, both of them are matching. If they don't match, why is there a difference between both is what we try to find out in a bank reconciliation statement, right? So bank reconciliation statement is done for what reason? To reconcile the differences between 2 books. Which are the 2 books? Cash book and the passbook. Are you clear? One of a MCQ question which is asked is cash or is BRS a statement or an account? It's a statement, right? So we are looking to make a statement of trying to find out the differences. Now we are supposed to be knowing what are the 3 reasons, or let's say for all my practical purpose, 2 reasons why there will be a difference between the cash book and the passbook. Now the one reason why there is going to be a difference is because of the timing difference. Now what do you call as a timing difference? I have entered the transaction. Let's say I am the cash book, you guys students are the passbook guys. I have entered a transaction, but you will enter it later. But between the time, year has passed by. For an example, let's say I gave you check on 31st March. You will enter it on 1st April. Now on 31st March, if accounts are closing, will both of our books match? The answer is no. Why? Because I have given a check, it was a holiday, you will credit it the next day. So because of certain things like where I have entered it, but you are taking some time to enter, that is called as timing difference. I have entered, it can be either from the banking side or from the customer side. The second one, why there will be a difference is because of the errors. Errors can either be committed by bank or by the customer or by yourself. So if there is an error or a timing difference, because of this, there is going to be a mismatch in which two books, cash book and the passbook, that we call it as a BRS statement to reconcile these differences. Are you clear till here? Now let's go further. With regards to your causes of difference, we spoke about timing, we are talking of the transaction and the error, right? Transaction and timing difference, we'll keep it as the same thing so that we don't have to worry about it. Now when we are talking of the transactions, first thing that we are supposed to be understanding is the timing of the transaction. For an example, let's say I have issued check to Mr. X. I have issued check to who? Mr. X. When I have issued check to Mr. X, when will I record and when will bank record? These are the two things that we have to understand. When I issue a check, I will record that I have paid money to Mr. X. But when will the bank record? When X goes and present it to the bank. X can maybe record it today only, he might record it tomorrow, or he might record any other day. But when X records, X deposits to the bank, that is when the bank records. So what we are going to be understanding now is, we are going to go to each of the transaction, understand when will the transaction get recorded in cash book, when will it get recorded in the passbook. Are you clear? So let's go one by one. Payment through issuing checks. That means you have made a payment by giving a check. Like I said, I have issued check to Mr. X. When will I record? This is cash book. That is when I, as a customer, when am I recording it? When I gave a check to Mr. X. But when will the bank record? When the check will be presented to the bank. That is, Mr. X will go to the bank, and then he will record the transaction. Are you clear? Second case, you received a check. Receipt of check means what? You received a check. Let's say you received check from Y. When will you record and when will bank record? When will bank record? When you present it to the bank, bank will record. But when will I record? Whenever I receive the check. So when I deposit the check, the moment I got it and I deposit, I record it. But bank will record only when the amount gets collected. So when you go to the bank and collect the money, that is when the bank will collect. Are you clear? Next one, collection of checks. Collection of checks or bills on behalf of an account holder. When are you going to record it? Whenever the collections are done, remember this, collections are first done on or by the bank first. Collections are done by whom? Bank first, and after the bank is collected, you get an account statement. In the account statement, when I look into it, I will record it. So first the customer will go, he will not even know the money has been collected by the bank. Bank will send an intimation. Now luckily we get SMSs, right? We are talking of earlier generations where we are not even getting an SMS or other stuff, that you have to personally go to the bank, collect the statement. So first bank will collect, bank will record it the day they collect it, whereas you will record it when you receive the statement. Direct payment to a third party. Who's making direct payment to the third party? Bank is making to the third party. That means who will record it first? First, the bank will record when the payment is done. When will you record it? When you get a statement that is in your passbook. What do you mean by dishonor of the bill? You have issued a check or a bill, but it got dishonored. So when you get dishonored, when will you get to know? You will get to know, or bank will get to know first? Bank. The moment check gets dishonored, bank will get to know first. That is the first thing. And you will record it when you notice it in the passbook statement. Clear? Bank charges. When are you going to record bank charges? Bank charges are first levied by the bank. So bank will first record and then you are going to be recording it. Interest credited or debited. Credit means income. Again passbook will come first and then interest debited. This one will come in. Now, so first thing that we are supposed to be understanding in BRS is what is the first point of recording a transaction. Was it recorded in the cash book or was it recorded in the passbook? Are you clear? So you are going to be checking who's the guy who's going to be recording the transaction first. Is it in the passbook or in the cash book? Clear with the first part of it? Now the second part that we are going to be looking at it is, now for a customer, when I say customer, let's say the owner, right? Money in the bank is what? An asset or a liability? Is an asset. And assets for me should always have what balance? Debit balance. So when we say we have a debit balance, it means we are talking of a favorable situation. Whereas when I overdraw the money, what do you mean by overdraw? That means let's say you have a bank account of 10,000, you withdrew 15,000. Can you withdraw it? You have 10,000 in the bank, but you have withdrawn 15,000. Can you withdraw it? Can you withdraw it? The answer is yes, because of the concept called as bank overdraft. Because of concept of what? Bank overdraft, you can withdraw it. Are you clear till here? Right? Now, when the customer is withdrawing it, right? Now that means, will you have a debit balance or a credit balance going forward? You will have a credit balance. That means whenever we have a credit balance, we say it to be unfavorable. Are you clear till here? Yeah. Are you guys clear till here? So now we understood what's a debit balance, what's a credit balance. So that means in a cash book, favorable balance is called as debit, unfavorable balance is called as a credit. Now, vice versa of a passbook. Vice versa of a passbook. Now, if I have deposited money in the bank, for me if it is an asset, for the bank I am a liability. Therefore, in the passbook I should be having what balance? Credit balance, to call it as favorable. And if it's a debit balance, we call it as unfavorable. Till here, is everyone fine? Till here, is it fine? Right? Now let's come to the next portion. Now what are we going to be looking at in the transaction is simple. Step 1, what did I say? I'm going to be identifying who's the point of transaction. Where does the transaction get recorded first? The second part, I'll try to do the reconciliation statement. Now, how does a reconciliation statement work? Simple. If there is in a cash book, let's say I've added and subtracted, and in the passbook I've done added and subtracted. Okay. Now, if I'm doing a BRS as per cash book, the rule is, which is the second book that I have? Passbook. Rule is, follow the passbook, reverse the cash book. What is the rule? Follow the cash book, follow the passbook, reverse the cash book. That means, now look into it, what am I saying? What is added in the cash book? In the BRS statement, whatever is added in the cash book, I will reduce it, and whatever is reduced in the cash book, I will add it. Done? Then whatever is done in the passbook, so cash book minus cash book plus, then whatever is done in the passbook, what you will do? Follow it. That means add whatever is there in the passbook and reduce whatever is reduced in the passbook. This is the rule we will be following for all the cash transactions. Now let's go one by one. Try to understand what it is. I am doing a BRS as per which book? Cash book. Which balance it is? Favorable debit balance. Now when I am doing this, what does this imply? That I should be following everything in the passbook, and whatever is there in the cash book, I will just reverse it. Are you clear? Now with this keeping in mind, let's try to understand one by one. Checks deposited. When you deposit a check, what will you do originally? Point of contact. So when the checks are deposited but not cleared, what happens is, in your in your cash book, you have added it. Whenever checks are deposited, what are you doing? In the cash book, you are adding it. Now, what is the rule? If I am doing BRS as per cash book, what I should do? Reverse the cash book. That means I will subtract. Now let's say if I am doing BRS as per passbook. BRS as per which book? Passbook. Then what should I do? Follow the cash book. That means if you have added there, here also what I should be doing? I should just add it. Are you clear with this? Right? So that means I will add it. Are you clear? Now let's come to the second one. Checks issued but not presented. When you issue a check, what you would have done? In the cash book, you would have minused. That means what will I do right now? If I am doing BRS as per cash book, what I should do? Reverse the cash book transaction. Therefore, you will add it. If I am doing BRS as per passbook, what I should do? You should subtract it. Clear? Third one. Checks directly deposited by the bank. Deposited in the bank by the customer. Check is directly deposited in bank. Who's the first point? Bank. That means what have you done? So, in the passbook, you have added it. In the passbook, if you have added it, if I am doing BRS as per cash book, what I should do? I should add up. Clear? Is everyone fine? Now if I am doing as per passbook, what I should do? I should reverse it. That means whatever is in the passbook, I should just write the reverse. That will be the subtract. Income received by the bank. When you receive income, who's recording it? Passbook plus. So if I am doing BRS as per cash book, follow it. Therefore, I will add it. Then as per passbook, reverse it. That will be subtraction. Then expenses directly paid by bank. In the passbook, minus. In the passbook, you are doing minus. Therefore, what will happen here? Follow the same. That will be what? Subtract it here also. Whereas, what will happen in the BRS as per the passbook? Because you have reduced it here, you have to do the reverse, that will get added. Bank charges levied by bank. Bank charges levied by bank. So that means whenever a bank charges is levied, that means it will be going to which account? In the passbook you have reduced it. So what are you going to do it here? Here also you will reduce it. What will happen on the other side? You will add the transaction. Done. Locker rent, again rent is an expense. Whenever there is a rent, what you will do? Passbook minus. That means cash book should just follow, and in the passbook you will just do the reverse of it. Are you guys clear? Okay. Now these few things are the ones which I told you which gets confusing, right? Wrong debit in the cash book. So we come back to this drama. Now look into it. Cash book, debit, credit, passbook, debit, credit. Let's try to understand it this way. Cash book should have what balance? Debit. That means whenever they say debit, that means they have added it. And whenever they say credit, that means, whereas in the passbook, if they say debit, what does it mean? Debit means subtract, whereas credit means add, because passbook will always have a credit balance, cash book will have a debit balance. Are you clear till you? Now the moment they are saying that your passbook, there is a wrong debit done, what does this mean? You have added in the cash book. Wrong debit in the cash book. So what is the rule? Whatever you have done in the cash book, you have to reverse it. So whenever they say a wrong debit in the passbook, what is the rule say? Whatever is done in the cash book, you just need to reverse it. Therefore you will subtract it. What happens in the wrong credit? You have subtracted here, therefore you should do the reverse. That means you will add it. Wrong debit in the passbook. In the wrong debit means you have reduced it. What is the rule? Follow the passbook. That means in the passbook, if you have done minus, in the BRS statement also you have to do the minus of it. Then wrong credit in the passbook. Wrong credit in the passbook. What will you do? You have added here, therefore you should just add up in the BRS statement also. Done. Last one, undercasting, overcasting. Okay, what do you mean by undercasting? Undercasting means if your totals, let's say if it was 100, and instead of doing a total of 100, you showed it as 90, and on the other side you showed it as 110. If the totals are showed lower, then we call it as undercasting. If the totals are showed higher, we call it as overcasting. Right? Now see here, undercasting of the debit side. Undercasting of the debit side of the bank account in the cash book. That means on your debit side, instead of 100, it is shown as 90. Cash book on the debit side, instead of showing 100, what did they show you as? 90. What will you do? What will you do? Boss, you have gone there. On the cash account, undercasting means what has happened? Instead of 100, you have shown 90. Now my job will be what? To correct it. So if I have to correct it, what I will do? I will add. How much will I add? I'll add the difference of 10. Now if I say cash account was overcasted by 110. Instead of 100, they overcasted by how much? 10. 110. Instead of 100, they wrote it as 110. That means what you should do? You should bring it back to 100. How will you bring it back to 100? By reducing 10. Are you all clear? So undercasting, overcasting. This is on the debit side. What will happen to the credit side? Now look into it. What will happen to the credit side? Now see here. On the credit side of the cash book, what did I say? Credit side is always minus. So instead of 100, they showed it as 90. So what will you do now? Instead of 100, they showed it as 90. What will you do now? You will subtract 10 rupees, because instead of subtracting 100, you subtracted 90. But if I say it was overcast, that is 110 instead of 100, what will you do? Because you have reduced additionally 10, I need to add 10 to make it equal. Are you clear till now? So whatever we do here, we just have to do the reverse in the passbook. Now see here, wrong debit in the cash book, I subtracted it. Therefore, what will happen in the passbook? I will add. Wrong credit in the cash book. Wrong credit means what? I have credit in the cash book. I have reduced more. So how do I reverse it? I will add it. So that means in BRS as per passbook, what I will do? I have to reverse, that will become an add. Are you all clear? Now, let us go one by one and try to do this question. They have given you you need to prepare a bank reconciliation statement as on 30th September. You have given bank balance as per passbook. What is the rule I told you? If you are doing BRS as per passbook, follow cash book, then reverse this is the rule we will be following. BRS as per passbook, follow the cash book, reverse the passbook. Checks deposited in the bank, but no entry was called in the cash book. Checks was deposited in the bank. That means who recorded first? Checks was deposited in the bank, but no entry was passed in the cash book. That means, can I say this was a direct deposit? That means what is the transaction we have done? Passbook, add. And what does the rule say? Follow the cash book, reverse the passbook. That means if you have added in the passbook, what I should be doing here? I should be subtracting it. Are you clear? Second one, check received but not sent to bank. Who has received it? Customer. That means what have you done? In the cash book, you have added it. Right? What does the rule say? Reverse. I am doing BRS as per passbook. Therefore, I should follow the cash book and then reverse the passbook. Therefore, it will be, here I have added it. Therefore, here also I should just make sure I add 11 lakh 20. Clear? Next one. See here. Credit side of the bank column cast short. Credit side of the bank column. Who will maintain the bank column? So, in the cash book, credit side, you are undercasting it. By how much? 2000. What is the rule? What is the rule? Boss, if you have shown 2000 less, that means what can I say? Debit is more. Please listen to it. When I say undercast, that means what you should have actually reduced 10,000, but you have reduced only 8,000. That is undercasting. That means can I say my cash book will be showing 2000 more? If my cash book is showing 2000 more, what does the rule say? Whatever cash book is showing, you also show the same thing. That means I should be adding 2000. Clear with this? Is everyone clear? This is the one where lot of them do mistakes in the exam. Undercasting, overcasting, just make sure that you are aware of it. Next one. Premium paid directly by the bank under the standing advice. Premium paid by the bank. When you pay a premium, will the cash balance increase or decrease? Reduce. Is it going to be in the cash book or the passbook? Passbook. Rule says what? Reverse the passbook. Therefore, what I should do? I will add it. Next one. Bank charges enter twice in the cash book. Bank charges enter twice in the cash book. Now, what is the rule? What's the rule? Follow the cash book. If he has entered twice, I should also enter twice. So, how many times have I entered right now? Once. Therefore, I should be reducing the second time. Therefore, I will reduce the bank charges recorded twice. Are you clear? Are you guys clear till here? Last one. Check received enter twice in the cash book. Checks received enter twice in the. So what have you done? I have added twice. I am doing BRS as per which book? Passbook. So whatever cash book does, you also have to do the same thing. He has entered twice. Was I will also enter twice. Now he has entered once already. You have to make an entry for the which time? The second time. So you will enter what? Add 10,000. Are you guys clear? Last one. Bills dishonored. Bills discounted, dishonored. Now, when a bill gets dishonored, who records first? In the passbook. When a bill gets dishonored, will it get added to you or subtracted to you? Subtracted to me. It's recorded first thing. Who recorded it? Passbook. In the passbook you have done minus. Right? Now what is the rule? Whatever has happened in the passbook, you need to reverse it. Therefore, what I will do? I will add it. Is everyone clear? Right? So let's do the second question. The cash book of Mr. Karan shows 2,60,400 as a balance in the bank. Now look into it. How am I reading as a student? Which is the book? Cash book. Which balance it is showing? Nothing said. Automatically I will assume it to be what? Favorable. It is not agreeing with the passbook, boss. That's why you have come to me. To make what? BRS. Now, first thing. On 15th December 2021, the payment side of the cash book was overcast. What is payment side? Which side? Credit side. You have shown what? Overcast. That means you have reduced 10,000 more. What is the rule I'm going to be following? First thing, we are doing BRS as per which book? What does the rule say? follow passbook, reverse cash book. Okay. Now that means when the payment side of the cash book was overcast, that means he has reduced 10,000 more. What you should do now? I will add 10,000 so that I reversed it. Done. Second thing, a check of 1,18,000 issued on 6th December was not taken in the bank column. You have issued a check. Did they say that the bank did not take or you did not take? That means what is happened? In the passbook you have reduced it. In the cash book you have not reduced it. Remember this again. A check for 1,18,000 issued on 6th December was not taken in the bank account, bank column. That means the statement, whatever I am having, bank statement is reflecting, my cash book is not reflecting. What is the rule? Follow the passbook. In the passbook, if you have reduced it, I should also do what? Reduce it. Therefore, I will reduce this 1 lakh. $18,000. Are you clear? Next one. On 20th December, the debit balance of 8460 as on the previous day was brought forward as the credit balance. Was what happened here? There should have been a closing balance of debit 8640. But in the next year, instead of writing as debit, what did you write? Credit 8640. Now, how do you convert a credit balance to a debit balance? You have to see, remember this as a thumb rule. Whenever something, we are going to be doing in the rectification also, whenever something which is a debit, you take it as a credit, or vice versa. What you are supposed to be doing is, you need to make sure that you are going to be reversing it with twice the amount. That means a debit, if it's credited once, you will be reversing it by doing what? Debiting it not once but twice. Debit means what? Add or subtract for me in the cash book? Debit means add it in the cash book. Therefore, I will add twice the amount, which comes to 16,920. Are you guys clear till here? Next one. Checks issued, a total checks amounting to 12370 is drawn in the last week, and checks aggregating 9360 were encashed. What does this mean? You have issued a check for how much? 12,370. But you have encashed only what? 9,360. So what is the balancing amount? 3,010. 3,000. See, now it is like this. 10 rupees entered in the cash book, 10 rupees entered in the passbook. Will there be a BRS required? No. I have issued 10. He has recorded 7. So I should be reconciling for what amount? 3 rupees. Now that's what they are saying. Boss, I issued a check in the cash book. I wrote it as minus 12,370, 12,370. Whereas when I saw the passbook is saying, boss, only 9360 is reflecting. That means you have reduced already how much? 12,370. Whereas I have only reduced how much? 9. There is a difference of what? In which book? Cash book. So what I should do? I will add it back. Next one. A dividends of 35,000 collected by the bank. Dividend collected by the bank. Who recorded it?
Bank.
Passbook. You have added it. Here also you will add it. Fire insurance 7,900 paid by the bank. subtract. There also you will subtract. Last one. A check issued to the creditor was recorded twice in the cash book. You have paid a check of 1,75,000, but you have done what? Reduced 3,50,000, whereas actual reduction should have been only what? 1,00,000. How will you change this to this? By adding 1,75,000. So if you have entered twice, you have to make sure, because it's in the same book, I have to reverse it once. So you will add up 1,75,000. Last one, bills for collection amounting to 53,000 was credited in the bank account. Credited in the bank means what? Passbook plus or minus? Add. Therefore here also I should be adding it. Last one, the owner, a customer who received a cash discount of 3%, paid a check, whereas the gross amount was recorded in the bank column. You received 60,000. You received how much? 60,000. In that 3% discount was given. So you received what? 58,200. Whereas in the passbook, how much did you record it for? Sorry, in the cash book you recorded it for 60, whereas in the passbook it is showing 58,200. What's the difference amount? 1,800. So which is showing 1,800 more? Cash book. So I have to reduce it. So 1,800 you will reduce it. So you start with the opening balance, write all the things, finally you get your closing balance. Till here, are you guys fine? Till here, are you guys fine? Just one second. Yeah. Now let's come to the last part. What do you mean by adjusted cash book? Now see here. Just follow this rule blindly. You will not have any issues with regards to any of the transactions. Now, cash book, you have entered, passbook is not entered. Cash book, you did a mistake. Then passbook, you have entered, whereas in the cash book you did not enter it. Then there is a error. Now whenever we are doing an adjusted cash book, what we are trying to do is, I am trying to just make sure that whatever errors can be done. See, in BRS typically what should happen is, I have entered, you did not enter, only those should come in. Because see, if bank has entered, that means boss, money has gone, let us show the real balance. So what we try to do is, these transactions, see here, this one, that is, if you have done something wrong in the cash book, I will correct it. If there is an entry, if there is an entry in the passbook and the cash book has not entered it, then I will record it. So adjusted cash book will make sure these two things are getting recorded. Again, remember, which is the first one? You have entered something wrong and you have to correct it in the cash book. Second, it is already reflecting in the passbook and you are not correcting it. Clear? Anything else which is there, which is what? I have entered in the cash book, not in the passbook, or an error in the passbook, only this comes in the BRS statement. Are you clear? Now, just let's see this question. On 30th December 2022, the bank column of A. Phillips cash book showed a debit balance of 4610. Debit balance of 4610 means what? Checks amounting to 6,30,000. Now the moment I know I am doing the favorable and they are asking me to do the adjusted cash book, I know certain rules. That is what? Follow passbook, reverse cash book, and in the adjusted cash book what will come? Timing of passbook and errors of cash book. If I can recollect this, I will be easy to do the question. Now look into it. Checks amounting to 6,30,000 issued to trade payables entered in the cash book but not presented for the payment. Which error is this? It's a timing difference. Why? Entered in the cash book, not in the passbook. So it will come in the BRS. Now next one. Checks amounting to 2,50,000 has been recorded in the cash book as being paid but were entered into the bank statement after the next year. What will you do here? It will again come in the BRS. Why? Again it is entered in the cash book but not in the passbook. Checks received for 73,000 has been dishonored but no record of this appeared in the cash book. This has to come in which one? Adjusted cash book. Why? Because when the check got dishonored, we told who's the point of contact for me? Is the bank. So in the passbook I have reduced it already, whereas I have not done it in the cash book. So in the cash book you will do what? You will reduce it by writing it on the credit side. Next one. Dividend of 3,80,000 paid directly to the bank but not recorded in the cash book. It is gonna be in which book? Adjusted cash book. Why? Entered in the passbook but not in the cash book. So I will write it on the debit side. Bank interest charges amounting to 4,200 not entered in the cash book. Again, adjusted cash book. No entry has been made in the cash book for trade subscription of 10,000. Trade subscription, they are saying it was not entered in the cash book. That means what? It would have been entered in the passbook. Now I have to enter it in the cash book by reducing 10,000. Last one. A check of 27,000 drawn by B. Philip has been charged to A. Philip's bank account by mistake. Whose error is this? Bank error. What did I say bank error is? Bank errors have to come in the BRS. A check of 27,000 drawn by B. Philip has been charged. Please understand the term charge. Charge means what? Addition or subtraction? Subtraction. What is the rule? Whatever is done in the passbook, you also have to do it. That means here I will reduce 27,000. Did you understand this? Is everyone clear? I have given 2 more exam questions for you guys for the preparation. That you can do it after the class. 2 questions. If you have any doubt, you can let me know. Let's do one more question of your adjusted cash book. A checks amounting to 60,000 issued to the creditors have not been presented. Oh, one line. According to the cash book of G, there was a balance of 4,45,000 in the bank column on investigation. That means we are following what? Cash book. Which balance? Favorable balance. Checks issued, creditors have not been presented till date. Which error is this? Timing difference. Therefore, it will come in the BRS. Checks paid into the bank, out of which only 55,000 was collected. So, you have issued a check or you have paid into the bank 1,15,000, only 55,000 was being collected by bank. Whose error is this? Is it from the bank or the cash? It is from the bank. Why? Because you have already entered in the cash book, but bank account is not reflecting. Therefore, it is part of my timing difference. Timing difference will reflect in my BRS. What is the amount which is going to reflect in BRS? 55,500, which I should be reducing it because you have added in the cash book. So here it will be the reverse of it. Dividend of 4,000 and rent of 60,000 received by the bank and entered in the passbook but not recorded. Adjusted cash book. Why? Because it is appearing in the passbook, so record it as the debit side. The payment side of the cash book has been undercast. This is an error. Payment side means what? You have taken less. Now how do you make it right? You will just take further credit in the passbook. See, they are saying undercast of the credit side. In the minus column, you have to do further minus. Undercast of the credit side. If they would have said overcast, you have reduced more. To make it better, you will add it. Here, undercast means you should have reduced 10,000. You have reduced only 5. So, how do you correct it? Reduce further. That coming up to how much? 2,700. Then bank charges 150. You know you have to show it on the adjusted cash book. Bills payable 20,000 has been paid by the bank but not entered in the cash book. Again adjusted cash book 20,000, and then they are saying a bills receivable for 6,000 had been discounted with the bank at a cost of 100. So that means 5,900 is what is reflecting in the bank. Now it is bills receivable. Bills receivable, will you add or subtract? You will add it 5,900. You get your balance. This balance you take it forward and do the two BRS statements. That will be the opening balance for my BRS, and for that you will just do the add and subtract to it. Are you guys clear? So let's just do a quick recap whatever we have looked at. So in the adjusted cash book, if there is a timing error of the cash book, will it appear or not? In the adjusted cash book will it appear, or in the BRS it will appear? Timing error of the cash book will appear in the BRS. That is, you have entered in the cash book, not in the passbook. Error of cash book, will it come in the adjusted? The answer is yes. Timing of passbook, will it come in the BRS or the adjusted cash book? It will come in the adjusted cash book. That is because whatever is entered in the passbook, if it is recorded in the passbook, I also have to record it in the cash book. Clear? Last one, if there is an error in the passbook, where will it appear? It will appear in the BRS, right? Then the next concept, if we are following a favorable balance, I will have a positive, right? Or unfavorable balance, I will have a negative. There are two ways of doing it. Just look into it. Your books have multiple answers. So if I am doing as per the favorable balance, that is BRS as per cash book, what is the rule? Follow the God's book. Who's the God here? Passbook. So if passbook is added, you will also add. If passbook is reduced, you will also reduce. And what? The second rule? Reverse the cash book. That means in the cash book, if you have added, what will you do in the BRS statement? Subtract. If in the cash book you have reduced, what will you do here? Add. Right? Now see in the unfavorable balance, what will happen? Either you can follow the same rule. That is, keep the opening balance negative, and then you can do the same thing plus minus. That's what I do because it's not an MCQ paper, right? Another way easy to do is, This one you understood? So do this, minus into plus, minus, minus into minus, plus, minus into minus, minus into plus, minus. So either you can do the same thing or you can keep the favorable balance as positive and do this on the other side, whichever is convenient for you guys. Are you clear?
So then the opening balance will be negative.
If you are doing the same favorable balance rule, then you take negative. If you are taking that as positive, then you have to do everything, do the reverse of it. That means now what will happen? See here. This is like if the, or I will tell you the other way around. Look into this. Favorable balance of cash book, follow passbook, reverse the cash book. Now if it is unfavorable balance and you are taking the answers in positive, then you have to do the reverse of it. That means follow cash book, reverse the passbook. Clear? If you are doing now favorable balance passbook, what will be your answer? Follow the cash book, reverse the passbook. Then unfavorable balance, what did I say? You have to do the reverse of what you did. Follow passbook, reverse the cash book. Are you guys clear? So there are these two questions which is additional there, which they'll share it across to you guys. You just solve it. So it is 3:30. We'll start the today's topic. Right? Good evening, guys. So let's start the next topic, which is bills of exchange. Now, bill of exchange is one of your very important topics for your examination. Very often asked in terms of it. Now, let us just try to understand what are we going to be covering in the entire bills of exchange as a chapter. Right? Now, bills of exchange has multiple scenarios. Now, before we try to understand this bills of exchange, we'll try to know why did a bill of exchange come into picture. Right? So, let's try to understand this scenario. Ram sold goods to R. Sita. Ram sold goods to R. Sita. Ram wants money immediately. To Ram, who's Sita? Debtor. Now when Ram sold goods to Sita, what would have been the journal entry?
Sita account debit to sales account.
In Ram's book, it would be
Sita account debit to
Sita account debited to sales account, right? Now, when Sita pays money for it, what would be the journal entry?
cash account debit to Sita account. Cash or bank account debit to.
Okay. Cash or bank to Sita. This though we are clear. Now what is happening? Sita does not have money. Sita does not have money. Ram wants money. So in between these two comes an arrangement called as bills of exchange. And this is the crux for me to understand the whole chapter. So between what? A credit sale and the payment comes what? An instrument called as bills of exchange. Now see what happens. So simple thing, you sold goods to Sita, Sita to sales. Next one, you are saying, Sita is saying I don't have money, take the bill. So it will become what?
Bills of exchange
To Sita. Then you receive money. You take that bill and you receive the money. So it will become here cash to bills. Now if you just see what is happening. Sita, bills. Finally we came to cash to. So this is like a fitting entry in between. Between your credit sale and the payment, something is coming in between. That is my bills of exchange. So what you need to understand for this chapter entirely is that boss, there is already a credit sale which has happened, and now to fit that credit sale is where the bill is getting drawn. If you get that portion of the question right, then everything else in the chapter makes sense. So, are you guys clear till here?
Yes, sir.
So, let us start now. Let us understand what's a bill of exchange and promissory note. I've given you the notes, so you can just look into it. Now, there is our Rama, there is our Sita. Rama sold goods to Sita. Sita said, Ayyo Rama, I don't have money. Rama says, I want money. Rama does not trust Sita. Rama does not trust Sita. So he wants money now. Sita is saying, give me 3 months time, I'll give you the money. Rama is saying, I don't know who you are. I want to protect my interest. So what Rama is saying is, see here, I will draw one bill or I'll give you one letter, not love letter, I'll give you one letter. A letter will tell that, please understand what is the content of the letter. That's the crux for the chapter. I will draw a letter in which it will say that you, Sita, have to pay me this much of money on a particular date. You agree to it. That is more than enough. Listen to it again. What is the letter saying? You, Sita, you have to pay me a certain sum of money on a particular date. You and Sita, you agree to it. That means I am good enough. Okay. Did I mention anything about me selling goods to Sita?
No.
No. I only told what? You have to pay money. You have to give me on this date. Are you clear? Now, who's the drawer of the bill? Ram. Who's the acceptor of the bill?
Sita.
So, in all the questions that they'll be talking of, Ram drew a bill on Sita. Sita accepted it. That automatically means that what? For you, it is a bills receivable. For Sita, it is a bills payable. So, this is called as bills of exchange. So, Rama drawing a bill on Sita, Sita accepting the bill, we call it as bills of exchange. For Rama, it is called as what? Bills receivable. Sita, it is called as what? Bills payable. One story understood. Now, let's come to promissory note. What is a promissory note? Even before Ram tells Sita to pay, Sita in slow motion comes and tells to Rama, Rama, I will only pay you money on this date. So, Sita is making a promise to Rama to pay money on a certain date. That is called as a promissory note. Are you clear? Now, one of a feature of a bill of exchanges, let's say Rama has a bill. Who accepted the bill? Sita. So, Mr. Rama gave this paper to Lakshman. Right? Now, that means what Sita will do is, whoever is having the bill, to them she will go and pay the money. Lakshman went to and gave it to Ravana. Lakshman went and gave to Ravana. Now Sita will give to who? Ravana. So that's where Ramayana happened. Right? So basically, she does not care about it. Whoever is holding the bill, she will give it. One more thing, we tell that as bearer instruments. What do we call it as? So whoever is holding the bill, they'll give. Or you can also do is an endorsement. You can also do what? Endorsement. So what is that endorsement? Behind the paper, I will write Lakshmana's name. That means Sita will give to Lakshmana. Lakshman will draw line behind and write it Ravana. She will give to Ravana. So that is called as endorsement of the bill. That means you are telling that whoever is I am endorsing, you have to pay to the bill. So bills of exchange typically can be paid to the holder of the bill, or to the bearer of the bill, or to the person who I have endorsed. Whereas a promissory note, who is drawing a promissory note? Sita is drawing a promissory note. Who is accepting the promissory note? Rama. Rama can endorse a promissory note, but he cannot keep it as a bearer instrument. He cannot keep it as what? Why? Because bearer instrument can only be issued by the Central Bank of India, which is RBI. If whoever promise and you accept and you can keep transferring it without mentioning anything, that means you are creating a currency note. If you open any of your notes, it will be clearly given, I promise to pay somebody. Your currency notes are all promissory notes, right? So that value can only be created by the government. So that's where promissory note bearer instrument cannot be done. Understood, everyone? Right? Now let's look into the definition. See here, a bill of exchange has to be an instrument in writing containing an unconditional order. So you cannot give any condition to Sita to say only if this happens you have to pay me the money. It has to be unconditional. That means what? The moment you accept this bill, no matter what happens, you have to pay the money. Right? Signed by the maker. Who is the maker here? Rama. Directing a certain person to pay a certain sum of money. Who is he directing it to pay? He is directing Sita to pay money only to or to the order of a certain person or to the bearer of the instrument. Understood? Right? Next, what's a promissory note? See here, promissory note is an instrument in writing, not being a bank note, not being a bank note or a currency note, containing an unconditional undertaking. In the bills of exchange, it was an unconditional order. Here, Sita is only telling, Ayyo Rama, I will only pay. So she is undertaking herself, signed by the maker to pay a certain sum of money only to the order of a certain person. Right? This is one of your theory question. You will have to read through it for your exam. What's the difference between a bill of exchange and a promissory note? Okay. Now, I want you guys to look into it. We are going to be covering different scenarios. Scenario number 1 is called as honoring of the bill. Scenario number 2 is called as dishonor of the bill. The third scenario is called as the accommodation of a bill. This is easy. This is easy. This requires practice. This you get lucky. This you get also lucky. This you get is where intelligence gets tested because it's English. Now, what is that honor of the bill is? See here, Rama, Sita. Sita said money will be paid after 3 months. 3 months later, Sita paid money to Rama. Rama and Sita got married. Honor of the bill. Rama drew a bill to Sita. Right? Sita on the day did not pay money. Why? Because Ravana had kidnapped. So, that's the second story. Dishonor of the bill, where on the due date, she does not pay. Accommodation of a bill will come back later because it gets little confusing. Right? So, we have only 3 scenarios. You have to understand which scenario it comes in. Even in the accommodation bill, if you get confused about different things, try to make it scenario based. So, what I have done for this particular question is, I have tried to write a scenario in the work note what I have given. I have written the scenario so that your mind should be able to think in the examination. This scenario, this guy will have entry, that guy will not have entry. So that will be easier for you guys to remember on the examination. So guys, are you clear till now? All the online folks? Guys, are you clear? So let's start one by one. But you are sending your mom that you are still in class. Tell her sorry. Okay. Now see here. Now we are going to be covering 3 scenarios. I'll tell you the 3 scenarios and I've given you the working notes for it. Now Rama, Sita, right? Let's assume the bill was drawn on 1st January for 3 months. That means when? Yes, you have MCQ questions, John. Right now they have not confirmed, so please don't keep asking it again and again. I said as of now they have said you have a 30 marks MCQ. So that's all we know. So RTP and all is not the format. So as of now, there is a 30 mark MCQ. So I'll confirm it to you before the class ends, like the last day. What's the actual format? I'm trying to find something. I'll let you know. Right? 3 months. So when is that you are supposed to be paying the bill? January, February, March. That means on 1st April. So whenever the due date falls 3 months, we give a 3 days grace period. So the due date is called as 4th April. This is called as my maturity date, and this is my grace period. If this falls on a Sunday, then you will be paying it on 3rd April, which is going to be a Saturday. If this was a public holiday, then again the previous day. If it was an emergency holiday, then it's the next day. So this you have to remember it. Clear? Now we were talking of whom? Cases of Rama and Sita. So for all my calculation purpose, I'll be writing a scenario like this. 1st January, between 1st January to 4th April and 4th April. So if you open your book, that's how we have written date of drawing and accepting the bill, which is what? 1st January. From the date of drawing the bill until maturity, that means what? Between 1st January to 4th April. Then on maturity date, I am talking of 4th April. Are you all clear? Right? Now, see here, there are 3 scenarios which can happen. Scenario number 1, Rama drew a bill on Sita and Sita accepted the bill. And Sita accepted the bill. That is scenario number 1. After that, every day morning, Rama will get up, see the bill. In the bill, he'll see Sita's face, keep quiet, and like this, he spent 3 months. Then he is going on which date? 4th, in the slow motion to Sita and saying, Sita, take this letter, give me the money back. This we say holding till maturity. So what is happening? Transaction will happen here. This time he will not do anything. He will just wait. Then he will collect the money on the maturity date. That is case number 1, called as what? Holding till maturity. Right? Now whenever a bill is drawn, and let's say I am Rama, you guys are Sita. Rama drew a bill on Sita and Sita accepted it. What is the journal entry? For me, it's an asset. For me, it's a asset. Asset should be debited. So the journal entry will be bills receivable account debited to debtors account. Are you all clear? Bills receivable account debited to debtors account. Clear? Now, from 1st January to 4th April, did Sita do Rama do anything? No, he was holding the bill. That means no journal entry is required. On the last day, which is the day? 4th April. If Sita gives the money back, then we say the bill is honored. Bill is honored. When you are getting the money, on the maturity date, I think I moved little ahead. Yeah, when they give you money, the journal entry will be cash account debit. Change it here. It's cash account debit to bills receivable account. How did I do this mistake? Are you all clear? So that's the 3 entries that we will be looking at. Now comes the second scenario. See here. Rama drew a bill on Sita. Rama drew a bill on Sita accepted the bill. Sita accepted the bill. What is the journal entry? Bills receivable to Sita. This happened on which date? 1st January. Rama waited 1 month. Nothing happened. Then he somehow felt, I need money. I can't keep seeing Sita's face every day. I have to feed myself. He said, I need the money. So what Rama did, he went to bank and got the bill discounted. He went to the bank and got the bill. So what bank will do? Bank will say, boss, when will I get money? Bank, after 2 more months, because January has passed, you will give me money only after 2 months. I don't know you nor Sita. I have to protect my money. So what bank will do? It will reduce 2 months interest. It will reduce how many months interest? 2 months interest and pay you the money. So what bank will do? See here, bank account debit, discount account debit to bills receivable account. They will do, if they do it on January only, how many months they will discount? 3. They are doing in Feb, 2. If they are doing in March, 1 month. If they are doing in April, nothing, right? So like this they will do the discounting. Interest is calculated the same way as we do our regular interest, so nothing to worry about. So from the total value you will reduce the interest portion and then make the payment. Clear? To bills receivable account. Are you clear till now? Now comes the next part. On the maturity date. On which date? Maturity date. Now what does Sita do? She will pay to the holder of the bill. Who is the holder of the bill? Bank. So Sita will pay to bank. Should Ram pass any entry? No entry in the books of Ram. See here, scenario. First entry, holding. Okay. Discounted with the bank. Bills receivable to debtors. Second entry for discounting will be bank account, discount account to bills receivable. And on the maturity, no journal entry is required since bank is handling it. No problem. Done. Now comes the third scenario. Rama drew a bill on Sita. Sita accepted it. What's the journal entry? Bills receivable to Sita. Okay. Now once she accepted it, right? Rama went to Lakshman and said, I am scared of your sister-in-law, you only collect the money. Okay. And Rama took the money from Lakshman. Or Rama had some purchases with Lakshman or other stuff. Lakshman kept on saying, Anna give me money, Anna give me money. He said, I don't have money, take this bill and get lost. Right? So now he has endorsed it to Lakshman. So when Ram endorses it to Lakshman, look into it. I am supposed to be transferring this bill to Lakshman. Who's the receiver of the bill?
Lakshman.
And what is going out from you? So the journal entry will be Lakshman to bills receivable. Now like this, Lakshman kept on waiting. 3 months got over. Sita has to pay money. To whom she will pay?
Lakshman.
Why? Because he is the holder of the bill. Now again see the journal entry. Bills receivable to debtors. This is for the bills accepted. Then when you are transferring it to the creditor, the journal entry will be what? Creditor. In my case it was Lakshman to bills receivable. Finally, on the due date, no journal entry is required. Are you guys clear till here?
Yes, sir.
Easy. Guys, are you clear? Online folks? You guys have lucky parents. They are telling don't study. What will happen? 1 attempt, no 2 attempts you take. Show them this video. That's why I'm saying show this video. See, You guys only, my teacher is making mockery. ನೂರಲ್ಲಿ ಒಬ್ಬ ಪಾಸ್ ಆಗ್ತಾರೆ ಅಂತೆ, ನೀವು ನೋಡಿದ್ರೆ ಓದ್ಬೇಡಿ ಅಂತದಿರಾ. ಪಾಸ್ ಆಗಬೇಕು, ಓದಬಾರ್ದು, ಹೇಗೆ? They'll realize it once the results come out. Not yours result, I'm saying your friends and other things. Right? Now let's try to look into the case number 2. Honor of the bill. Are you guys clear?
Yes, sir.
Right? Now let's talk about the dishonor of the bill. Now let's look into the dishonor of the bill. How does it work? Mr. Rama drew a bill on Sita. What's the journal entry? Bills receivable.
Sita.
Rama is planning to hold till maturity. Rama is planning to hold till maturity. So Rama every day morning seeing Sita's letter, waiting. 3 months later he ran to Sita. Sita is disappeared. So dishonor.
Sita account debit to.
So now that means that bill does not have any value. You need to cancel the bill. How do you cancel the bill? Reverse the entry. That will be Sita to. Are you clear with scenario 1? Now comes the scenario 2. That is, what was my scenario 2? I
Discounted with the bank.
discounted with the bank. Now let's look at the scenario. Rama went to Sita, drew a bill. What's the journal entry? Bills receivable to
Sita.
bills receivable to Sita. Right? Now Rama went to bank, discounted the bill. What is the journal entry?
Bank account discount charges debit to
So what's the journal entry?
Bank account debit. Discounting charges.
Bank account debit,
discount charges debit
discount account debit to bills receivable. So that happened between the date of drawing a bill and before the maturity date. Maturity date, who will go to Sita?
Bank.
Bank went to Sita. Sita said, who are you? He said, I'm bankrupt. I don't have money. What will bank do?
Bank.
Bank will come and chase Ram and collect the money. What money they will collect is, let's say for an example, the bill was 10,000. Bank gave 9,000 to Ram.
But they'll collect 10,000.
Now, in case the bill gets dishonored, bank will make Ram to pay not 9 to bank account 10,000 plus additional, let's say, some money called noting charges. For this question, I'll keep it as noting charges 500. So, how much will he collect? How much he will collect? 10,500 he will pay to the 10,000 to the bank and 500 to the note. From whom he will collect all those? Madam, see, that's what I'm saying. You need to understand accounting for this. See the entry number 1. Whose entry number 1? Bills receivable to Sita. Entry number 2. Boss, bills receivable is cancelled already. So you cannot come and write another bills receivable again. So it will become Sita to bank account 10,000. Are you clear? So if you put noting charges, then it will become 10,500. Right? Whatever you have to pay to the bank, you will go find Sita, make sure that she pays that money, including all the charges. Are you all clear with how the dishonor happens?
Yes, sir. Sir, this first one, journal entry. This second one.
Wait.
Holding till maturity. Journal entry, the third case. 2 bills receivable account, 2 bank account you have given. That's not there.
Hey, no,
That's
no.
a mistake.
So,
No, that is correct.
sorry. So, no, correct. This is right only.
So this is holding till maturity.
Holding till maturity, you are dishonored, no?
But why noting charges you have to pay to the bank?
date, the bill is this one.
Madam, you have to understand what is noting charges. You are telling me you are paying me money. You are not going to pay me money on that day. Now I have to get an affidavit done to say that she has defaulted on that day to go to the court. That is noting charges. From whom will I collect? From Sita. Have I paid money? Hey, I have paid money, no. I would have paid money to the lawyer, no. So that money I have to collect it, no. So that's where it will be 2 bank noting charges. Done? So Sita is done, discounting is done. Now let's bring Lakshmana into thing. Mr. Rama drew a bill on our Sita. Right? So what's the journal entry for that? Bills receivable to Sita. Now, what did he do? He endorsed the bill,
Lakshman account debit to
right?
BCC.
When he endorsed the bill, the journal entry will be Lakshman account debited to bills receivable account, right? Now, after that, on the maturity date, what will happen? Lakshman, Sita has to go to Lakshman to pay money. Sita did not pay. What will Lakshmana do? Come to Ram. Whatever Lakshman has incurred charges, who will pay? You will pay. But with whom you will collect? Sita. So the journal entry will become, see this, bills receivable cancelled. So you have to do the entry Lakshman, and this will be including the noting charges. Done till here? Understood all the 6 scenarios? Now comes the next scenario called, next scenario is called as renewal of bill and retirement of bill. Renewal of bill and retirement of bill. What do you mean by renewal of bill? Renewal of bill means that you are cancelling the old bill and making a new bill. So now look into it. What was the journal entry for drawing the bill? Bills receivable to Sita. So that means if you have to cancel the bill, what will be the journal entry? Sita to bills receivable. You cancelled. Now draw a new bill. What will be the new bill? Bills receivable to Sita. This will be the new bill. This is called as renewal of the bill. Are you clear?
Yes, sir.
So you cancel. Now you might be asking, what will happen is there will be charges for it, because for a reason, see, I gave you bill to pay me within 3 months. You did not pay me in 3. You are expecting to be paid in next. You want additional 3 months. I'll say, boss, I lost interest already. You need to pay me that interest. So along with the new bill, you will pay the interest. Now interest, what you get is an income or expense for you. Income should be debited or credited. So the journal entry will become bank to interest account for that additional period that you will be collecting immediately. Are you all clear? Online friends, if you have Fine with it? Just put a yes so that we can go next. Then comes the next part, which is your retirement of a bill. What is retirement of a bill? Is basically before the due date, you are coming and paying off the bill. Before the due date, you are paying off the bill. Now look into it. You will say, hey, you know what? You have to pay me in 3 months. You have to pay me in what? 3 months. I'll come to you and say, you know what? I'll give you in 2 months. Can you give me some discount? What you will say? Okay, fine. Take some discount. Wait, right? So now see here. What was the journal entry? Bills receivable to Sita for drawing the bill. For retirement of the bill, see here. Bank account, discount account to bills receivable. This is called retirement. So if you would have honored the bill, the journal entry would have been bank to bills receivable. Now before, because you are doing little bit before, you will be giving some discount. So it will be bank, discount and bills receivable. Rebate or discount, whatever you want, you can use that term. Till now, is it easy? No, it's your choice, no?
If it is mentioned. And interest is also not compulsory.
Interest is, see, that's what I'm saying. So all of this comes part of your question, where he will say that Mr. Rama has agreed to renew the bill provided you pay an interest for 3 months. So it would have mentioned in the question and then you take it into
No,
consideration.
in real life.
Real life, money is everything, madam. Why will you give away your money? Today, as college students and other stuff, you know friendship is very thick. You will say, I'm acha, take 100 rupees, no issue and all. When it comes to real life, you will be like, if you see that guy taking your 100 rupees and watching movie and you are sitting in class and watching class, you will then be like, ayyo, in my money is enjoying it and I am sitting here. That jealousy will kick in and you will say, hey, no, why don't I make that money back, give extra. Right? In real life it works completely different. Today you are not earning money, so you won't understand it in real life. Done? Okay. So till this portion, are you guys clear?
Yes, sir.
Now let's come to the scenario called insolvency of the bill. Sorry, insolvency of Sita. What do you mean by insolvency? She became bankrupt. Whenever they become bankrupt, what happens is court will sell their assets. From the assets, whatever is there, it will distribute to all our lenders. It will distribute to what? So court will say, for every 1 rupee you will get 20 paise. That means if you have given her 10,000, how much you will get?
20.
For every 1 rupee you will get 20 paise. That means if you have given her 10,000 bill, how much will you get? This also you are taking so much time. 2,000 rupees.
You have to calculate.
What you have to calculate? 2,000 rupees. 1 rupee 20 paise you will get. For 10,000 rupees you will have to get 20 by 100, which is 2,000 rupees. For that, what calculator you will use? Right? So now what happens here? When she becomes insolvent, now the journal entry, what will happen is whatever money you are supposed to be getting in this 10 you got for every 1 rupee 20 paise. That means for 10,000 you got 2. 8,000 that you don't get, it becomes bad debt. So the journal entry will become like this: bank account 2,000, bad debts 8,000, to discount 10k. This is going to be a journal entry. Are you clear?
To discount.
Sorry, to bills receivable. Till here, are you guys all fine?
Yes, sir.
Okay, the last concept which is there, which is your accommodation bill. This is the most complicated one. Till here, no problem.
Yes, sir.
So you see the question in bills of exchange, I'll tell you where students get confused is where A draws bill on B. They should know who's A and who's B. Now you understood A is Rama, B is Sita. So A, bills receivable, B will be bills payable. If you get that portion right, then you only have to see the question and say, is it honor of the bill, dishonor of the bill? Is it renewal of the bill or retirement of the bill or insolvent? Just blindly write these 3 entries, you will get 5 marks. If you get accommodation of a bill, it will become a 10 mark question. Till now whatever we have done is what? 5 marks. If you get accommodation of a bill, it will become what? 10 marks. So let's do the fourth topic of our marathon, which is got to do with our final accounts. Right, the notes are shared, and if you guys require any notes, just ping it across on the WhatsApp and we'll be happy to share you guys across. Now let's try to look into the final accounts as a topic. Now in your examination, remember this, either you will be getting an NPO question or a final accounts question, or they will mix your final accounts with rectification of error. So when we do the rectification of error, we'll try to also look into it, how do we cover it in the final accounts. Now typically when we look into it as a final accounts as a topic, what all can you expect in the paper? This is one of the most easiest question compared to even NPO. Yesterday if you see the non-profit organization, what did we do? They would have given you receipts or payments or income and expenditure. I have to make, if they have given you receipts and payments, what do you do?
Income and
expenditure. Then you will do opening balance sheet and a closing balance sheet. We know how to deal with outstanding, how to deal with prepaid, where we should show the net figure, where we should be showing the balance sheet items. Are you clear? Yes. So today when we are going to be looking at the final accounts, now in the final accounts we are going to be doing simpler thing. They would have given you one trial balance. With the help of a trial balance, I need to make 3 statements: trading account, profit and loss account, and balance sheet. So the rules that we are going to apply for doing final accounts is, remember, whatever is in the debit, whatever is in what? Debit, will always come either in the expenses or in the assets. Whatever is in the trial balance debit side, what all do we consider? Whatever is on the debit side will be your expenses or asset. Debit will be either your expenses or your asset, and whatever is on the credit will be what? Your income or a liability. This is the first thing that we are going to be making a note on. Now let us try to understand what do we mean by capital. Capital is basically what? The money contributed by the owners. Now if I have to find out a capital, there are 2-3 ways of doing a capital. First thing is basically assets minus liabilities will be the capital. Are you clear? Now let's assume this is the opening capital. That means I will have what? Opening assets minus the opening liability will give you the opening capital. Correct? Yes or no? Yes. Now if I have to find out the closing capital, can I say closing assets minus closing liability? No problem with it. If I have to go further and try to understand why is there a difference in the capital, what all can cause the difference in the capital? If I just know the opening capital and closing capital, can I find out the profit of the company is the question. If I just know the opening capital and the closing capital, can I find out the profit of the company? Yes. Now for this I am going to be using a format. The format is opening capital plus additional capital minus drawings plus profits should be equal to the closing capital. So the closing capital can also be found out by another way, which is what? You have an opening capital. For that, I will add the additional capital, reduce all the drawings, and add up any profits that is there. So, if there is no data, listen to it, if there is no data about your drawings or capital, that means the difference between the opening and closing capital will be what? Profits of the firm. Understood till here? So we learned two things. One called as an accounting equation. What does an accounting equation say? Assets plus liability. Sorry. Assets minus liability is equal to capital. Right? The second part of it, what did I say? Opening capital plus additional capital minus drawings plus profits is equal to the closing capital. Guys, all the notes are shared in the group, so just look into it. Done writing both the things? Now, once we know this as a concept, now look into it. What are we going to do? Blindly follow these steps. You will get your answer in the examination right. It might give you 10 marks, might not give you 10 marks. I don't care. But your answer will be right. What am I trying to say is, when I say your answer is right, your balance sheet will tally irrespective of whether you have done it right or wrong. How will it tally? Is the question. So we are going to be using a rule, very simple. Whatever is in the trial balance, whatever is in what?
Trial balance.
Will appear once. Remember this, whatever is in the trial balance will appear how many times?
Once.
That is, will appear either in the trading or P&L, or it will appear in the balance sheet. That is rule number 1. The second rule that we are going to be following it is, whatever is on the debit side will be my expenses or assets. Second part of it, whatever is in the credit will be part of my income or a liability. This is the second rule I am going to be applying. Again, repeat the rule. What is the rule? Whatever is appearing in the trial balance will appear once, either in the balance sheet or in the P&L account. When I say P&L, I am meaning both trading as well as in the P&L. Are you all clear?
Yes.
Third part of it, that whatever is in the debit will appear where? Expenses or assets. Whatever is in the liability will appear what?
Income or
Till here everyone's clear? Online folks? Now last part, which is where a lot of them get confused. Remember this. I know it might sound stupid and I am not doing a full-fledged class, so I am trying to give you a very simple logic to apply. Whatever is outside trial balance, in our layman term, what we call them as adjustments. Adjustments should appear twice. Adjustment should appear twice. That means here either one debit, one credit. Now in the examination, let's say you are not able to find out what it is. You are not able to find out whether it was an income, expense and other things you were getting. Don't worry anything. Let's say for an example, you gave you thought it's an expense. Then automatically write one more as liability. You thought something, you did not know what to do with that adjustment. Take one as expense, take another one as liability. Or if you think that's an asset, then take the second thing as an income. So you should enter twice, one in the income column, one in the assets column, or you should write where? One in the expense column or one in the liability. You follow that. Whenever you get confused in the final accounts, or you try 1 minute, try to understand log. But at least after doing all the accounting, your mind will at least say, I think it should be an expense. Don't break your head. Expense, liability. Your mind says it should be an asset income. If you are not clear with it, please follow this rule. Whatever I am going to be teaching as an adjustment, I will always try to connect you which is the debit, which is the credit. So while doing this method, what will happen is when you are revising on the day of exam, you don't have to go through all the questions. do one trial balance where you will put all the journal entries, everything. Then look into the adjustment and just check where is it getting affected. By doing this, you will be able to cover a lot more questions in the same thing. So you'll see the question, closing stock, example, closing stock. Can you say it's an asset? Stock is an asset. That means if it's an asset, what did I say the second thing should be?
Income.
Income. Income means which side I will write in the trading and P&L account? Credit side. So closing stock, if you remember, where do you write? Sales, closing stock. Simple logic. Depreciation, right? What is depreciation?
It is an expense.
Expense, right? Expense. Then it's a that means automatically it should be a liability. If it is not a liability, it will be a reduction in the asset. If it's not a asset, it will become a
Increase in the liability.
decrease in the liability. Madam, liability, look into it. Liability always has what balance?
Credit balance.
So increase in liability will be a credit.
Credit.
Decrease in liability will be a.
Debit.
So if I have taken something as a expense, sorry, income. Income is what? Credit.
Credit.
So I should be doing a debit.
Yes.
What are the ways to do a debit? It should be an expense, asset, or a decrease in liability.
Decrease in liability.
Did you all understand? So everything that comes in, just look into it. You will be able to, I am saying, after doing your PUC foundation class and all, you will at least be in a position to identify whether it's an asset or a liability. That much little common sense you would have got. With that, try to apply this rule. Oh, expense means I have already taken a debit. Now I should take a credit. Which all ways can I take a credit? Either it should be an increase in liability, or it should be an income, or it should be a decrease in the asset. One of these three you do. Whatever you try to do, just do it. But do only one of these three. Your balance sheet will always tally. What you will lose will be 1 mark. It is okay than losing all the marks. Understood?
Yes, sir.
Right? Now let us go one by one. What is a trading account? Why are we preparing a trading account? Online, are you guys clear with it? Can we go next? Right? Now let's try to understand what's a trading account, right? A trading account is found out to find out what is the total cost which is gone in, direct cost which has gone in for making that sale. So I am trying to match the sale with the direct cost incurred for making that sale to find out my gross profit or gross loss. I always want to sell at a gross profit. No one wants to make a loss when you are trying to sell a product, right? So I always want to achieve what? Gross profit. Now, when I come in for this, when I am talking of your gross profit, gross loss and other stuff, so the way it is going to look is like this. I will have my opening stock, my purchases, less your return outwards, which we call it as your purchase expense. Then you will have all your direct expenses. On the other side, you will have your sales, then your closing stock. If your credit is more than the debit, then we get a gross profit. If your debit is more than the credit, you get a gross loss. Done? So the rule is simple. My trading account will always have only the direct expenses. Will always have which expenses? Direct expenses. Are you guys clear? Are you all clear with it? Well, let's try to look at the second part of it. I know what are direct expenses. I got a gross profit. Now all my indirect income and indirect expenses will be part of my profit and loss account. All my indirect expenses and what? Indirect income will be part of my P&L. Now, what are your indirect expenses and income? How do we identify it? Now, we need to understand the nature of business. We need to understand what? Nature of business. For an example, let's say I am a bank. I am a bank. I am receiving interest or I am paying interest. Direct expense or indirect expense? I am a bank. Direct expense and direct income, right? Because as a bank, my job is to give money on loan, make interest out of it, collect deposits and pay. So that is my direct income or direct. Let's say you are a farmer. Getting interest, is it a direct income or an indirect income? Indirect, right? So you need to first check the nature of business and check, is it related to the business or not? If it is not related to business, everything will be part of my indirect income. Are you clear? Now, what are your indirect expenses? How do we classify something to be an indirect expense? We classify something to be an indirect expense when these are not incurred directly for the purpose of my product. This should have not been traceable to a product. I'll give you some smaller examples. When you're getting confused in the examination, use this logic. Let us say you guys have come to a hotel. I am serving you dosas. Now, in the hotel you will have rent, you will have electricity and you will have dosa expense. Now, in these three, which of it is variable and which is fixed? Dosa is variable. Why? Because every time somebody comes, only then I incur. What about electricity and rent?
That is fixed.
Irrespective of what? So, I cannot trace with my end product the cost of it. Those all will become part of my indirect expense. For an example, tell me how about the selling and marketing expense? Direct or indirect and why?
Marketing expense is indirect. Selling expense is direct.
Both are indirect. Both are indirect.
It is traceable to a product, no sir.
Selling is direct.
Selling is indirect. I'll tell you why. Now, what happens is when I'm trying to, let's say you have hired a sales manager, is part of the selling expense. Now, or advertisement. Let's take advertisement example. Dhoni came, did the ad. Can Dhoni tell, because of my ad, this many units I will definitely sell? Then how is it direct? Because you're not able to trace it to the end product directly, these are all after effects of sale. You cannot do it, and they have given a clarification also. Selling and distribution expense will always be treated as indirect expense. So your other examples of your indirect expenses are, when I look into it, your rent, salaries, too cold. Salaries, rent, your depreciation, depreciation, insurance, these are all part of your indirect expense. So when we look into it, how are we going to be looking at is very simple. I have my gross profit. My profit and loss account will start with gross profit. For this you will add indirect income, then reduce indirect expense. Finally you will end up getting the net profit. Are you clear? Now I want you guys just to look into the way I do my trial balance and do the balance sheet. Just see the logic. See the trial balance. What all will the trial balance have?
All the ledger accounts.
Let's say debit, credit. I will write direct income, direct expense, indirect income, expense, asset, liability, capital. Let's just write direct income will have what balance?
Credit balance.
Direct expense,
Debit balance.
indirect income,
Credit balance.
indirect expense,
Debit balance.
assets,
Debit balance.
liability.
Credit balance.
Okay. For namesake, we know that my trial balance debit will be equal to credit. So we'll try to give some numbers for The simplicity sake, right? Direct income 10,000. Direct expense, let's write 5,000. Indirect income 2,000. Indirect expense, let's say 1,000. How much? Assets will write 10,000. Liability will write 3,000. Capital I'll write it as 1,000. What's the total? Is it matching? Now let's assume this is what your trial balance will always have. Correct? Nothing more than this. Now, if in the trial balance, if I can identify all of this category, look into the way I can do the final accounts. First account, what will I open?
Trading account.
Right? Then I will open.
Profit and loss.
Then I will open my.
Balance sheet.
Now, direct income. Which side it should come?
Credit side.
Debit, credit. Debit, credit. Assets. Debit. Liability.
Credit.
Correct, no?
Yes, sir.
Now, trading account, direct income. How much was the amount?
10,000.
Direct expense.
5,000.
Then, wait. Then, where will I write? Next one. Just follow the same steps what I am doing. Next one.
Income.
Indirect income. 2,000.
Direct income.
Indirect expense. 1,000. Then, assets.
10,000.
Then, liability how much?
3,000.
Then,
Capital 1,000.
okay, this is what I'll do as a first step. Whatever is in the trial balance, in the examination also I'll open 3 accounts. Directly first classify all of it, giving one space for opening stock, closing stock, everything. Clear? Now I will try to balance it out. Look into the way balancing happens. What did I say? Credit side is more than debit. What do we call that as?
Gross profit.
Gross profit. How much is the gross profit?
5,000.
So the total is 10,000. 10,000. Now, whatever is the gross profit, this will come and land where? Credit side of the P&L account. Writing as what? Gross profit
5,000.
5,000. Now again, credit is more. What do you call that as? Net profit. How much is the amount?
6,000.
And wherever the net profit is, the net profit will come and get added to the capital. How much is the amount?
6,000.
So total comes to
10,000.
7. Right? Now when I do the total, 7 plus 3, how much?
10,000.
How much is this?
10,000.
Is it matching?
Yes, sir.
That's all is your final accounts.
That's all.
Wait. If you have understood this, now you tell me anything that is required. I'll tell you why it will tally. If you have understood this part of it, now whatever logic I told you, you apply to the logic, you will get the answer. Now see, let's say for an example, depreciation. Right? What did I say? Appearing outside the trial balance. It should appear twice. Now, let's say depreciation if I do. Let's say depreciation was 1,000. So what will happen to my... So I wrote depreciation as an expense 1,000. What is expense?
Like
Debit.
debit.
So I should be doing one more. Credit.
Credit.
What all options do I have to do credit? I can write it as income. Can depreciation be an expense and an income?
No.
So I can't write it as an income, gone. Can I write it as a liability?
Yes.
Chances there, provision for depreciation. So either I will write it as here, either I will write it as depreciation 1,000 or I'll reduce here 1,000. Profit will become what? 5,000. See, the net will still be the same. Understood? Either it will become 9 or 10, whichever is comfortable for you. That's all is your final accounts. If you understand this way of doing final accounts, trust me, no matter what happens, you will only lose 1 mark because you would have got only one entry wrong in the paper. In the exam, we have a sadistic pleasure. Balance sheet tally aitu guru. Balance sheet tallied. You don't care what the amount is. Tallied, you will go to the next question. If it does not tally, you will pull all your hair out. So that can be avoided by following this method. This what I have taught you now, logic, it will apply till your CA final exams. If you understand this portion of accounting, trust me, accounting is the most easiest paper of all, because every entry will have to give you 2 effect only. That will be an asset, expense, income or a liability. You are sorted. You understood all of this? Okay. Raja will anyway be doing a question. So, right? So we'll be doing today 2 chapters, that is your final accounts of manufacturing and non-manufacturing, and then a bill of exchange. Nanda Kumar. So shall we start now? So you understood the whole logic, right? How we are going to go ahead with it. So I am going to be using the same logic, whatever is in the trial balance, put it under 3, and I will focus more on adjustments. How to deal with it and other stuff. I have given you the notes that will be used only for you guys before going to exam, like what it means for other stuff, but I'll try to give you the debit and credit effect so that you know how to deal with it. Shall we start?
Yes.
Okay, see here, closing stock. That's your adjustment number 1, closing stock. Now what did I say? Easier thing, if it's already given in the trial balance, how many times it should come?
Once.
So it will come on the asset side of the balance sheet. You cannot write it in the P&L account. Remember this. If it's already appearing in the balance sheet, you will not write it in which account? P&L account. You will only write it in which side? Asset side of the balance sheet. You want to know why? Because when you have already taken in the trial balance, I don't know if you would have learnt it earlier, there is a concept called adjusted purchases. So the closing stock could have got adjusted there. So we'll do one question which we'll be doing in one of the other topics where we'll be looking into it. So look into it. If the closing stock is already appearing in the trial balance, how many times?
Once.
So please apply that rule. Don't try to write both the times because you have done in the question. So only if it is appearing outside trial balance, you will take twice. Otherwise once. Now look into it. If it's not given in the trial balance, what did I say? Twice. How do I look at twice? 1 debit, 1 credit. What is the closest for the trial balance? Sorry, closing stock. Balance sheet, asset side, which will be debit. Trading account, credit side, which will be a credit. 1 debit, 1 credit. Did you all understand?
Yes, sir.
So 2 things we are going to be taking. One on the debit side of the assets. Another one will be the credit side of the trading account. Next one. Outstanding expense. If it's appearing in the trial balance already, one side, what will you consider? Outstanding expenses. Remember this. Anything outstanding is always a liability. Anything outstanding is always what?
Liability.
So all the outstanding expenses is a personal account in the chapter 2. Any expenses which is outstanding will always be what? Liability. Any expenses which is prepaid will always be a asset. You want somewhere, write it down. So the moment it comes outstanding expense, please don't change your rule at any point of time. Your only thing you are going to be looking at it is this. Hey, trial balance, it's already there once. Given as an adjustment.
Twice.
Now they are saying outstanding expenses, if given in the trial balance, what should my mind say?
Once.
Where will I write it? Liability side. Are you? Now, if it is outside the trial balance, if it's outside the trial balance, we should have one debit.
One credit.
One credit I know is a liability. Then what will be the other side? It will be an expense. So see what we have written. On the trading and P&L account, debit side, add it to the concerned expenses. And on the balance sheet side, you will be writing it as a liability. Did you all understand?
Yes, sir.
Balance sheet asset side is debit, Anna. I have written it here. Raj, please, if you are watching it, watch it from the beginning. I have clearly told what it is. Nandakumar, please learn how to read your accounting. On the trading account, I am writing it on the credit side, right, called buy balance or buy closing stock. So it's a credit, not a debit. Done? Now what did I say? Prepaid expenses. Prepaid expenses will be what? Asset side. When will you take it as an asset side? If it's already appearing in the trial balance. If it is not appearing,
Twice.
it has to come twice. I know one side. Prepaid expense is what? Asset. Assets have a. Now I should be writing it as a. Now what all credit can be written? You can write prepaid income, what all credit can be written. So, what do you mean by prepaid? You have paid before. So, whatever expenses have incurred, yesterday if you remember it, what we did? What we did with outstanding expense yesterday? In NPO, outstanding of the current year, you add it. Outstanding of the previous year, you subtract it. Prepaid of the previous year, you add it. Prepaid of the next year,
You have to subtract.
you'll be subtracting it. If you are subtracting one expense, if expense is a debit balance, reducing it from the expense will be what?
Expense is a
Expense is a debit balance. If expenses are increasing, we say expenses are further debited.
Yeah.
If expense is reducing, then what do we call that as? It has to be credited. Prepaid expenses will reduce an expense. From the total money paid, you are going to be reducing it. Therefore, you will credit a expenses will be credited. So, the moment when you say expenses is credited, that means we are talking of understood?
Yes, sir.
Income outstanding. If salary outstanding is if expense outstanding is a liability, what will be an income outstanding?
Asset.
Income outstanding will become a asset. So income outstanding means you will have an asset, that means you have debited it. What will you credit it as? Income, no? Madam, you are only telling income outstanding is an asset. If it is an asset, that means I know it is having a debit balance. Now once I've done a debit, I have to do credit. Which are the three options of doing a credit? Income, liability, or decrease in the asset. Which one is better? Income outstanding means income I have earned but not taken into account. That means it is what? A income I have earned which I have not taken, so you will be adding it to the income, then you will be taking it on the asset side. Same thing with income received in advance, reverse of it. Correct. If income outstanding is an asset, income prepaid will be a liability. If income prepaid is a liability, that means it's a credit. Now I should be doing a debit. How do you do a debit? What did you do with a prepaid expense?
Prepaid expense we debited.
You debited. Prepaid expense, you showed it as an asset. Second part of it, you reduced it from the expense. Same thing here. Prepaid liability, prepaid income will be shown as a liability. Then whatever prepaid is, it will be reduced it as a from your income account. This is the most frequently asked question. Bad debts and provision for bad debts. We'll see that a little later. Depreciation, loss by fire. So all of this you guys go through it. I'll do a question first and then we'll try to look into it. Okay, guys, let's start. Shall we start?
Yes, sir.
Now they've given you a balance sheet of S Limited as on 1st April 2021. So what does this mean?
Opening balance sheet.
This is my opening balance sheet. Now you have trade payables, expense payable and capital. You have furnitures, fixtures, blah blah blah. Then they are saying additional information. Commission paid to the selling agent 65,000. Commission paid to selling agent 65,000. How do you deal with it?
Indirect expense.
Now,
Profit and loss account.
correct. So now what I am going to be looking into it is, I will check what are the, I know this is an expense, so I'll try to look into it. Discount received from creditors.
Income.
Discount received from creditors. What is discount received from? Who's a creditor?
A person
The person to whom we have to pay money, right? The person to whom I have to pay money, I am saying that guy, right? That guy is saying that don't give me some money. He is giving me a discount. So let's say I have to pay you 10,000. You are saying, Arjun, give me 9,000. 1,000 is enough. You only keep it. What is this 1,000 for you?
discount received.
Received, right? That's a profit for you, right? That means this is part of my.
Income.
Okay. Purchased vehicle on 31st March 2022.
This purchase of an asset.
Purchase of a depreciation on furniture and fixtures at 10%.
Profit and loss account and balance sheet.
So this will be a depreciation is an expense and this will reduce my
Asset.
then a provision for doubtful debts at 3% of trade receivables on 31st March. While preparing the P&L account, he had forgotten to provide prepaid expense of 15, outstanding commission of 35. And they have given you the assets and liabilities on 31st March 2022, 65,000, 1 lakh, 13 lakh before provision, 5 lakh, blah blah blah. He introduced a further capital of 3 lakh into the business. You are required to prepare a balance sheet. So, too many information given. We'll try to just make it simpler. Whatever we have learned till now, right? First thing that I know is, if I have to find out the profit, I know the difference between the opening and closing capital is the profit, right? So we'll try to see what all can I find out from the particular question. Whenever you are getting confused with it, just start off doing something in the question. What can I start off with this? In this question, if I practically look, I can actually do the closing balance sheet to start off with. Why? Because I have data of inventory, I have data of trade receivables, I have data of cash at bank, I have data of trade payables, I have opening capital, and this assets what I have, I know the depreciation to be charged. Then we have to figure out this one. We'll try to do what it is, but at least I know what all I can find out without anything. So first thing, let us try to just, without, wherever the figures are there as it is without any adjustment, we'll write it as it is now. Are you clear how to start in the exam?
Yes.
So now see here. Let's go one by one. What all information they have? Inventories will come on which side?
Inventories, assets.
Assets. Trade receivables.
Assets.
Assets. They are saying
But we
before
have
provision. How much provision they want you to make?
3%.
3%. How much will be 3% of it? How much is it? 39,000. What about cash at bank? Asset. Trade payables? Liability. So can I write, see here, all the four that I found out now. Cash at bank, trade receivables minus 39. Then what was there? Inventory was there. Then you had a trade. These four I found out. Okay. So this is done. I'm not going to be touching it. They are saying, while preparing P&L account, he had forgotten to provide 15 and 35.
Prepaid expenses.
What is prepaid expense?
Asset.
Asset. What is outstanding commission?
Liability.
Liability, no? So I will write again, outstanding commission, liability, prepaid expense. Till here no problem.
Yes, sir.
This also is done. Now I don't know the profit value, but I know one thing, my opening capital plus additional capital plus
net profit.
profits minus drawings is equal to closing capital. Correct? Now I know the opening capital.
Yes, sir.
I know what is introduced during the year.
Yes,
I don't know this. Correct?
yes, sir.
Yes or no? Now let's go and try to do one by one working note. This though anyway was not a problem. Trade receivables, because we already did it. 13 lakh was there. In that 13 lakh, 3% is the provision. I will take that up and I am done with it. Now let's come to vehicle account. Let's try to look into it. What is there? Opening balance of vehicle 2,75,000. See the question. Opening balance of vehicle is how much?
2 lakhs.
2 lakhs. When did they purchase this 50,000? See the question. When did they purchase? They have purchased it on
31st March.
31st March. That means, can I say on this 50,000 there will not be any depreciation? So out of the total assets here, I have a vehicle of 2,75,000. For this I will add 50,000. That comes to 3,25,000. But depreciation will be charged only on
2,75,000.
what percentage?
20%.
What is 20% of 2,75,000?
55,000.
This is how I got my depreciation. Are you all clear?
Sir, how can I
Question they have given. In the adjustment they have given, see here. Furniture should be depreciated by here. Right, so 20%. So now I get the balancing figure of vehicle after charging depreciation as 2,70,000. Where will the closing balance of depreciation come? Vehicle come? On the asset side. Then you have furniture. Furniture, what is the depreciation rate they have told? So you have 6,50,000. On that 10% will be 65,000. Therefore, the closing balance will be 5,85,000. So see here, I wrote all the values. So if I write all the values, can I say the balancing figure will be the closing capital? Yes or no? Now, I already know, see here, in this part of it, I know the opening capital 22 lakhs. How do I know opening capital 22 lakhs? They have already given in the question. Then, do you know the details of additional capital? Read it. During the year, he introduced a further capital of 3 lakhs into the business. That means 22 I have, I will add up 3 lakh. Once you add up 3 lakh, how much it will be? But what is the closing balance telling me? 31 lakh 50. Therefore, automatically the balancing figure will be net profit 6 lakh 50. Are you clear?
Yes, sir.
Now, I have a net profit of 6 lakh 50. They said this, they did not take, this was my closing net profit that they told. But this was come in after, or let's say before, they did two adjustments. Which two adjustments if you look into it? Prepaid expenses and the commission, right? That means before all of this, if you do the balancing figure, that would have been your adjustment. 6 lakh 85 minus 50, 6 lakh 70,000 would be your net profit. There's a mistake in the working note, so just take this down. You understood how to do this? This is a 8-mark question. So basically they'll give you everything. So you use the opening and then try to find the balancing figure. That's going to be your net profit. Are you all clear?
Yes, sir. If they were not given this, then this would not come. If these two adjustments were not given, if it was like before the time of, then this won't come.
Which one?
These two adjustments.
That wouldn't have come. You have the study mat, no? The new one. New study material you have or the old one? Guys, clear till here? Okay, this is one kind of question that you will get. Basically, they'll give you opening balance sheet, then they'll give you all the data which you'll have to figure out. See the next question. So they have given you the entire data and they have not told you debit or credit, but they want you to prepare a trading account, P&L account, balance sheet as on 31st March with the necessary adjustment. Now we will try to find out and classify one by one where does each of the topics belong to. Ganguly's capital as on 1/4/2021. What is this? This is my stock on 1/4/2021. Opening stock, sales, trading account, sales return, trading account, purchases, trading, purchase return, carriage inwards, rent,
Profit and loss.
salaries,
Profit and loss.
debtors,
Assets.
creditors,
Liabilities.
loan,
Liabilities.
interest paid,
Profit and loss.
sorry, P&L, printing and stationery,
P&L.
advertisement,
P&L.
interest received,
P&L.
cash with traders,
Asset.
discount received,
P&L.
investments,
Asset.
furniture,
Asset.
discount allowed,
P&L.
general expense,
P&L.
audit fees,
P&L.
fire insurance,
P&L.
traveling expense,
P&L. Assets. Assets. Drawing. Liability.
till here are you done? Now wherever they have given you percentages, it can be either loan, investments, or it can be your deposits. All that means that you have to record interest for it. You have to check in the question, have they given you any interest, or you will have to calculate the interest for it. Now there are three things, look into it. One is what? Loan from Dena Bank, 1 lakh, 12%. That means what will be the interest amount? 1 lakh into 12%, that will be 12,000. So I have to check whether anywhere 12% interest is given or not. We need to check in the adjustments. Are you clear? So wherever any interest amount is given, we need to check on it. Which was the second one where the interest was given?
Investments.
How many interest? The third one is what?
Deposits at 10%.
So I have to check whether the three interests are given or not. Otherwise, I'll have to make an entry for it. Are you clear? Let's go one by one. The value of the stock on 31st March is 3,93,000. This includes goods returned by the customer on 31st March to the value 15,000, for which no entry has been passed in the books. So there are two things here. One is your closing stock, right? Where will closing stock come in?
Closing stock will come in trading account and
Trading account and the balance sheet. What is the value of this? What is the significance of this? I know this includes. What does this include?
it includes the sales return. So we have to, from 3,93,000, we have to deduct 15,000 and we have to put in sales.
So basically, read the English. Value of stock as on 31st March 2022 is 3,93,000. This includes, that means it's already added in your closing stock. This includes goods returned by the customer to the value which no entry is passed in the books is. That means you did not pass a sales return entry. So sales return account reduce 15, debtors reduce 15. Debtors is a debit balance. You will have now, if sales return has happened, that means what, he will not pay you money. So you will be reducing your debtors by 15,000. That's your debit. Now credit I have to do. Sorry, I reduced it from the debtors. That means it's a credit. Now I have to do a debit. Sales return is what? Sales return is a debit balance. So one debit and reduce it from the debtors. So we'll see the entry. Did you understand what is the adjustment?
Yes, sir.
Furniture includes furniture purchased on 1st January for 10,000. Depreciation should be charged at 10% per annum. What does this mean? Your total furniture amount. Where is the total of furniture amount? See the question. Furniture.
This side, sir.
Which side, madam?
Furniture as on 1/4/2021.
Okay. Right? Now they are telling you that the furniture of how much is added? 10,000. But when did they add?
1st January.
That means your depreciation on furniture will be calculated on two things. For 9,000, you will calculate at 10%.
Per annum.
For 10,000, you will
calculate
calculate at 10% for 3 months. Are you clear?
Yes, sir.
Are you guys clear with this? Then see here, the loan account from Dena Bank in the books of Ganguly appears as follows. You add 1 lakh. On 31st March, April was 50,000. Then end of the year is 50,000. What is the significance of this information? No. Read. Loan from Dena Bank. You are supposed to be paying an interest of what? 12%, correct? But will you pay interest on 50,000 or on 1 lakh? Wrong. See the date. See the date. Date is 31st March 2022. Boss, for one day and all, do you pay interest? Do you pay interest only on what? 50,000. Understood? Significance of dates. Then next one. Debtors include 20,000 due from Robert and creditors include 10,000 due to him. So what they are telling is, I have to give you 20, you have to give me 10. So finally how much you have to give me? 10. So basically when this we call it as mutual transaction. Whenever it is like this, whichever is the lowest amount, reduce it from both debtors and creditors. Okay, so that you will only show the net value. I have to pay you 20, you have to pay me 10. In the end of the year, I will only show it as what? You pay me 10,000. Understood?
Yes, sir.
Next one, interest paid 3,000. Interest paid include 3,000 paid to Dena Bank. How much is the interest I have to pay to Dena Bank? Look into it. 50,000 ka 12% will be how much? How much? 6,000. How much have they paid? That means what will happen to 3,000? Outstanding, no? You have to pay on 50,000, 12% interest. That will come to how much? Raj, how 3/12? Raj, he has taken loan sorry, he has purchased the asset. Read the question carefully, right? He has purchased the asset on 1st January. So January, February, March is 3 months only, no sir? Guys, are you done? Now last one. Provide interest payable to Dena Bank and interest receivable on investments. Make provision for doubtful debts of 5% on the debtors. So, did you understand all the adjustments? Right? Now, just once go through all the adjustments. I'll give you, go through the entire question. I'll give you 5 minutes. Then I'll run you through the solution. So, just take 5 minutes and run through the entire question. Okay, guys, done seeing the question, right? Now let's try to look into it one by one. Now, how do you do a provision? And I want you guys to understand something, how a provision will be done, because lot of questions have come in the provision and students do mistake in the exam. So let's try to understand how a provision works. Let us say I have a debtors opening balance 50,000. Debtors opening balance is how much? And let's assume the company maintains provision of 5%. Company maintains provision of what? 5%. How much is 5% of 50,000? How much is all calculator people? 2,500. Now, let's assume the closing debtors is 1 lakh. Closing debtors is how much? So how much provision you should have? 5% of 1 lakh will be how much? 5,000. Now already you had a provision of how much? 2,000. So what will be the extra provision that you will create? So extra provision that you will be creating in the year will be 2,500. So provision will be created from P&L account. So the journal entry will be P&L to provision 2,500. Are you clear? Copy this down. I'll teach you guys all the 3 varieties of provision. So one of it will definitely come in the exam. So you can just leverage onto it. Prajwal, I'll be doing the new syllabus thing. So just wait. Guys, done writing? Okay, now let's see the other way around. Let us assume debtors opening balance is 5. What is the provision I will maintain? Sorry, 50,000, 2,000. How much is the closing debtors? 1 lakh. Now let's assume that bad debts see here, bad debts is appearing in trial balance. Bad debts is appearing in the trial balance. Let's say bad debts was 3,000. Bad debts was what? 3,000. Now whenever provision exists, remember this, the way it works. You have why are you creating a provision? You are creating a provision for the purpose of bad debts. Now I have a provision of 2,500. Bad debts was how much? 3,000. That means whatever provision I had, everything got utilized. I still require how much more? 500 more. Keep that in mind. Keep it separate. Year end, how much is my debtors balance?
1 lakh.
How much provision I should have? 5,000. Is there any provision left?
No,
Is
it's
there
not left.
is there any provision left? The answer is no. Correct. So I have to create a new provision for 5,000. Plus in the previous one I was shortage of what?
500.
500. So I have to be creating now a provision for 5,500. You understood the logic. So whenever you have a opening provision, you will set off the bad debts with that provision. So you will check, oh, bad debts was 3, provision was only what? 2,500 loss, Guru. Who will transfer? End of the year I will transfer. This year you tell me how much you want. You will say last year I kept 2,500, this year give me 5. So okay, finally I will give you how much? 5,500. Understood?
Yes, sir.
So closing provisions here. Closing provision will still be how much? 5,000. But what will get transferred from P&L account? P&L to provision will be 5,500. Understood?
Yes, sir.
Now you want to write this down? Guys, did you understand this?
Yes, sir.
Guys, understood?
Yes, sir.
Okay, now this is where a lot of students get confused with, where bad debts is not appearing in the trial balance. Bad debts is not appearing in what?
Trial balance.
Now if bad debts is not appearing in the trial balance, see now let's say your opening debtors was 50,000. Closing debtors was 1 lakh. How much is the provision you have to create? 2,500. How much was the bad debts amount? 3,000. And I told you it is not appearing in the
Balance.
trial balance.
Trial balance.
Not appearing in the
Trial.
trial balance. Now see how we do it. Now I will be writing entry like this. Bad debts is a loss. So see here, bad debts to debtors. Because it's not appearing in the trial balance, bad debts to debtors. How much is the amount?
3,000.
3,000. 3,000. Then I will write it as provision to bad debt. 3,000. 3,000. Okay. Now once I do this entry, my closing debtors will not be 1 lakh anymore. It will become 97,000. When it is appearing outside the trial balance, what I will do logically is I have to reduce it from the closing debtors. Understood? Now how much should be the closing provision?
97 into 5%.
97 into 5%, that will be how much? 4,750. 4,850. 4,850, no? 48? $4,850. So what will be your journal entry? P&L to provision 4,850. 4,850. This is for the new provision. In the old provision, did you have anything? You are short of how much? 500. That 500 also you will add it. 5350. Did you understand this? This is what is asked in a lot of examination question again and again. Logic is simple. Remember this. Whenever there is a bad debt within trial balance, I will only have to check for the difference amount. But if it is appearing outside the trial balance, what I will do, I will reduce it from the debtors. Once I reduce it from the debtors, I will find out the provision. Then whatever the difference amount is, I will have to look at it. But if it's already appearing in the trial balance, that means they've already done the reduction from the debtors. So you don't have to do anything. Understood?
Yes, sir.
Pakka?
Yes, sir.
Because this will come, that's where I'm asking again and again.
So basically you are deducting from debtors and you are adding it in the provision.
So in the previous one, I did not reduce it from the debtors. On the same 1 lakh, I found out the provision. In this case, if it is appearing outside the trial balance, I will reduce it from the debtors, and on the reduced balance, I'll find the provision. That's the difference.
That's not it.
Okay, shall we start this question? This is like a full-fledged question, so I'm just doing the entire thing so that. Okay, I'll go one by one to the working note. Everyone just look into it. They have given you a debtors of 1,20,000, which was already given in the question. Come to the debtors account in the working notes one. They have already, you have a debtors opening balance of 1,10,000. They told one thing, that there was a sales return. Sales return, I told you what is the adjustments for sales return. One, reduce it from the sales. Second, reduce it from the debtors. Reducing it from the sales is a debit balance. Reducing it from the debtors is a credit balance, right? So I reduce the sales return. Then if you remember, there was one mutual debtor and a creditor.
Yes.
How much was that?
10,000.
10,000. So I will reduce that 10,000. That 10,000. Whatever now the balance is left, 95,000. On that, since there is nothing, I will be creating a provision of 5%. Are you clear? Since there is no opening provision, closing provision, nothing to be looked at. Now next one, look into it. This I already explained. Dena Bank. I will be paying interest on which amount? On 50,000. I will be paying an interest on how much? 50,000. On 50,000, if I am paying an interest, that will come to how much? 6,000. On 6, already they have paid an interest of how much? 3,000. Therefore, the remaining 3,000 will become outstanding. How do you treat outstanding?
Liability.
One is a liability, another one is added to the expenses. Are you clear? Now, third working note, for the interest on deposit. Now, look into it. What did I say? You have an investments, right? On investments, you have to give an interest of 5%. Then on the deposit, you have to give an interest of how much? 10%. Now, already interest on investments, they have given you in the adjustment as 6250. That means what will happen? The balance interest will be outstanding interest to be received. Whenever there is an interest portion, I told you guys very specifically, I have to calculate the interest and check whether everything is paid or not. If anything is pending, I have to charge an outstanding or a prepaid. Are you clear till here? Guys, are you clear till here?
Yes.
Once this is done, you are pretty much sorted with regards to your final accounts. Are you clear how to do it?
Yes, sir.
So I'll just do the new syllabus one topic which has come in. Just look into this illustration number 9. Okay, everyone just see this question. I'll just run through it. Typically your exam question will be on this format with 1 or 2 entries. Just look into this. What is the first step I told you that we are going to be doing? First, identify whether it's going to come in the trading P&L and other. Capital account, where it will come?
Balance sheet.
Balance sheet.
Inventories.
Balance.
This is which inventory?
Opening.
Opening. Opening comes in the trading. Opening comes in the trading. Closing, I have to check whether it is there. If it is there, it will come only in the balance sheet. If it is outside the trial balance, then it will come in the trading and balance sheet. Cash in hand,
Balance sheet.
asset, machinery,
Asset.
purchases, trading, wages, trading, salary, P&L, 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 trading, trade receivables, balance sheet, trade payables, closing inventory 2,70,000. Outside trial balance should be appearing twice. Which are the two places it will appear?
Trading account and balance sheet.
One side in the trading account.
One side of the balance sheet.
So see here, once here and one more in the balance sheet.
We have to pass that journal entries.
No, they won't ask you in the journal entries. Okay, see this question again. Next one. Capital account,
Balance sheet.
Balance sheet.
land and building,
Balance sheet.
loan.
Balance
Balance
sheet.
sheet.
I told you the moment interest is there,
You have to pass it.
I have to check whether the interest account is passed or not. Otherwise, I have to write an assumption and pass the entry. Just do this mechanically. Don't ever break your head on what is.
Interest account like this only will be, sir. They only will. This loan account.
No, not every question they'll give, man. So you have to just check.
That's what if they give it will
They will only say interest paid this much. That's all. Then you will have to do the calculation. Then loan from D and Co. Liability, receivables, asset, cash in hand,
Assets.
asset, inventories in trade,
Balance sheet.
asset, inventories in trade. Now I have to check whether it is opening or closing. Remember this, right? So I'll just check the adjustment. There is no adjustment on the closing stock. That means this inventories in trade will only appear how many times? Once in the balance sheet. Trading account will not have anything.
Net profit there.
Furniture, trade payables,
Balance sheet.
advance to suppliers,
Balance sheet.
net profit,
Balance sheet.
capital, balance sheet.
We should not find P&L.
Nothing, they have given you net profit. No?
Only balance sheet.
So now, I think this was the question we did right now, no? No. Okay, see this. They have given you the opening balance sheet. They want you to make the closing balance sheet and P&L. Rent received from the property let out. Then you have a plant and depreciation, we have done it. Provision, how to do it, we have done it. While preparing the profit, I think we have covered all of this question. Very similar. So you can just try out doing this question by yourself.
from net profits you have to minus the two adjustments.
Correct. Okay, this is the question which was there. So just a recap of what is the new thing in your syllabus. You need to understand a GST. We have done it for you guys, no? So the revision guys will do. So you guys help me out what we have done, right? So what happens is there is a concept of GST. GST has two things,
CGST.
or let's say three things, which is CGST,
SGST.
SGST,
IGST.
Now, how does this work? We'll try to understand in a manner. Now, whenever goods are purchased or sold, service is given or taken. In these cases, there is going to be a component of GST which will be applicable. This is the first thing. Are you clear, Prajwal? Now comes the second part of it. Now, a GST can be provided between, let's say, Karnataka to people in Karnataka only, or goods can be purchased and sold from people of Karnataka to outside Karnataka, let's say Tamil Nadu. Whenever goods are sold within the state, Then you will have CGST and SGST. Whenever goods are sold for what? People within the state, it will be what?
CGST and SGST.
But whenever it is sold outside the country, outside the state or purchased outside the state, then it will be. What do you mean by IGST? What do you mean by CGST? What do you mean by SGST?
State, central, and
State, central, and
interstate, intrastate.
till.
Interstate.
Who cares, sir? You anyway have done. Why bother, right? Now, when will an IGST come into picture? Is like I told you, it's going to be whenever there is a case of a interstate purchases or sales, right? Now, what you are supposed to be understanding in this particular question is, see here, let's say I have purchased goods of 10,000. I have purchased goods of 10,000. I'll take first example of CGST. I have purchased goods of 10,000. Whenever goods are purchased, you would have paid a tax on it. You would have paid a tax on it. Let's say the tax percentage was 18%. So how much have you paid totally when you purchased the goods? 10,000 plus 18%, which is what? So your total purchase price, what you have paid is how much? 11,800. Are you clear? Any doubt in this? So whenever you have purchased the goods, you have paid a tax on it. Now this tax what you pay, right? If it is eligible for credit, if it is what? Eligible for credit, we call that as input tax credit. Okay. Now I want you just to understand how the whole GST works first, and then we'll try to now go little more deeper with it. This is, let's say, Ram. He purchased goods of 10,000 from Arjun. So Ram paid how much to Arjun? 11,800. Ram took these goods from Arjun, sold it to Sita for, let's say, 20,000. So Sita would have paid tax of how much to Ram? 18%, which comes to you understood? We'll put Ram to make it understand. Till here, no problem. How much Ram has paid to Arjun? 11,800. How much Sita has paid to Ram? 23,600. This portion, are you all clear? Now, what Mr. Arjun will do is that whatever I have paid or whatever 1,800 I have received as tax, I will go and give it to the government 1,800, and I will keep in my pocket 10,000. Now what Ram will do out of this 23,600 what he has received, how much he will keep? 20,000. And how much he will remit to the government? Are you all clear till here?
Yes, sir.
Now, how does GST component work and what is this input credit? Now, Ram should pay how much to the government?
1,000.
Ram.
Ram 3,600.
3,600, right? So Ram will say, I've already paid 1,800 to you indirectly through Mr. Arjun. I have paid you already how much? Because Arjun is also paying to whom? Government only. Ram will pay 3,600 again to the. So Ram is saying, you know what? Out of those 3,600, I have indirectly paid you 1,800. I'll pay you only the balancing figure of how much? 1,800. So the tax that he has paid earlier, if he can claim against the tax paid, we call that as input credit. Did you all understand? Prajwal, Raj, Robin. Guys, are you clear? Right? Now, if this input credit is not available, then Ram should be paying how much?
3,600.
To the government. This is the concept. Now comes the second part of it. Now, how much did Ram pay to Arjun? 1,000. In this 1,800, our Prime Minister says, give me 50%. Our Chief Minister takes 50%. The one Prime Minister takes is called as CGST. The one our Chief Minister takes is called as. So out of and this will happen only when what? When the tax is or when the goods are sold within the state. Done. Now if this is sold outside, then you get integrated goods and service tax, right? Here there is no breakup. Entire 1,800 will be treated as IGST, which will go to the central government.
That time also we got
But full amount.
Understood? Right? Did you all understand till here? So now what they would give you in the new syllabus is, wherever goods are purchased, they will also give you the. So what you will do, like this, I'll tell you, see the question. Let's say let's say I'm doing the journal entry in the books of Ram. Goods purchased 10,000. Right? So what will be the goods purchase value for me? 10,000 plus GST, which is. So I'll write an entry like this. What's the goods purchased from Arjun journal entry in the books of Ram? Purchases account debit 11,800.
So you have to input CGST account.
Thank you. Purchases account 10,000.
Input CGST.
Input CGST 900. Input SGST 900 to Arjun 11,800. So everyone pay me 11,800 tomorrow. Done? Now let's say goods sold to Sita. What will be the journal entry? Just the reverse of it. Sita account debit
To sales account.
23 600 to sales
20,000.
20,000 to output CGST 1800 to output SGST. Are you clear? Now once this is done, end of the month, whatever this output is, I have to transfer it to our government. So the journal entry will be here. Output CGST 1800, output SGST 2. You will check, do you have any input credit? Before you pay, what are you gonna check? If this 2 is available, then I will write to input CGST 900 to input SGST 900 to bank 1800. Understood?
Yes, sir.
This is the logic that we are going to be doing across. So whenever there is an input and output, we have to classify and then just pay the amount. So now let's just try to see the question. See this guys, are you all clear? Can we do that illustration 9 and 10? Okay, one more thing that you have to understand. Input CGST is called as input GST is an asset, output GST is a liability. Remember this. Input GST is what? Asset, and output GST is what? Now first thing, tell me where all it will come. Capital.
Balance sheet.
Yeah, capital, balance sheet, purchase account, trading, sales, trading, opening inventory, trading, trade receivable,
Balance sheet.
trade payable,
Balance sheet.
14% loan,
Balance sheet.
loan taken at year end,
No interest.
no interest, super. Overdrafts taken at the year end,
No interest.
no interest, but overdraft will go to the liability. Whenever you get confused, don't break your head. Just check, is it debit or credit? Just to check whether it's debit or credit. Credit means it should only be two things: liability or income, whichever you find it relevant, put it across. Don't waste your time thinking and all. There are lots of better things to think than wondering, oh, what's it a liability and all, right? Salaries,
P&L.
P&L, advertisement,
P&L.
returns, expenses,
P&L.
returns on the debit side.
Trading account.
Trading accounts.
So it's a sales return.
Sales return.
Returns on the debit side will always be the sales return. Returns on the credit side will be the
Purchase of return.
purchase return. Then you have furniture,
Asset.
building,
Asset.
cash in hand.
Asset.
Now you have input CGST, output IGST. Now I told you how do you treat your input CGST. Now see here, how much is your output tax which is there? Output is there 15. How much input is there? So now you have to pay 15. I told you whatever is output you have to pay to the government. You have how much output?
50.
You have input how much?
80.
Now will you pay money to the government or will you ask government the money?
We'll ask
Government the money. So how much you will ask?
3,000.
That will be your asset or liability.
Asset.
That's all. So
You can
this
ask, sir.
you get a refund. In yeah, you get salary also, you will get refund and all.
Pay 15,000 and give that 3,000.
Madam, no. where you have already paid to madam 18,000 when you purchased. I have paid you 15. So you don't have to pay this 15 to the government. Rather you will say, boss, you only give me 3,000 more because I paid 18. Understood? So see here, everything else, closing inventory, where it will come? Trading and asset. Depreciation of furniture, reduce the value of the asset, show it as a expenses. Now see here, adjustment number 1, closing inventory. Yes, closing inventory, trading account 1,80,000 and in the balance sheet 1,80,000. Adjustment number 1. Depreciation, what did I say? 35,000 and your reduce it from the value of the asset. Now see here, bad debts. Where is bad debts appearing? See here, bad debts is appearing in the trial balance. If it's already appearing in the trial balance, you should only come once. Where it will come? Expenses. So don't touch your balance sheet or other stuff. It will only come once under what? Expenses. Now see here, see the calculation. Sorry, which question are we doing? No. Yeah, see here. $3,000 will come on.
Only 20.
Only 20. Now look into the way calculate. Huh? So see here, you have 6,000, right? So finally how much tax you will pay? Only 2,000 rupees. So when you pay tax, what will be the journal entry? When you pay tax, what will be the journal entry? We did that journal entry, right? Input, output, input to bank. So you will be paying 2,000 to the bank, through the bank. Are you clear? That's all is this whole CGST, IGST drama. Did you all understand? Raj, Prajwal, John. If you, so see here, there are two ways to do this 2,000. Option number 1, you reduce it from the bank or you show it as the liability. One of this you can show it. Is it easy?
Yes, sir.
So do illustration number 11 when you're back home. Illustration number 12. Guys, today when you go back, do illustration number 12. Okay, everyone just see this provision ka part, you'll understand it. Depreciation 57,500, bad debts written off 21, increase in provision for doubtful debts 18, retained profit for the year. Which of the items 1, 2, 5, 6 above? A, transfer to provision, transfer to reserves, neither related to provisions or reserves, right? Depreciation, where it will go? Depreciation is a provision, it's a provision. Bad debts written off is actually neither a provision nor a reserve, it is actually a expense. Bad debts is a loss. When you increase the provision, what did we do? We create the provisions for it. Retained profit for the year means it's a reserve. Retained profit, liability for taxes, that's a provision again. Yeah, so do that illustration number 11. I hope you understood the provision, how do we do that provision entry, right? Do the illustration number 11, and if you have any doubt, let me know. So the last part which is there in the final accounts, which is going to be asked once a while. I have also given some 2-3 questions for you guys for practice that you can use it later. I'll send you guys. This notes looks very odd. I didn't check on my iPad. On the laptop it was looking so good.
It's too small, so we can't even see what is it.
Yeah, I'll send you the soft copy, you guys. No, when I open it on the laptop, it looks proper. Even on my iPad, it's not looking good. Generally, don't like to teach when it's small. Okay, now what's the difference between the final accounts, right? There are two methods of doing final accounts. One is for manufacturing entity, another one is for the trading entity. Whatever we have done right now is for the trading companies, that is involved in buying and selling the goods. Now when we are looking at manufacturing entities, right, the manufacturing entities, now what happens, we are going to be adding one more account called as manufacturing account, where I am trying to find out what is the raw material consumed. What is the raw material? Now, how do you find a raw material consumed? Look into it. Now, trading account, P&L account, there will not be any change except purchases plus purchases minus closing stock. Opening stock plus purchases minus the. Are you clear? Now see here, we are going to be learning one more concept for your MCQ question called as prime cost. What do you mean by prime cost? Prime cost is the sum total of material, labor and other expenses. That is direct material, direct labor, direct other expenses put together. We call it as what? Prime cost. Are you clear? Now if I have to try to write material, labor, overheads, other expenses, material, labor and other expenses, look into it. Material will be classified into direct material, indirect material. Labor will be classified as direct labor, indirect labor. Other expense will be classified as direct expense, indirect expense. Okay. The sum total of direct material, direct labor, direct expenses is called as
Prime cost.
prime cost. The sum total of indirect material, indirect labor and indirect expenses is called as overheads. Just copy this down. Guys, done? Okay, now look into it. Now this overheads, right, we again classify them into manufacturing. That is, these are all my indirect expense, right? We classify them as manufacturing. That is all the indirect expenses which has happened at the place of production. So all the indirect expenses which has happened in the factory and other stuff will be part of my manufacturing overheads. Selling and distribution, administration, finance cost, these are all going to be part of my P&L. Only this manufacturing overheads, I will be taking it as part of the manufacturing cost. So out of all the overheads, which overheads I will take it as part of the manufacturing cost? Only all the other three will come in the P&L. Understood? Now see here. So the manufacturing cost, look into it. Direct material consumed, not purchased. We are talking of direct material consumed. What is direct material consumed? We already learned opening stock plus purchases minus the closing stock. Then you have what? Direct manufacturing wages. Then last one, direct manufacturing. What do we call all of this as? Direct material, direct wages, direct expenses. What do we call this as?
Prime cost.
Prime cost. This prime cost I will add with the manufacturing overhead. That will be called as my total manufacturing cost. Are you clear? Once I identify this, now look into it. My trading account, so the trading account, I want you guys to just look into this part. Did we learn what is raw material consumed? Then direct wages, direct expenses. What do I call that as? Prime cost. Then factory overheads. Right. Factory overheads. Right. Now for this you will add opening WIP on the debit side for the total cost that you have incurred during the year. See, this is like your trading account only. So the format of trading account, see here, your manufacturing account, if I have to look into it, what is work in progress? Goods you have started producing last year but did not complete. This year when you are producing it, will you complete that first or will you complete new units? Complete that first. See here. So I will add 2 opening WIP. For this I will add my prime cost. I will add my factory overheads. Can I say this will be the total cost that I have spent during the year for production? In this, I will reduce closing WIP. That is by closing WIP. That means whatever is incomplete in that year, that if you remove it, won't you get finished goods? Think logically, right? Last year some half completed units were there. For that I will also, along with it, I'll produce this year. So that will be the total cost incurred. In that total cost incurred, whatever I have not completed this year, if I remove it off, that means won't I get the total cost of goods produced during this year? This will be called as by cost of production, which will go to my trading account. Which will go to which account? Trading account. Are you clear? Now one more thing that you need to understand. If there is a byproduct, remember this, write down somewhere. If there is a byproduct, what do you mean by byproduct? A byproduct means a leftover of the main product. For an example, let's say when you are trying to manufacture or extract petrol, when you are extracting petrol, how does it work? You keep extracting petrol. You would have learnt in your science 8th or 9th standard, when you boil petrol, finally there will be something left over below. That residue, you will try to sell it as tar. Correct? That tar is a byproduct of petrol, that which will have some value. So whenever you sell that, right, you will write byproduct. By byproduct you will write it. Then the balancing figure will go to the cost of production. You understood this part? So whenever you have a byproduct, you have to check does it have a selling value. If you have a selling value, take that byproduct and then transfer the balance to the cost of production account. Are you clear? See now the debit side. By byproducts, by closing WIP, balance whatever is there will go to the trading account as cost of production. Understood? This is a 4-mark question. I'm sorry, I really did not see this. I am also finding it so difficult to read. I think the guys who are using PDF, you can do this. Okay, now let us just read this entire question. I'll do this. This will cover even the final accounts and this one. So let's just see here. You have a opening stock of raw material. You have a opening stock of finished goods. Okay. Now what you need to understand is this opening stock of raw material will come in the manufacturing account, and opening stock of finished goods will come in the trading account. Trading account only deals with finished goods. Remember this. Trading account only deals with which goods? Finished goods. Raw materials purchased. Manufacturing. Land and building.
Balance sheet.
Loose tools.
Balance sheet.
Plant and machinery.
Balance sheet.
Investments.
Assets.
Cash in hand.
Assets.
Cash at bank.
Assets.
Furniture.
Assets.
Bills receivable.
Assets.
Debtors.
Assets.
Drawings.
Capital.
Reduce from the capital. Salaries.
Except.
Cash and fuel. Coal and fuel. Okay. Coal and fuel is required for the manufacturing. You need coal and fuel to convert raw material, right? Manufacturing. You require it for the purpose of producing a particular product. So it's part of my factory rent and expenses. Okay. What did I say? What do you mean by manufacturing overheads?
Prime cost.
What do you mean? I didn't say where it will come. Please remember this.
It includes direct.
Factory rent is an indirect expense. Now, where does the factory rent get incurred? Is it at the place of manufacturing?
No. Production.
Production and manufacturing both are same, amma.
Only if it is mentioned factory, then it is manufacturing. If it is only rent and
Then it would be administration. Factory rent means, see, remember logically, any indirect expense which is incurred for the production purpose will be part of my factory overheads. Without factory, where will you produce? Rodalla, right? That is required. Is factory rent direct expense or an indirect expense? It's an indirect expense. Now the moment it is indirect, I have to check 4 categories. Is it within the manufacturing or outside the manufacturing? Outside means it will come in P&L. Within the factory means it should come in. So where should it come?
Manufacturing.
Understood?
Yes, sir.
Right? General expenses,
P&L.
advertisement,
P&L.
sales return,
Trading.
bad debts,
P&L.
direct wages factory.
Manufacturing.
Thank you. Power, manufacturing, because power is required. Loose tools means asset Samanzo. Interest paid, finance charges, discount allowed, carriage inwards,
Trading.
Sales return.
carriage inwards. What is carriage inwards?
Sales return.
Wait, carriage inwards.
Carriage inwards is like the conveyance charge kind of thing. For getting goods.
So where?
Trading.
How?
No, manufacturing.
It's manufacturing, no? Boss, where did I take goods purchased? Opening stock plus purchases minus closing stock. Which did I say raw materials? If you are a manufacturing company, boss, you are only manufacturing. So what are you transferring within yourself? You are paying that carriage inwards for the purpose of buying that goods from an outsider. That's my raw material, right? Are you buying finished goods? You're not a trader. So where it will come? Manufacturing account. Please understand the logic. You guys, the problem with lot of 11th and 12th guys is because you learn without, you are so comfortable with formats. Same question will come, same.
Even teaches all this.
Who didn't teach?
My colleagues.
Sir, we didn't have this manufacturing. So before manufacturing,
You did CA foundation class, no? You did it here only, no?
Yeah.
Then,
Here they told.
but still you are acting completely like blank, no? That time there was no interest.
Manufacturing unit only, sir. Manufacturing is headache.
Headache. This is so easy.
Raw material is finished goods, work in progress.
Now understood.
Now understood. Now only I am understanding.
You're too late, otherwise I would have said okay, we'll cover it for the Jan exams. I wish actually if I would have known this is your position, I would have actually done like a little longer revision than just doing 1 hour 1 chapter. Maybe. Because it's a revision class, I can't even push beyond. But if you require a couple of topics, like I said, I'll tell you how to clear. That much I'll help you out. Other things you figure out in your life. Carriage outwards? Outwards.
P&L.
Carriage outwards is your sales, no?
Yes, sir.
Right? Commission paid?
P&L.
P&L. Then creditors, purchase returns and all, no problem. You already have a provision for.
Direct outputs.
What does this provision mean? You would have had it on the
In trial balance.
opening debtors. Remember this, on your trial balance if it is happening, it means it is part of my opening debtors. Right? Now this one we know. Stock of finished goods at the end of the year, closing stock. Right? Stock of, remember again. What are they talking of?
Finished goods.
So finished goods will come in the,
Trading paid.
no problem.
No problem.
Provision for doubtful debts to be created on 5% of the debtors. Now check here, what is the debtors amount in the question? Here,
40,000.
see here,
2,000.
is what? 40,000. On 40,000, right? 5% will be how much? 2,000. Now check how much provision they have.
2,000.
Check, do they have a bad debts?
No, sir.
Read.
Bad debts 4,000.
Read. Here, I have marked it for you guys. So what did I say? When you have a bad debt, first check your provision, how much is it? Your bad debt is 4, your provision is how much?
2,000.
How much shortage you are having?
2,000.
So I have to create new provision for how many? 2. What happened to the existing provision now? 0. So now they are telling you how much provision to maintain? 2,000. So total how much I should charge?
4,000.
Understood?
Yes, sir.
Additional 2,000 charge.
Yeah.
The old
Hey, old provision became 0. See, it is like this. Let's say for an example, we'll try to make it in terms of pocket money if you understand it. Your parents give you monthly 1,000 pocket money. Now what happened? That month you spent 1,500. How did you spend 1,500? You took something from your friend urgently. You came and told your dad, you know what? Next month you are giving me 1,000. Give me 500 more. You'll say why? You will say last month you gave me 1,000, but because of college fest and other things I spent 1,500. 500 I've taken it from the friend. You give me that extra money. So your dad will give you 1,000 or 1,500 now. That is what you are doing. So you have already kept aside 2,000, but when you went in reality, what happened? 4,000. So you are falling short of what? 2. Last month money is over. This month they want you to create provision of how much? 2,000. So total provision how much you have to create? 4,000. Did you all understand? This chapter and all, if you understand it right, it's so easy. I leave. Anyway, depreciation on building, how much? 1,000, 3,000. You know how to do depreciation, right? In the final accounts, please don't do wrong in depreciation at least. Present it properly. If you don't know depreciation, write properly in your P&L. In the assets also show properly asset. This is the closing balance in the working note. right? Accrued commission to be received. What is this accrued commission mean? To be received means outstanding commission. That commission to be received. Why are you in a hurry? It's to be received. Received means asset or a liability. Asset. So add it to the income, add it to the asset. Interest has accrued on investment of 15,000. Again income, right? Outstanding 2,000. Outstanding expense. Add it to the expense, add it to the liability. Prepaid interest 1,500. Prepaid interest 1,500. So that means reduce it from the interest, add it to the asset. Last one, you are required to prepare the manufacturing, trading, blah blah blah. Now see here. See here. Opening stock of raw material. Add purchases, reduce returns, carriage inwards, direct, power, coal fuel, rent. This is something, remember, any depreciation on machinery is considered as factory overheads. Write down somewhere.
Only if they ask manufacturing account.
When they ask you for manufacturing account. Otherwise, everything is part of P&L. Please don't make this mistake, because depreciation on plant and machinery will always be part of factory overheads. Machinery, plant and machinery, ಎಲ್ಲ ಒಂದೇ ತಾಯಿ. Are you clear?
Yes, sir.
Right? So what did I say? The total will get transferred to which account?
Trading account.
Trading account. Now I'll come to the trading account. See here. Trading account looks very simple. Opening stock of finished goods was there. For this you will add what is transferred from the manufacturing. Then whatever is the sales value minus the returns. Then the closing stock. That will be your gross profit. Then gross profit pe to you know what has to be done. All the other expenses. Finally comes your balance sheet. Done? Usually this question will take you 40-45 minutes. Should I? 10 marks. Should I do it? The answer is no. Why? Because it's not worth for 45 minutes. When I'll tell you how to, guys, I'm done with the chapter. I'm giving you some tips for your exam. Just listen to it. Should I attend the final accounts question? The answer is yes. Should I spend more than 30 minutes? The answer is no. Where students do a mistake is that they get carried away to tally the balance sheet. Boss, everything, if I follow format, see, the moment I read the question and say it is part of manufacturing, it's a trading account, it's a manufacturing account or a non-manufacturing company. That is trading or a manufacturing company, two sides. The moment you know it's a manufacturing, that means your mind should automatically go and say manufacturing, trading, P&L, balance sheet. Trading account, trading, P&L, balance sheet. You see the question, you just have to keep entering all of it simultaneously. Students do a mistake of doing one account at a time. You should not do it, rather write everything. Wherever what you do in the final accounts is first read the adjustments. When you read the adjustments, you will get to know, oh, salary outstanding is there. That means I have an adjustment there. Oh, closing stock so much. So you will know when you are copying from trial balance to these three, where all adjustments will come. There you can leave the gap, so that you can do the working note and fill it up. If you don't do that way, you will be stuck more than 1 hour for the final accounts question, and you will not be able to complete the paper. Which are the questions I should definitely do in the exam? Company accounts, most easiest, and you will be able to complete within 20-25 minutes. Partnership accounts, definitely yes, provided you are very strong with doing your accounting. BRS, right? Then you have your bills of exchange. These four, though, I have to try to do it within the time. Lot of students spend your time on your MCQ paper, if that's going to be your format, the first 30. So they give you 30 questions for 30 minutes, including true or false or MCQs, other stuff. please try to do it within maximum 40 minutes.
True or false will be like theory only, no? Like last year.
Yeah. So I think they have not taken that also. They have only given direct MCQs. So
But for inter they have given for farmers, will they give?
no. So I'm saying I don't know till the paper comes in, but as of now, that's why I'm saying make sure all the MCQs of the paper and the theory of the study material backside, you are thorough with it. You will definitely get 25 marks there. Only by doing all the study mat backside questions, you will definitely get 25 marks there. The moment you get 25 from there, boss, to pass, I need only 2 more questions. Don't stress yourself in the examination. 2 questions, whichever you think you know it properly, do that properly. Once you are done with 40, you know you have cleared it. Every questions, just go fast and attempt as many marks as possible. Don't try to tally every single thing. Let's say if I can get half the question right in every question, I'll get 4 marks than trying to get one full question right and getting 6 marks. You have to do, let's say if I am doing this question, I'll tell you how I would solve it. I'll open in one sheet, I'll draw one line like this. In another sheet, I'll draw one line like this. I'll write trading. I'll relieve half the page. I'll write P&L. Next balance sheet. I'll not try to look at anything else. Then after that, everything, one more sheet for working note. I'll open the trial balance like I did now. Capital. Go to balance sheet. Capital. Debtors. Fixed assets. Okay. Opening stock. Closing stock. Sales. Purchase. I'll write it as it is. Whatever is there, I'll complete it off. Then whatever adjustment is there, depreciation, I can get it right. I'll write depreciation. Boss, I'll get 4 marks of the paper without breaking my head.
If you don't close the accounts,
Doesn't matter. You will get marks. You'll get marks. But I'm saying make sure that if you are not able to complete everything, just do the total, leave it wherever it is and be done. But depreciation and all, write a working note so that he will give you marks only for those. Wherever it is right, classification, you should be able to get it right. I'm saying, see, at the end of the day, what is more important for you guys is to ensure that I clear my exams. After CA, you will learn over a period of time. Your concept learning should have been at the time of classes, not 1 month before exam. 1 month before exam and all, my proper logic will be, tell me what should I do to clear the exam. And whatever I'm telling you right now, if you see all the 5-6 chapters that I've done, I've only told, boss, this is the kind of questions you'll get. This is the format to approach. Now, if you understand the format and go back and try the question, you will end up getting at least 70-80% of the question right. That solves my objective. If I can get 4 questions right and all the theory, boss, who can stop you from getting 60? Problem is you guys don't read theory. Biggest problem is you don't read theory. If you read theory, there is nothing called right or wrong. What is there is only what you have to write. Either you will get 0 or I'm saying, boss, out of 30-40 marks, can't you get 20 marks there? 50% I'm asking you to score. Once you score 50, in the balance 60 marks, you have to score 1/3 of it. Easy to pass. I keep telling to students, failing is an art. Passing is easy. Getting rank is even more easier. You know why? Because to get rank, you have to study everything. I really feel bad for people who fail in that borderline. That requires severe talent. Not trying to make any... I'm saying... Because, see, imagine you have gone through everything. That one step, you have to just repeat the whole story. And how would you know that that is the only step that would not come? But if you do practically the format based on saying, see, when you go to the examination, I don't care about what she has studied. I don't care about what others have done. I only know the control of what I am writing in the paper. I go to the examination, I will just check what are the topics I really know well. See, if, let's say, did you guys find your which chapter will NPO, or let's say BRS, inventories, bills of exchange, what I'll be doing now, right? So let's say your 4-5 chapters, what you find it easy, make sure that first go and check those 4-5 questions. I know boss 2 I got it right, sorted. Check all the theory, I know I'll get 20 right. Your pressure is reduced. After that my job will be attempt all the question to push my score from 40 to 60. And you are failing because you don't know even 4 chapters properly. Not because you got everything right, wrong. Accounting paper and all, you can't even fail. You can't even fail. You require crazy talent to fail in an accounting paper. And I'm telling you, go and check results overall. Accounts, very rarely people fail. What people fail majorly is law because their English problem. For the guys who are struggling with your English, or does accounts have, okay, you don't have negative marking, that's the good part. So you have only the, I think they don't have the negative marking. So I'll just reconfirm it tomorrow with the maths and economics. You have it. For the ones where your theory papers, negative marking is not there as of now. And they have told it's going to be 30 marks of your MCQ. Then you will have 7 questions to answer of 10 marks each. 7 questions to answer of 10 marks each.
That is the practical questions.
Practical questions. In that also theory is there.
Okay.
In that 70 also again 10 marks theory is there. So you will have 60 marks to attempt. That will be, you out of 4 questions you have to answer 3. Something of that sort, or I think 14 into 5 something they have done. But you will have 1 choice question to leave. In the 70 marks. 30 though you have no choice, you have to try to attempt everything. That's the format they have conveyed to us. Because it's the first paper, we will never try to promote anything, because everyone then finally say I read because of that particular format. CS, one thing happened, they gave a format that this is how your paper will be, MCQs blah blah blah. When they went to the examination, it was 0 MCQs.
Wow. I can feel the anxiety of
0. And people were furious onto it. Professional bodies says suggestive pattern.
Suggestive.
So that's where I'm saying, as of now, if you guys want to clear, make sure you study everything behind your book, plus the study material illustration questions. That should push your score along with whatever we are doing into it. Past paper questions, every day make sure that you go through 1 or 2 papers, just run through all the questions. That should be good enough for you guys. We'll discuss about the format once they finalize. But whatever we are doing now, like I said, 5 chapters are good enough to clear it off. Okay. Good evening guys. So let's start the next topic, which is got to do with your NPO. That's the non-profit organization. Now, when we look into the NPO topic, right, one of the thing that you have to understand from the examination per se is, now either a final accounts or an NPO, one of them will come in. So final accounts or NPO, one of them will be part of your question. So we'll try to just see how to make it more easier. Now NPO, you have only one, or let's say 2 kinds of question. One is basically they'll give you receipts and payments. You will have to use that and make the income and expenditure account, balance sheet, okay, or they'll give you income and expenditure account. Using that you have to make receipts and payments account or balance sheet. These are the only 2 things that is going to be given in the question. Easier provided you understand the accounting concept of what comes in the receipts and payments account and what comes in the income and expenditure account. So first I will try to give you a complete logic of few basics of chapter 1 and chapter 2 before we start it, because this will help me even with the final accounts chapter. Now when we look into the receipts and payments account, Receipts and payments account act as a cash book for me, right? Difference is in the cash book, I maintain cash separately, bank separately. In the receipts and payments, there is no difference. Both cash and bank will be recorded in the same thing. Now, cash and bank account as a logic only records whatever is actual. Whatever money is received, whatever money is paid is what it's going to reflect. Clear? When I talk about an income and expenditure account, this works on two concepts. Concept number one is called as accrual concept. What does accrual concept say? Whatever transactions has happened during a period has to be recorded irrespective of whether the payment is made or cash is received or not, or payment is made or not. So it's the happening of the transaction which is important, not the receipts or payment, right? So that means now if I combine my accrual with matching concept, what does the matching concept say? Whatever income you have earned during the year has to be matched with the expenses for that particular year to find out the profit or losses. Two concepts. Are we clear with this? Now, I'll tell you a very simple logic. Just use this and you will be able to solve everything in the receipts and payments account chapter. It's just a format based and very easy chapter. Something which again students find it difficult. I still don't know why. So let's try to make it as simple as possible, right? Now let's say you have printing expenses. Printing expense 50,000 paid. Where will this come? Where will you get this information? In the receipts and payments account that you have paid 50. Now if no information is given printing expense, then think no. 70, right? Boss, 50 I have already paid. 20,000 is still pending. So what will be the printing expense? So accrual and matching concepts, right? Boss, what was this for the year? Record that in your income and expenditure. So in income and expenditure, what will I record? How much I'll record? 70,000, not 50. Right? Let's say they say last year outstanding was 10,000. Last year outstanding was what? 10,000. What is the printing expense for the year? What is the printing expense for the year? 60,000. No, madam. I have paid 50,000 in the year. In that 50,000, what I have paid? First, you will pay last year's outstanding, which was how much? That means what you have paid for this year is 40, and you are having how much outstanding? 20. Therefore, what will be the total printing expense for the year? 60,000. Clear? Let's say this was one category. Did you understand? So from the expenses, if I have to find out what is the expense for the year, whatever was outstanding in the previous year, I reduced it. Whatever was the outstanding in the current year, I will add it. So just look into it from the expense paid, and this is, if you understand this, we are done with the chapter. From the expense paid, we added outstanding of the current year and we reduced the outstanding of the previous year, which gave me what? Expenses for the current year. This is when I have receipts and payments and I have to arrive at my income and expenditure. Okay, now let's do the other way around. If they have given you income and expenditure, how will you arrive at what is paid during the year? You will have to do the reverse of it. How will you do the reverse of it? Add outstanding of the previous year minus outstanding of the current year. Did you all understand this? So just write this down. If you know this, we are done with the chapter. This I think you had learned it in your first PU, no?
Cancel multiplication.
This year also.
Teacher cancelled or?
No, sir.
Syllabus.
Syllabus.
Okay. This was your first chapter.
Yes.
Okay. Guys, are you all clear? Guys, if you are all clear, I'll move to the next one. Just let me know. Right? Now, what they'll give you, understand, right? You would have some information. You will have what? Some information. From this information, whatever I have, see the way I'm going to be doing it. From the basic information of the question, I will try to first make the opening balance sheet. What I will try to make? Second step, this will be done no matter what as a working note. Income and expenditure is given. If receipts and payments is given, what you will make? Income and expenditure. If income and expenditure is given, you will make the receipts and payments. Are you clear with this? Done. Once you do this, finally you will do one more thing called the closing balance sheet.
That is also working.
No, this is the final answer. So one of this will be either you will make receipts and payments or income and expenditure, then you will make the closing balance sheet. This is your answer, right? Everything else that we do will be the working note. Sometimes this everything we are going to find will be part of our working notes. So one more thing that we have to understand is, let's say for an example, expenses. We spoke about outstanding. What happens if, let's say like this, expenses paid 1 lakh, you have a prepaid expense of current year 10,000, you have a prepaid expense of the next year 5,000. How do you find the expense for the current year? Prepaid expense of the current year should be added and the prepaid expense of the next year should be reduced. So that will be what? 1,10,000 minus 5, 1,05,000. This will be reduced, this will be added. So reverse of it will become what? For my receipts and payments account. Till here, are you guys fine? So just look into the steps. What are we going to do? First thing, I told you what? We are going to be making a opening balance sheet to find out what is the capital fund available during the year. Done. Then I told you I'm going to be opening the various ledger accounts to find out the income and expenditure. That will be basically, I told you whether to know whether what is outstanding and what is prepaid. And finally, I'll be making all the balance sheet what is there. Right? Now, few things that we need to understand from the examination person. How do you treat a donation? How do you treat a donation? Is it going to be income or is it going to be part of your balance sheet? Now, whenever, let's say a donation is given, let's say for an example, I'll give you a donation to build a ArivuPro building. Okay. Now, till the time the building is built, this donation will be on the liability side. This is a specific donation. It will be on which side? Because it's given for the capital purpose. Now let's say I am giving you donation generally, saying that you can use it for the scholarship for a student or other stuff. That will be treated as part of my income. If I have given you a donation specifically for a capital asset, remember it will be shown on the liability side, and every time you incur an expenditure, let's say every time I'm building something, I will be reducing it from that liability. Are you clear? Second part of it, entrance fees.
So we should not prepay that
Because you have, the way donation works is like this. They'll come, they'll say, you know what, I'll give you money only to use it for this purpose, like CSR funds and other things. If you don't use it, you need to return that money back, because that would have given only for that purpose specifically. Especially it will happen for the purpose of the capital assets. Done? Then next one, entrance fees. You have to check what is that entrance fees about. Is it a part of you being part of the club permanently, or is it entry fees for an event? If it's an entry fees for an event, look into it. Whatever the entry fee is minus the expenses will become your receipts or payments depending on excess or income. Again I'm saying, let's say you know this food mela and all which happens in the club. So all the entry ticket fees what you get, you will take minus all the expenses you will incur. If it is a profit, you will take it on the income side. If it's a loss, you will take it on the expenditure side. Are you clear? But if they say it's a fees for you to become a member of a club, then that will become part of the capital thing, because that's a lifetime cost of it. Sale of newspaper and other stuff, we'll look into it later. There is a format. Now see here, we'll look into this question and let's just follow the format whatever I'm saying. It will be extremely easy for you guys to do it in the examination once you follow the format. See, they have given me a receipts and payments account of the X club. The moment they have given me receipts and payments, what should my mind say? Income and expenditure should be prepared, sorted. Then they have given me additional information. Now see here, they have given me additional information as on 1st April, 31st March. Why is this 1st April information important for me? Thank you. I told you guys I require information because of the opening balance sheet. Okay. Now see here, for the year ended blah 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 blah, they have asked you to prepare the income and expenditure account. So let's just try to do the income and expenditure. Easy to do the income and expenditure. I'll go to every item. I will check is there anything outstanding or prepaid. Every item I will go and check what is there anything outstanding or prepaid.
That is also classification.
Correct. So let's go one by one. Cash in hand, where it will come? Balance sheet. Balance as per passbook. Bank interest. Income. Donation and subscription. Income. Receipt from T, right? Now, contribution to fairs, sale of equipment, net proceeds from the variety, donation for the forthcoming end. So let's look into all the receipts. Receipts will always be my income. Now let's see which all income should I take, which all will I not take, and why. Okay. Bank interest, should it come? Bank should come. Now let's check in the bank, is there anything which is outstanding or prepaid? Check in the additional information, is there anything which is outstanding or prepaid? Interest not yet entered in the passbook, 20. What does this mean? 20 rupees not yet entered in the passbook means you have earned it but not recorded. Is it an income for the year? Yes. So what will be my total interest? 30 plus 20, 50. Clear with the first one? Okay, let's come to the second one. Donations and subscription. Have they given you that check everywhere? Have they given, is it a lifetime subscription or is it a one-time subscription or is it something? We'll try to check in the question. Because I told you if it's a general donation, where it will come? And if it is a general, it is gonna come in my income and expenditure, right? Now, let's see.
Subscription due that
They are given subscription due. So subscription was outstanding on April 1st, 150. Subscription was outstanding on March, 100. And you have received a subscription of how much? 2600. Now first thing I have to find, what is the subscription for the year? What is the subscription for the year? How do you do it? We did already that outstanding table. What do you do with the outstanding of the previous year? Minus, and outstanding for the current year? Add. So what will be the answer? 2600 minus 150 plus 100. 2550. Donation and subscription, they did not tell whether it is a specific or general. So what are we going to be assuming it as? A general donation, right? Now, so I'm done with my second receipt also. Clear? Now come to the third one. Receipts from teas. Check, do you have any cost of teas? Tea selling is not part of your regular business, right? It's something that they're doing it. So what did I say? If there is something, anything beyond your business, you can always write the net amount. Check, do you have the cost of the teas on it? In the exam, if you miss out and write on both the sides also, it's okay, don't waste your time, right? Since we know it, we do it again and again. As a student, let's say you did not, you forgot your receipt, I should have reduced the expense. Boss, it's okay, take it in income and expenditure, it will be the same, right? Check the receipts of tea, you have how much? 300. Then do you have what? Cost of tea. That means you made a profit of how much? 50. Let's also see if there is any expenses or other stuff which is got to do with teas in the adjustment. Do you have anything? No? That means, can I write income is more? Right? Income I made 300, expense was 250. So I made a net income of how much? 50. Are you all clear? Any doubt till you? Fine. So we are done with this. Now, see here, contribution to fares is 100 and you have a fares of, that means what? You have spent more. How much you have spent more? 300. So should it come on the income side or the expenditure side? So see here, 2 fare expenses, 300. Understood? Next, sale of equipment. Okay, you have learnt in your final accounts. What you get is the sale of equipment, or do you record the profit or sale of equipment in P&L account? In the profit and loss account, what were you recording it? Profit on sale of equipment or sale of equipment? Profit, right? This is just a sale of equipment value. So is it important for me for preparing income and expenditure? The answer is no. Right? For income and expenditure won't come, balance sheet it will come, we'll see later. Then net proceeds of variety entertainment, 780. They have told as what? Net. That means they have already taken and it's on the income side. So where will I take? 780. Then last one. See here, donation for. This is a specific donation, and specific donation will come in the side of the. Till here you understood? If you do this, you will get 4 marks. Whatever I have told you now, if you have done it, you will get 4 marks. Is it easy till now? Let's go on the expense side. Now, groundsman fee 750. Why is a groundsman fee required? What is groundsman fee? What is groundsman fee? Basically, you will have in club all this ground, park, all those, no? You need somebody to maintain it, like, right? So that expenses, whatever is incurred. Check, do you have anything prepaid or outstanding to that guy? Bonus to groundsman, outstanding. Anything else? 750. So you will be paying him totally what? 300 and 750. 1050. That's okay, even if you write. Put it in the bracket that how you got 1050. Then next one. Next item. Moving machine. What is moving machine? What is moving machine? Basically, you know, when you're cleaning the ground, you need one machine which will go cut all the grass and other stuff. For me, in the examination, I only want to know, is it an asset or not? Is it an asset? Asset will come where? So we only have to check, is there any depreciation or other stuff? We'll see later. Rent of the ground. Expenses. Right? I'll take it. Then cost of tea we have already taken. Fares we have taken. Printing and office equipment. This will be expense. This will be expense. Now check, is there anything outstanding or other stuff? See here, printing. Amount due 100. Amount due 80. That means we know clearly what has to be done. Previous year outstanding, what do we do? Minus, and current year outstanding, you will be adding it. So minus the previous, add the current one. See here. $260. That is basically your 280. What you have plus 80 minus 100. Done. Next one, see here, for repairs 500 is there. Then he is saying there was checks unpresented 300 and 260. Checks unpresented and this one. So if you look into it, what is the checks unpresented? Basically it is like last year's thing which was not taken. So again minus outstanding, add the current one. 460 will be your value. Done. Last one. Now see here, estimated value of the machinery 800. Here you have 1750. Now comes the drama here. Now see here, I have a machinery where the opening value, if I look into it, is $800. Closing value is what? 1750. Okay. Now you have purchased a machinery for what price? 1500. So I had a machinery of 800 opening balance. I purchased what? 1500. The value is 2300. Correct? In that, he is saying there was a machinery worth how much sold? 80 sold. So that means, now look into it. this was the machinery which was their opening plus purchases minus the closing. So the amount which is there, how much is the difference?
550.
This should be the depreciation,
Yes, sir.
right? But there is a sale of 80.
550 minus
There is a sale of what? 80. So the balancing will become the depreciation, which is
470.
this is the working note. So you don't have to calculate separately profit on asset, sale of asset, nothing. You just take the opening, add the purchases, compare with the closing. If there is any sale, reduce it. That will give you the depreciation for the year. Are you clear? Done? Then what else is there? Honorarium to secretary, see here 400. This is for which year? 2021. And I am supposed to make for which year? So that means this should have been outstanding last year, which you have paid in the current. So this year, when are you going to pay? In the next year, right? So, but for income and expenditure, which one should I take? What is for the current year, no? So see here, they are saying the honorarium to the secretary and the treasurer are to be increased by the total of 200. Currently, what are you paying him? Currently, you are paying him. So you want to pay now 200 more. That will be how much? 600. So have we taken everything? So we are done with the income and expenditure 40. This is your first step. If you do this, you get around.
That 50 expenses, the 300 minus 250.
I told you, no, this fair. If you remember this, my T, receipt from T is 30, cost of T is 250, 50 is the profit. Profit will be taken in the income. If it's a loss, it will go in the. So if you see this thing, contribution to fair 100, cost of fair 400. So excess is what? 300. Income or expenditure? Expenditure. So anything which is more, anything beyond the club activity, that will be going to the income and expenditure. Net figure directly. Okay, so out of your 7 marks of the question, right, almost 6 marks will be for the income and expenditure, and the balance 4 marks is going to be for your balance sheet and opening and closing balance. See, opening and closing balance sheet, let us try to find in the current values. Let's just see the question and see what all will come in the opening balance sheet. We'll just focus only on that, okay? Will the opening balance of cash come in the opening balance sheet? Will this too come? What is there in the deposit and current account? Correct? Then in the receipts and payments, check is there anything else which will come in the opening balance sheet? Opening balance sheet. In the opening balance sheet, do you get anything in the entire thing? This was outstanding of the last year, no? Outstanding is a liability, no? Liability should come, no? Then why are you saying no? I am asking for the opening balance sheet. That means anything which belongs to the last year in the receipts and payments should be taken here. Did you understand how I did the thing? Now I'll come to the adjustments. Boss, whatever is there on 1st April column, everything I will take it. Whatever is there in the 1st April column, I'll take everything. Right? So balance will be called as the opening capital. Now see here, cash in hand, cash deposit, subscription and the machinery value. You had outstanding expenses, whatever was there, right? Balance becomes the opening capital. Now see here, same rule I take in the balance sheet. I'll take the opening capital, add the surplus that comes from the income and expenditure, right? Then whatever is outstanding will be my liability
As of 31st.
as on 31st March. Now whatever is there on the asset side will be my same thing. So that's how you make your balance sheet. You understood this portion, right? So we'll do one question which has the reverse of it, that is base. Did you understand this? Please, again and again I'm saying, don't ever do or give up this question. NPO is given up by a lot of students. And so what happens is in the examination, a lot of students study final accounts and they'll leave NPO. If final accounts come, brilliant. If NPO comes, suddenly they'll say paper is difficult. It is like this, either you will get NPO or final accounts. So if you are miss both chapters. Don't take the risk, oh, you will study this today morning, I'll get up, see this God's face and go to the exam. Please don't do all those experiments and all. If you are reading, read both. Otherwise, don't read both. And this is a easy chapter, to be very honest. As teachers, a lot of them confuse it, but it's actually quite an easy chapter. Provided you understand that outstanding and prepaid thing and you do 2-3 questions, you will get it right. Done? Okay, see this question. This is going to be the reverse of it. Guys online, are you guys comfortable? Okay, now we are going to be doing the reverse. What is the reverse of it? They have given me the income and expenditure. From the income and expenditure, what I should do? Receipts and payments. And then again the story is the same. Opening balance sheet, closing balance sheet. Now one more thing, just remember, there is also another 4-mark question which they can ask. Is the first part that I made you guys write. They'll give you subscription, outstanding, prepaid and all. Ask you to calculate. That is 4 marks. If they just give you only that portion.
Only that like work.
Yeah. Okay. Now see here. This account has been prepared after taking the following adjustments. Now see here. Subscription outstanding. Subscription received in advance. Subscription received in advance. Subscription outstanding. Now with the first part of subscription, can you find out what is the subscription received during the year? See this. I have 7,500 which is coming in the income and expenditure. Now if you go back and check the format, what did we do? If you have income and expenditure, add the previous year, reduce the current year. Right? So that means from this, see here. So see here, subscription 7,500. So whatever is the current year you will add, whatever is the outstanding of the current year you will reduce it. So previous year outstanding you will add, current year you will reduce. Whatever is prepaid, what do? Prepaid for the next year you will add it, for the previous year you will subtract it. So see here 270, 450, so you will end up getting 7170. Done. Now next part of it, entrance fees is 250. Entrance fees is how much? 250. Now let's just check the question. Is there anything information given on the end? Salary outstanding at the beginning or at the end of the year were 400 and 450. General expenses include insurance prepaid to the extent of 60, audit for 200. During the year, audit fee for 2021 was paid 200. The club owned a free land at 10,000. The club had sports equipment, blah 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 blah. This was outstanding throughout the cash in hand amount. So there is nothing on the entrance fee 250. Right? That means, can I say the entrance fees was received during the year? So I'll write next one. Entrance fees 250. Now third one, contribution for annual dinner. I did not read anything for the dinner part, so I think the dinner also will be the same. Then next one, annual sport. Again we didn't see any adjustment, so all the things will come in the receipts. Only subscription had a working note that we have already told how to calculate. Are you clear till here? Now let's go to the payments. Salary 4750. Salary 4750. Let us see what all adjustments are there for salary. Right? Salary outstanding at the beginning and the end were 400 and 450. So go back from income to profit and loss account. What I should do? Minus the
Previous year.
for the receipts and payments
Minus current year.
plus outstanding of the previous year minus the outstanding of the current year. So paid for 200 last year, you will reduce it, unpaid will reduce, that will become 4700. Done. Then general expenses, you have how much? 500. So what will you do? General expense, again see here, general expense include insurance prepaid to the extent of 60. Audit fees for 2022 is unpaid. Audit fee for 2021 was 200. So let's just check the general expenses. How do you take the general expenses? Now they are saying you have a general expense of 500. Then they are saying insurance prepaid to the extent of 60. You will add it because anything prepaid, we learnt it, we need to add, that will become 560. Audit fee in the receipts and payments, what I will take? Previous year I have paid in the current year, so I will be taking only the current year payment, which is 200. Next one, secretary honorarium. Check, is there anything on the secretary honorarium? Nothing is there. So entire secretary honorarium, you will assume that it has been paid. Then annual stationery, annual, I think none of this are there. Will depreciation come in the receipts and payments? Depreciation is a non-cash expense, therefore it will not appear in your receipts and payments. So these three items you will take it as it is because there is nothing else. Done. Now please remember, in receipts and payments, just make a note somewhere, except income and expenditure, you will also have to check for capital receipts or payments. Except what? Expenditure, you need to check what? Capital receipts or payment. Okay, now see here, I am checking all the capital receipts. The club owned a freehold lease of a ground value of 10,000. What does this mean? They are already having a land. Did they buy anything this year? So that means this will be part of my opening balance sheet and the closing balance sheet. No addition or subtraction during the year. The club had a sports equipment of 2,600. At the end of the year, it was 2,700. Opening was what? Opening balance was 2,600. Closing balance was what? After depreciation. So what was the depreciation amount? Check. Depreciation amount 300. That means opening value was 26 and it became 3,000. What does that mean? You have purchased or sold? See guys, listen. Opening, I saw my sports equipment, it was worth 2,600. Now I have to check what is the closing value. It is saying 2700. I will check, is it before depreciation or after depreciation? What are they telling this? After depreciation. That means this 2700, if it is after depreciation, that means I will add the depreciation to find out how much addition or subtraction has happened. 2600 was there. If I add up depreciation, it is showing 3000. That means did you add or subtract? Add. You added equipments worth what? 400. 2600 has become 4000. That means you have added equipments worth what? 400 rupees. Right? If you are buying equipments, will it be receipts or payments? Payments. So you will go on the payment side and write sports equipment purchased 400. This is what I told you. In your receipts and payments, except your income and expenditure, check for your capital receipt or payment. Again, I am repeating, what did you do? See here, you check the opening balance of an asset versus the closing balance of the asset. If both are same, then there is no receipts or payment. If both are different, then I have to check if the value has increased, it will be purchase. If the value has reduced, it will be a sale. Are you clear? Online, Kavya, Jayaprada, Nisarga, are you guys clear? Proper? So now, see here, you have done with all of this. Now, on 31st December, the cash in hand amounted to 1600. What does this mean? 30. That's the closing balance. That means it should tally, or else if it does not tally, the balancing figure will go to the opening balance. The balancing figure will go to what? So either they'll give you opening, you'll have to find the closing, or they'll give you closing, you have to find the opening. Are you clear? Is everyone clear till now? Right? Now, this is pretty easy, your opening balance sheet and closing balance sheet. See here, your opening balance sheet, again, simple. Any outstanding expense will be liability. Any prepaid expense will be a asset. Then you have a loan which will be a liability. You have an equipment which will be an asset. You found out the cash balance opening, right? First I told you will either make income and expenditure or part of it. Finally you will end up getting the balance. So which all outstanding was there? Check. Subscription received in advance. This is what? Income received in advance. If an income is received in advance, it's a liability. Salary outstanding, liability. Audit fees unpaid, bank loan, they have given you in the question. Capital fund will become your balancing figure. On the asset side, did you have a data about freehold ground? Did you have a data about sports equipment? Subscription outstanding, right? Just remember this again. Income outstanding is an asset, and income received in advance is a liability. Outstanding expense is a liability. And prepaid expense is a asset. Just remember this, right? Now you get it. Then once you have an opening balance, then again the same rule for finding your closing balances. All of you guys understood? So please go back and do this chapter today. I think I've given you guys two questions are there. I think you should try it out by yourself. One of it I've given you purposefully a little difficult one so that you can try it out by yourself. So clear with NPO, right? So we have done 3 chapters as of now. BRS, then inventory, and your
NPA.
approximate weightage. Like I told you, what all you need to complete after the chapter, you have to complete all the theory, which is part of your study material. Try to solve or check all the illustration questions. If you guys still want some additional questions to be done, I think most of my videos are available on YouTube for free. Otherwise, you can always go on our app and try to check if you are a student, or you can just take a subscription for a month if you are stuck with a particular chapter notes of it. Make sure this is only used on the day before exam. Again, I'm saying this is only meant for a day before exam, because on the day before you don't know what to revise. You will end up revising everything. That in this, wherever you find that some new things has to be added, you can make a notes and keep it ready. That's how it's been prepared. So please don't say I'm going to get 100 reading this paper. It's not possible. If that would have happened, I would have been a god. So I'm not God, I'm a normal human. I'm trying to just make the concept simpler so that you know what all variety of questions can come in. You can say, if you can understand everything that I've done in the class, you should be in a position to score 60 to 70. I'm saying on a very higher scale. I don't want to give a fake promise that, hey, you know what, you'll get 100 on 100 and all. That and all is foolishness. But you should be able to clear your exams for sure, attending all the things that I'm doing in the class, right? So, right? Jaya brother, all the true or false, everything will only be covered towards the last day of the class. Anything that you have a doubt on will take one session, right? So hopefully you liked all the three parts of it. All the three videos are available on YouTube. Just make sure that you can use it for revision. Anything is there, you can use our WhatsApp group for solving all your personal doubts. Yeah. Good evening, guys. So let's start on your inventories chapter. Now, as a student, when I look into it, inventory chapter, there is one easy topic and one difficult topic. Probability of coming to the exam is either 2 marks or 10 marks. So 2 marks, though you will get it. 10, they have been asking in very alternative attempts. The second part of the topic that I'll be doing today, if you are getting little confused with it, don't break your head so much. Try to understand whatever I've done with the logic. Try to at least attempt something in that question than just leaving it blank. Because anyway you will have options, you can try to see if you want to skip it in the option. Right? And if you can understand whatever I've done in the class, you should be able to solve it logically how it works, because it's got to do with numbers and the real logic out there. There is no format, nothing. We just have to apply our logic when we are trying to solve a problem. First thing that we need to understand is what is inventory, right? Whenever we talk about inventory, there are 3 components that we look at, or maybe 4. First thing that we say, an inventory is something which is basically a raw material, finished goods, semi-finished goods, that is called as work in progress. So what all does inventory comprise of? Finished goods, raw material, semi-finished goods. Along with these 3, there is a 4th category called consumables. So inventory comprises of not 3 but 4: raw materials, work in progress, finished goods and consumables. Are you clear with this? Right? Now, the rule of inventory says that the inventory should be valued at lower of the cost or net realizable value. What are they telling? Inventory should be valued at what? Lower of cost or net realizable value. Now the question comes in to say, what are we talking of? Cost and net realizable value. We are telling that the inventory, whenever we are talking in, we are talking it as on the balance sheet date. That is on the 31st March or 30th December, on the closing date, how am I valuing it? So I should be valuing it under what principle? Lowest of the cost or net realizable value. Now first thing we need to understand, what do we mean by cost? For saying something to be a cost, there are 3 things which are required. First thing is the cost of purchase. First thing is what? Cost of purchase. Now I am telling you few things, just remember in your part. Let's say I have purchased this water bottle for 100 rupees. What is the cost of purchase? 100. Now you went to Big Bazaar This same bottle is available for 50 rupees. Is available for what? 50 rupees. Now what is the cost of purchase? Is it 100 or 50? It is 50. And what is this discount called as? Trade discount. Trade discount will never be shown in the books. That means trade discount will always be reduced when I'm trying to find out the cost of purchase. Are you clear? So what is the cost of water bottle for me right now? 50. There is a two components of it. Component number one is basically your GST. Is which one? GST. Let's say on 50 rupees, I paid a 10 rupees of GST. I paid how much of GST? 10. So what is the cost of the water bottle? Now you have to ask a question or check in the question. Is it that 10 rupees tax what I paid? Can I claim a credit? Or is the input credit not available? What is the question you have to check? Is the credit available or not? If the credit is available, then the cost of purchase will be 50. If the input credit is not available, then it will become what? 60. Are you clear? Then let's say packaging charges. Let's say you purchased a water bottle. You paid including GST 60 rupees. Now, if the water bottle, you know the Coke bottle, right? The Coke plastic, the steel bottles that you have, the glass bottles you have, and the plastic bottles. Do you return the glass bottle? Do you return the plastic bottles? Okay, that means that whatever water bottle, if I am giving back the bottle back, the cost of container will not be considered in the cost of purchase. Whereas when you are taking the bottle, that means if the bottles or the packaging is not returnable, then you will have to return, you will have to consider that also as part of your purchase cost. Are you clear? Okay, yesterday I only did BRS because of technical issue. So after inventory, I'll be doing the other chapter of your NPO and incomplete records or NPO, depending on what it is. We'll do the NPO or other stuff. So guys, so please let's just focus on this. Done. So two things that we have to remember. First one is what? GST. What do we check on GST? If it is credit is available or not. The second part of it is what? Packaging. Should I return the package or should I carry it? If the package is to be carried, then the cost of container will be added. Otherwise, it will not. Now, one more thing that you are supposed to be looking at is the concept of cash discount. What is this cash discount? Now, cash discount is a discount given for early payment. Given for what? Early payment. This will never have an impact on the cost of purchase. Even if they say he paid it immediately also, it does not have an impact. The moment they say cash discount, what we are supposed to be looking at, we should not consider it. Trade discount will be reduced, cash discount will never be reduced. Are you clear? Done? So we converted, found out what is the cost of purchase. The second one is the cost of conversion. What do you mean by cost of conversion? Any cost which is incurred for converting your raw material into finished products. Now, the last one is, listen to it, other cost incurred in bringing the inventories to the present location and condition. That means all the transportation cost till it reaches the office where the production will happen, till the time all the transportation cost will be taken. Are you clear? So three major things that we have to remember. It will include the cost of purchase plus cost of purchase plus cost of conversion plus the cost of transportation. Clear? Now, more than all of this, what we are supposed to be looking at is that which are the costs which will not be taken into consideration, and this is most important for your exam. Remember this, because this is where they are going to be testing you again and again. There are going to be 5 costs that we shall not be taking. How many costs? 5 costs. Cost number 1, any abnormal losses. Any which losses? Losses. The second one, storage cost. Third one is administrative overheads. Fourth one is selling and distribution cost. And the last one is the finance or the interest cost. So these 5 costs will never be part of the inventory. Which are the 5? Abnormal losses, storage cost, finance and interest, selling and distribution, and administration. These 5 costs will not be added. So typically what they'll do is they'll give you this as part of the cost and say find out the cost of your inventory. So you know what has to be taken, what has not to be taken. Are you clear? Then what do you mean by net realizable value? What do you mean by net realizable value? Realizable means the price that you're going to be getting by selling it. So now, whenever I have inventory available, I need to check for 2 things. What is the cost of it? What is the net realizable value of it? When I talk about net realizable value, look into this example. Let's say I have this phone with me. This can be sold for 50,000. Is that the net realizable value is the question. The answer is yes. But to make this sale of 50,000, let's say I have to do an advertisement or give a commission of 5,000. I have to give a commission of how much? For selling this for how much? So the term net means what? 45. That means the definition says whatever cost you have incurred for selling has to be reduced from the selling price. So see this, net realizable value is the estimated selling price in the ordinary course of business less estimated cost of completion and estimated cost necessary to make a sale. When will this come into picture? Estimated cost of completion. When do you think it will come into picture? Thank you. When it is a semi-finished goods or a work in progress. Because you cannot sell a semi-finished goods, you will say boss completed it and give it. No. So that means, let's say if I have to sell this phone for 50,000 and let's say 10,000 worth of work is still to be done, you will even reduce that. And the cost of making a sale. Are you clear? To first part of the question is this. So we covered 3 important theory part. First one was what? What do you mean by inventory? Then what do you mean by cost of purchase? Cost of inventory. For that we have 3 things: cost of purchase, cost of conversion, and cost of bringing the inventory to the present location. Then we spoke about net realizable value. What did I say net realizable value is? The cost of selling the inventory less estimated cost incurred for selling the less estimated cost incurred for selling the product. If it is a semi-finished goods, then whatever cost is incurred for the purpose of completion, that also will be taken. Inventory will be valued at what? Lower of cost or net realizable value, whichever is lower. Are you clear? Guys, is everyone clear? Raj will be doing one more chapter today. Guys, are you clear till here? Okay. The next part, this is a 5-mark question that you get. What is the difference between a perpetual inventory and a periodic inventory system? It's a theory question. What you get for a 5-mark part of it. What is the difference between a perpetual and a periodic inventory system? Now, let's try to understand it logically. Then you can just try to memorize all of it. See what happens in case of a periodic verification, right? You will go once in a month. You will go physically count everything. Then what you will do, you will try to find out the closing balance. How will you find out the closing balance? Look into it. I will have the opening balance. That is last year's closing balance will become this year's opening balance. For that, whatever I have purchased will be added. Whatever I have issued will be subtracted. Finally, it will be the closing balance. Now, in the periodic inventory system, what happens is I have last year's opening balance. This year's, again, I will go and do a physical verification. That will be the balance. In this, in between, you are going to add how much ever was purchased and sold. So you have two balance here, opening balance and the closing balance. Then in between, you are going to be checking the records and filling it up. Periodic means you are physically going and checking the inventory. Are you clear? Perpetual inventory means you are going to be doing it based on the books. Perpetual, that means every time you purchased, you will write, I purchased these goods. Every time you sold goods, you will write, I sold those goods. So the major difference between the both is what? Periodic will be based on physical verification, whereas perpetual will be based on the book records. Right? Now, since I am counting, do you count every day or do you count once a while? Once a while, right? That means all the information that you get will be always on a particular date. You will not get it throughout the period. You will always be getting as on what? A particular date. Now, how did I find the cost of sales in the periodic inventory? You had the opening, you had the closing. In between became my cost of sales, correct? Whereas actually, if you look into it on the other side, in the books, if you know accounting, in the books, what will you do? How do you, if somebody asks you, find me the value of the stock, how will you do? Opening stock plus purchases minus closing stock will be your COGS. Can I keep finding this regularly? In the books, can I find out regularly? The answer, but physically, can I find out? In the physical thing, what will happen? You will have opening stock, you will have your closing stock. These two balances you have it. Then in between what is gone, you will try to match it as the cost of goods sold. Whereas in the perpetual inventory system, you will have the records onto it. Now, one of a thing that you need to understand, what happens in case of a perpetual inventory system, we are going to be doing it as a part of your chapter. I will, in the physical thing, I will only be doing physical records. In the perpetual thing, whatever I have recorded in the books, once in a while, I will go and check physically, is it matching? Otherwise, there are people who will come, steal and go, saying, hey, this guy will write everything in the book and you will not check. So, you will be doing something called as physical verification along with the perpetual inventory. That is called as continuous stock verification. What do we call that as? Stock verification. You don't have theory on this, but you have a question on this. So, we'll try to look into the question part of it. Clear? Now, the first part of your calculation, if you get this, this is a lottery. If you get a question of FIFO, LIFO, simple average, weighted average, it's a lottery question. Why? Because there is nothing much to do out there. So, what is FIFO? First in, first out. That means goods, whichever has been issued first, whichever has been produced first, will be sold first. What about LIFO? Last in, first out. Whichever goods were produced the last will be the goods which are going to be sold first. What about simple average? Okay. Simple average. Okay. Simple average works on the average of the prices. Just you're going to be taking average of what? The prices. In weighted average, you will take the average of quantity and prices. Are you clear? Simple average, you will only be considering what? The prices. Whereas in the weighted average, what do we take? Both price and the quantity. So this question will do all the four, because one of it you can expect for the paper right now. So let's see this. So what's the format that you're going to be following? See here, date, then you will write receipts, quantity, price, amount. Then you will write issues, quantity, price, amount. Then finally balance, quantity, price, and amount. Done. Now let us go with regards to it, right? Right now, first thing, what is the date that I have? Now first thing we have to do is write a chronology of the order. First is this, which is the second date that I have?
December 5.
Second, then
December 10,
then
11,
11th, then
19,
then
20,
then
29,
28.
29.
so first thing I have to make a chronology of the dates. Now let's write the dates, whatever is there. December 4, December 5, December 10, 11, 19, 20, 28. Done. Now first thing, what was the issue? 900 at 50. This was the receipts, right? Now let's come here. Which is the second date? 5. 5, they are doing what? Issues of how much? 500. So it will be 500 into the first purchase, which is how much?
50.
So out of 900 you have issued 500. How much are you left with? How much are you left with? 400 at 50. 20,000, right? Next one, December 10th, 400, 55, 20. So in the inventory, how do you write? 400 at 50, 20,000, 400 at 55, 22,000. Are you all clear with this? Next one, which is the next date? 11th, that is how much? 300 at what price? 55 again, that comes to
16,500.
16,500. Now how will I write my closing column? 400 at 50, 400 at 55, 300 at. Are you clear? Thanks, Kandan. Oh, sorry. How much is it? Sorry. Next one. December 19th. What are you doing with December 19th? You have again purchased 200 at what price is this? 60, that comes to. So again I have more things to the inventory, that is 400 at 50, 400 at 55, 300 at 55, 60 at, sorry, 200 at 60. Guys, I'm sorry because it's a revision class, so I'm just doing little faster, right? Next one, we are done with December 19. What was my next date? December 20. How many units?
600.
Hey, okay. 600 units. Now, FIFO method. First I should be going with the first guy, which is what? 400. Then the next guy, which is my 55. That comes to 400 into 50, which is 20,000. 200 into 55, which is. So what will I be left with? 200 out of 400. This 400 is gone. Out of this 400, I am left with 200. Then 300 at 55. 200 at, right? Last one. Then you have again now December 20, 28th, again which gets added 800 units at what price? 800 units. Look into it. 800 units at 47. 800 units at 47, which comes to 37. Nandakumar, it's up to you. How do you want to do it? Because it's a revision, you can after that solve it by yourself. You can use the calculator during the revision class. Right? Now what will be left in the closing stock? 200 into 55, 300 into 55, 200 at 60, 800 into, which is 37. Now last date, what do I have? Issued 500. Which one will I issue 500?
First is 200 and
So I have 500, that will be 200 into 55, 200, 300 into, these two are the first ones I will issue. So I'll be left with a closing stock of how much?
200 into 60, 800 into 47.
Okay, is everyone clear with FIFO? FIFO, if you get in the question, please make sure you take little time, put the formats properly and solve it, because it's like a lottery 5 marks. Right? Don't make a mistake of anything in your FIFO method. Are you all clear? Online, Kannan, Ashish, Raj. Okay, let's do the FIFO now. Sorry, LIFO now. How does the LIFO work? Last in, first out. So I'll do this straight away. I'll not try to look into it anything, right? Now see here, I am coming for December 9th. Sorry, December 5th. If I am coming on December 5th, now again, which was the day which is before 5th? December 4th. So I am gonna be issuing this at what? 500 units at 50. Are you clear? Now let's come to December 20th. Let's come to December 20th. We will go downward up. Which is the first day before December 20th? 19th. How many quantity are there?
200.
So 200 into 60. How much more do I require?
400.
So I'll go one step up, which is how much?
300.
300 at 55. and one more up, which is what? 100 at 55. Now what will be the value of closing stock if I look into it? My value of closing stock on this day, if I have to calculate, will be from this, how much was left?
400.
400 at 50. In this, how much was left?
300.
300 at
55.
55. In this, what was left? Nothing. In this, what was left? Nothing. Done. Now let's come to the December 29. What is the day before December 29?
28.
28th. So this will be issued at what price? 500 at 47. Are you clear? Guys, yesterday's video is reshot and I've uploaded today, so you guys can just look into it. Yesterday there was a technical error, that's why I had to reshoot the entire thing. Guys, are you clear with LIFO?
Yes, sir.
Anyone, any doubt with it? Nothing? Okay. Now see here how we do simple average. How we'll do simple average? Simple average is simple. I'll take all this total and divide by the numbers. Do the total and divide by the numbers. That is 50 plus 55, 55, 60, 55. That is 50 plus 55 plus 55 plus 60 plus 47. 1, 2, 3, 4, 5. How much? 53.4. Okay, now see the way closing stock is calculated. What is the receipts that I have? What is the issues that I have? 1600. So that means what is balance? 1000. 1000 into 53.4 will be the value of the closing stock. That's all is the answer. This is for simple average. It will be part of your MCQ question.
It would require format and so.
If given to just add up the numbers and divide by it. Clear till here? Okay, let's come to the last one. Weighted average, which is gonna be, so weighted average, we'll try to do it along so that you guys, because that's what keeps coming in the exam again and again. We'll try to do weighted average together. So let's just start with it. Now the format will remain the same. What is the format I told you? Date, receipts. In this, what do I write? Quantity, price, amount. Then again I'll go here, issues, quantity, price, amount, then balance, quantity, price, amount. Right. Kirtan, just look into it. For the simple average, what we do is simple. We take the sum of all the things and divide by the number. That is 50 plus 55, 55, 60, 47 divided by n, which comes to 53.4. Then find the total of the opening stock plus purchases minus issues. In this case, this was 2600, issues was 1600. So you have a balance of 1000. So closing stock will be 1000 into 53.4. That's all is for the simple average. Are you guys done writing the format? Now let's write one by one. Yeah, let's write. Yeah, let's start. December 4th, what was the issue price? Sorry, receipt price 90 at 50. So see the way I write it. December 4th, how much was it? 950, 45,000. Come to the balance column and write down 950, 45,000. Clear? Now, December 5. Now, everyone just look into what I write. From now on, whenever I am writing issues, this is the way I am going to be doing for weighted average. Just follow it blindly, you will get the. Now, what was the issue quantity? So, I will go here, write down issue quantity 500. See here, whatever this price is, the previous one, that is what I will be writing it here. So, I will not be taking anything from the receipts column, I will only be taking it from the whatever is the amount in the price column. So, it will be what? 50, 25,000. Now, see here how I write my balance column. This is more important. Make it always like a step like this. Step 1, 900 minus 500. 400. Step 2, amount minus amount. 45 minus 25. 45,000 minus 25, which comes to now do this. This column is found out by dividing amount by quantity. Amount by quantity, which is coming to how much? Are you all done till here? Okay. What's the next date that I have? See the question, next date what I have? December 10th. December 10th. What is the amount? 400 at 55. So see here again, 400, 55. That comes to how much? Okay. Now let's come to the balance column. See here. If it was issued, I reduced it. If it was receipts, I will add it. So that will be 400 plus 400. 20,000 plus 22,000.
42,000.
Now do the division.
52.5.
Now do the division. How much does it come to?
52.5.
52.5. Understood? Now let's next one. Next, what is the date I have? December 11th. How much is it? 300 at 55. So December 11, 300 at 55, which is coming to 16,500. So now again the same rule. 800 plus 300, 1,100. 42,000 plus 16,500, 58,500. Divide this with this. 50. Next one. Next, what is the date I have? December 19th. What is the December 19th amount? So again 260, 12,000. How do I write the balance column? 1,100 plus 200, 1,300. 58,500 plus 12,000, 70,500. Then
54.23.
54.23.
4.23.
Done. Now let's come to December 20th. What is December 20th? You are issuing it what?
600.
Issuing it at?
600.
What did I say? Issue column. How do you look at?
Balance price.
Whatever is the last price.
Price.
So 600 into
54.23.
0.23.
32, 530.
32.
32, 530.
32, 530.
Now how do you find the balance column? 1300 minus 600. That comes to.
700.
Then what did I say? Reduce this with this.
37,
37.
962.
Divided by 7.
37.
962. 54.23.
If you get answer same as the previous one, that means you are doing it right after the issue, right? Next one, December.
28.
What is December 28? 800 units, 47. How much does it come to?
37, 600.
37.
600.
How do you do the last column?
700.
700 plus 800,
1500.
1500. 37 962 plus 37 600,
75, 562.
75.
562.
Now how much will be your balance column?
50.37.
50.37.
Now easy. You have to issue 29 December 500. How much will you issue?
50.37.
500 units. What did I say? Whatever your previous balancing figure is.
25,000.
25.
185.
52,
How much?
50,377. 50.37.
Did you understand this weighted average? Is it easy? Right? So lot of them, I don't know why they get confused with a weighted average. So just follow this blindly. Don't try to use your brain for anything. There might be some abnormal loss scenario and all that. Don't break your head right now. If you have understood it earlier, good. Otherwise, now don't try to break your head in terms of trying to find why the balance is not tallying and all. That you will anyway learn it later.
So for FIFO, you'll just go adding on the balance. For weighted average, you minus with the issues or add it with the receipt.
Correct. Done? Guys, are you all clear? Guys, are you all clear? Now, just understand the last type of question, which generally they ask you for 4 marks. Now, what is this they are trying to ask you out here is simple. Let's try to look at it this way. You have gone to, you are a rice dealer. You have one complete container where you are buying rice on different days. Now you have to find out the closing inventory. Just imagine one complete bowl where rice you are pouring in every day. How can you find out which day's rice is left? Because every day you are buying at different prices. If you know, rice keeps changing in price every day, right? Every day the price is changing. What is that which is left? Will you say, give this, give that and all? You will just keep pouring, right? If you go to Big Bazaar and all, one big bowl will be there They'll be coming whenever it's getting over, they'll keep dumping it, right? You cannot find out. So in those cases, what we do is, what we try to do is, we will try to understand the logic that we do. Whatever is left closing inventory, I will try to find out the selling price of that. Whatever is left what? Closing inventory, I will try to find even that selling price. Are you clear? I know the total purchase price, I know the total sales price now. Why? Because one is already sold. Whatever is left also, I am assuming that it's sold. So that means if I know the total purchase and the total sale, can I find out the profit? So I'll find the profit. I'll find what percentage is the profit. That profit percentage, I will remove it from the closing stock. That will give me the cost price. You understood the logic? I'll tell you again. Listen to it. Let's say you had 100 units which you sold it for 10,000. You have 10 units left. What you will do, if 100 units is costing 10,000, if I sell this 10 units, how much will I get? 1,000. So can I say the total 110 units is sold for 11,000 rupees? Right? I will check the purchase price of this 110. I'll check what the purchase price of this one. Let's say it was 7,000. Now, what will be the profit if everything gets sold? 4,000. Now, how do you find gross profit percentage? 4,000 divided by 11,000 into 100.
36.36.
How much?
36.36.
36 point? Now, this 36.36 is the profit I'm gonna be. So, in this 1,000 rupees, I will reduce 36.36. That is what? 363.6. So, how much does it come to?
963.6.
1,000 minus 360. So, 1,000 minus 360.6. How much do you get? 632.4. No, 636.4. This will be the cost of closing stock. This is the steps we are going to be following. Understood? Step 1, what are we doing? The existing closing stock, we are going to be the existing closing stock, whatever is there, I'll convert it into the selling price. What is step 2? What is step 2? Total purchase value I will take. Selling price minus purchase price will be giving me gross profit. You will find the gross profit percentage, apply it on the closing stock, you will get the cost price. What happened? Madam, you got profit as 36%. Now your closing stock 1,000 rupees is at the selling price. What did we tell about inventory? Inventory should be valued at what price? Lower of cost, right? So how do you, if you know the selling price, how do you find the cost price? Cost plus profit is selling price, right? So I'm doing the reverse of it. Selling price minus profit will give me the cost price.
1,000 minus 36.36.
Percentage. You understood? So step 1, that's what I said. See, what are you doing? Just apply the logic. It's actually very easy. Lot of students simply get confused. See what you have some goods left. You don't know what is the purchase price of it because it's a mixture of so many things. What you will do, you will assume that the stock which is left also is sold. Whatever you have, you will assume that it is sold. Boss, I have sold everything. This is the revenue I would have got. For this, I have purchased by paying this much. These two will give me the profit. You will find the percentage. Then I'll tell, hey, which many units you did not sell, give me that value. In that, remove the profit. 36% was the profit. I removed it. Once I removed profit, I got 636 as my cost price. Are you guys clear? So let's try to now apply through a question and see how it works in. But this is the overall concept of this adjusted selling price. If you have understood it, brilliant. Now let's go one by one. See here. XYZ is in a retail business. The following information is obtained from the books. Goods received by the supplier. What is goods received by the supplier mean? Can I say purchase price? Trade discount 3%, GST 11%. What will happen to the trade discount? Look into it. Trade discount, I will reduce it. Now, did they say anything about the GST? Whether credit is available, not available? They did not mention. You need to write an assumption then. Either you can take or you can't take, but you have to write what? An assumption. Why? Because GST, I told you the logic. There is two options. If credit is available, you don't consider it. If credit is not available, you have to consider. Since nothing is given, I'll write one assumption saying that GST credit not considered.
In the format.
Yeah, this is part of your answer. Guys, are you clear? Right? So GST, whatever is there, if I have not taken into consideration, then what will happen? It will get added. What about transportation charges? What is cost? I told you three things.
That is selling and distribution.
Cost of bringing the raw materials to the present location has to be added. Correct? Therefore, now see here, your total purchase price will be 15,75,000 minus your trade discount, add your GST, add your packaging expense, it comes to. Are you clear with the first part? Now let's come to the second part. Sales during the year. Okay, then sale price of the closing inventory. Boss, I need closing inventory at what price? At the cost price, but they have given me what price? Selling price. I need to convert from selling price to the cost price. So what did I tell? Boss, add up both the sales. If I add up, can I say this will be the total value I will get by selling the total stock? Then what did I say? Reduce your purchases. If you reduce your purchases, what do you get? Gross profit. How do you find gross profit margin? 6,96,659 divided by your total sales, which is 24,80,500. How much does it come to? 28 point. Ishika, you can drop in a message to help@arivupro.com. This is actually a revision class, so not for the examination fee thing. You can drop a message to help@arivupro. They'll guide you guys across. Done? 28 point. Are you guys clear? Now what did I do? I am gonna go back to the closing inventory selling price. Whatever is the selling price of the closing inventory, in that I will multiply with 28.09. 28.09, which comes to how much? 66012. Right? So that will give you the cost of closing inventory. Are you clear? Guys, are you clear till here? So we covered the second kind of question, which is called the adjusted selling price. Now let's come to the last practical question that you can get in the exam. So guys, remember, your question will only be one of these three cases. That is your FIFO, LIFO or your adjusted selling price. Then I'm talking about the third category of question. So just when you see a question, make up your mind which category is it falling to. Once you know it, you know what steps have to be followed. Don't try to do like, hey, question is there, I'll start solving it. You will end up doing question because it gets confusing, right? Now, let us try to understand the last part of it, called as your okay, this question we'll do later. Okay, the last part of the topic, called as inventory taking. Now I want you guys to understand what is inventory taking. Just please apply the logic. It's one of the most easiest, but 90% of the students do wrong and they find inventory chapter difficult because of this. Shall we start? Okay, now what is inventory taking? Inventory taking is basically calculating the closing stock of inventory physically. Now, when is your accounting year ending? Let's say 2024. 31st March 2024 is when the accounting year is ending, right? Now, what it is expected from the company is, on 31st March, you need to count what is the physical inventory available. But in reality, what happens is, lot of companies don't do it on the last day. Sometimes, let's assume you are calculating on 7th April 2024. But what day do I need my inventory? Now, if you are counting on this day, how can you arrive on this day? Correct? Now, let us logically look into it. From 31st March to 7th April, what all would have happened? Let's assume you have a stock in hand. Correct? You would have purchased something. You would have sold something. Correct? There might be some purchase returns. There might have been some sales return. There might have been some wastages. By doing all of this, you will get to know the inventory value on 7th April. Yes or no? Now, my objective is to find inventory on what date? 31st March. But I am counting on which date? 7th April. Now, how do I make sure that 7th April to 31st March I do it? Right? I am going to be doing the reverse of whatever has happened. It is like whatever I have done from 31st March to 7th April, I am going to be doing the reverse of everything. That means what you will do? What will you do with the wastages? Add. What will you do with the sales return? Here you have added it, therefore there you will subtract it. What about your purchase returns? Add. What about your sales? You will add it. Mine reverse, right? Please understand, you have to reverse it. What about your purchases? Minus. Are you clear with this? Everyone online, are you guys clear with this? Now let's look into the other way around. Okay. When are you okay, just if you guys want, you can just copy this. No, write it like this so that you can understand. This is 8 marks question. Only this 8 marks.
FIFO 5 marks.
So I see if you get FIFO and weighted average, it will be 8 or 10 marks. If you get this again, it will be an 8 or 10 marks question.
FIFO and weighted average 1 question.
Yeah, it will be one question only. Or sometimes if they want to ask 5, they'll ask only one of those.
So one question and
ಒಂದೇ ಬಂದ್ರೆ ಅದೇ FIFO ಅಥವಾ weighted ಕೊಡ್ತಾರೆ.
ಎರಡು ಟಾಪಿಕ್ ಒಂದೇ ಕ್ವಶನ್ ಕೊಡ್ತಾರೆ.
They'll either give you only FIFO, or they'll give you only weighted, or they'll give you adjusted selling price, or they'll give you this. Only 4 kind of questions are there. ಯಾವುದೋ ಒಂದು ಬರುತ್ತೆ, that will, and that too it's an alternative thing. If you get a theory, you will get 2 marks, you won't get anything in practical, or you will get both for a 10 or 12 marks. BRS will definitely come, so don't miss your BRS. BRS will definitely come. BRS or cash book. So this is another thing. Sindhu, I am doing all the questions, so just wait, right? I have not started any of the question. So did you guys understand this part of the theory? So please read the question. If they give me after the accounting date, then I have to do the reverse. Some of the questions, now tell me what happens. When is my accounting year getting over? 31st March. Let's say I have done physical verification on 23rd March. I have done physical verification on which date? 23rd March. What is the objective for me? To arrive at 31st March. How will you arrive at 31st March? So now basically I am doing the forward. So I don't have to do any reverse or other stuff. Just follow whatever it is. That means whatever I did now, just follow the same thing. You understood both the scenarios, right? Guys, if you have any questions, doubts and other things to be done, that's where if you see the schedule, there is one day given last day where we will cover all the questions which you really want to ask a doubt on. Please understand it's a revision class, so it will be based on the topics that we feel is important. Anything is there as the doubt clearing, we can do it on the last day. Because of lack of time, we cannot keep taking all the doubt questions in between, right? Please understand it's a revision class, so just please don't take it personally. Are you clear with this? Okay, now let's read this question and let us try to understand what are they trying to look at. A trader prepared his accounts on 31st March each year. Due to unavoidable reasons, no stock taking could be possible till 15th April. So when did he do?
15th April.
So that means my mind should automatically tell what? Was whatever has happened between 31st March to 15th April, everything else I should be reversing it. If that you get it right, you are almost sorted, right? One thing you might get confused in the overall question, that's okay to do mistake, because as students it's okay. I'm not saying that you can do everything right, but one entry you will get some confusing part of it, that you can always take a wild guess and do whether you have only 2 options. Either you should add or you subtract. So take one of it and take a call, whatever works out for you guys. Now see here, no stocking could be possible till 15th April, on which date the total cost of his go down came to 50,000. So what is he talking about? 50,000 is the inventory on which date? 15th April. Super. The following statements were established. Sales for 41,000 including a cash sale of 10,000. Wait. Purchases 5,034 including the cash purchase. Sales return 1,000. Right? On 15th March, goods of the sales value were sent on sale on return basis to a customer. The period of approval being 4 weeks. He returned 40% of the goods on 10th April, approving the rest. So this is something which is little new. We'll try to understand what it is. Right? The trader also received goods costing 8,000 in March for a sale on consignment basis. 20% of the goods have been sold, another 50% by 15th April. These sales were not included in the above sales. Goods are sold by the trader at a profit of 20% on sales. Why is it required? Boss, closing stock will be valued at what price? Cost price, right? So I should always take, if you know the formula, it's opening stock plus purchases minus closing stock is cost of goods sold. So if I have to find the opening stock, I don't require sales. I require what? Cost of goods sold. I require what? Cost of goods sold. Are you guys clear till here? Right? So let's start one by one. First thing, see here. Value of stock, how much was it? 50,000. Now selling price, if you know, 41 minus 1, because you had a sales return of how much? 1,000 rupees. So my total sales is what? 41 minus 1, these two things. So what did we learn? Sales should we add or subtract in the format that we wrote? Reverse order, no. So I should be adding it across. Now I should be, remember this, somewhere you write down, we will be reducing or adding the cost of sales. That is selling price minus the profit. So you are going to be reducing what? Selling price minus the profit. Now they are telling me profit is how much? See here, profit is how much? 20% on sales. That means 40,000 minus 8 comes to what? 32,000. Clear with this? Okay, next one. Purchases, what we should do? Subtract. So I'll take this. At least these two though you can get it right. Sales and purchase. Now let me explain the other two things which is there. These two were earlier part of the old syllabus. Now it's not there. Consignment and goods sent on approval and return basis. But that doesn't mean that they can't ask you that question just because they've removed it. So just let's try to understand this. On 15th March, goods of the sales value of 10,000 were sent on sale on return basis for a period of 4 weeks. He returned 40% of the goods on April, approving the rest. The customer was billed on 16th April. Now, okay, wait. Now, what happens when you send a goods on sale or return basis, right? When you are sending a goods on sale on return basis, look into it. There are multiple ways of treating it. Now, once your 4 weeks are done, irrespective of what happens, it will be considered the sale is over. Whenever you are sending goods on sale on return basis, what happens? Once the period is over, 4 weeks means usually it is 1 month, right? So if you are sending on 15th March, that means 15th April you should have confirmed. How much did he return to you? 40%, right? So how much is left over? How much is left over? 6,000 worth of goods, right? When did he bill? That means on the 31st March, did the sale happen? No. That means now I am supposed to be looking at on 31st March, whatever is the cost of that sale value, right, which is considered as sale, I need to add it back. Now you are selling it at what price? 6,000. What is the profit on that? 20%. How much does it come up to? 1,200. So what will be the cost price of the goods sold? 4,800. Correct? Now just for you guys, remember this. As a student, if I am sitting on the other side, I'll tell you an easier way to remember. Whenever they are telling you, listen to it. Goods are sent on sale on return basis. Whatever is the goods which he has not returned. Whatever is the goods which he has not returned. That one, the balance figure, consider it as a sale and bring it to the cost price. In the examination, trick is, that is when you are doing the reverse of it. If you have to do the forward, what you will do, instead of minusing, you will add it across. Done. Last part. Right, last one. See here, the trader had received goods of for sale on consignment basis. 20% of the goods were sold. So how much is left over? 80%. On this 80%, look into it. What is he saying? %20 was sold, another 50% was sold on. So what is unsold? 30%, right? This unsold one, you take it as part of your purchases and you are done with it. 30% of 8,000, because its goods are going to be sent on consignment at cost price. Done. See this you will actually understand it even more better compared to that question. Just see this. X was closing his books on 31st March, failed to take actual stock. Only on 9th April, he ascertained to be worth 2,50,000. So he is taking the value on which date? 9th April. He found out that the sales in this dispatch, return inwards books, blah blah blah, he found that sales was 17,200, purchase was 1,200, and 500 were not received until the goods were taken. Goods were invoiced in the month of March, but goods received 4th April amount. Gross profit is 33.1/3% of cost. Now why is that required? Whatever the sales price is, I will reduce the profit. Now see here, they are telling me as what? Now whenever they give you this, right, follow this table: cost, profit, selling price. They are telling you this as what? 33% on the cost price. But you know what? Read here. The sales day book gave me 17,200. Is it cost price or the selling price? Selling price, right? Now see here what I write. I'll consider my cost price to be 100. Profit will be 33, 1/3. Selling price therefore will be 133, 1/3. Are you clear? I know the selling price is 17,200. Do the cross multiplication, find out the profit. How much is it coming to? That is 43,000. When you are taking the decimals, so 4,300, sorry, not, it's 4,300.
4 to 9.
So 4,300. Now do the cost. How much do you get? 17,200 minus 4,300. What will be the cost price? 17 minus 12,000. So see here, that will be the, so I should add back my sales. Are you clear? Now See here what he's saying. You have done a purchase of 1200, but 500 was not still received. That means how much purchases have you received till now? So you have only received 700 worth of purchases. So that is what I will reduce. Don't reduce the entire 1200. I will reduce only what? 700. Are you clear? Done. Last part, see here. Goods invoiced during the month of March were received on 4th April. Were received on 4th April. Did you receive after 31st March? What? Which date I am supposed to find out? On 31st April, right? I have 31st March. Whereas I have received the goods on what? So what I should do? Minus 1000. This is 5-mark question. They'll give you 3 adjustments for 5 marks. Understood how to find the cost price? So see, this was one of the exam question. Came for 12 marks. It's actually a little trickier question. Let's try to see how it goes on. This was in the examination based on the... See now a question like this when you get in, don't break your head so much. Let's see how much ever we can solve out of it. It's better than getting 0 to get some marks, right? See here. Sky Limited keeps no stock records, but a physical inventory is made on the end of each quarter. The valuation is taken at the cost. The company, however, ends on 31st March and their accounts have been prepared to that date. The stock valuation taken on 31st March was, however, misleading. What are they talking of? That means they have done some mistakes and has been advised to value the closing stock again with the figures on 31st March 2017. So where am I? 31st December. Which date I am supposed to find? So should I add or subtract all my purchases? Madam, I am doing forward, no? See, in the previous question I was doing 9th April to 31st March. Now I am on what date? 31st December. I am on 31st December. So I am supposed to be doing... So that means whatever has happened between 1st January to 31st March, I have to just replicate the same thing. Did you understand this portion? So that's where please spend little time to read the dates properly. The moment you know it's an inventory question, you have to understand it will only be 3. Whether FIFO, LIFO, blah blah blah, adjusted selling price or this one. Once you know what is that question asking for, then it's very easy to solve. Students find it difficult because they try to say, you know what, hey, that question I was adding, this question I was subtracting. That doesn't work. In your CA exams, you need to just apply yourself and see where situation we are. So they have given you on 31st December. I am supposed to find on which date? 31st March. So I am doing everything as it is in the format. So you have a opening stock. The page total of 5,000 has been carried to the summary sheet as 6,000. So what have you done? You have additionally added 1,000 rupees. How do you correct it? Subtract 1,000. Page total has been undercast by 200. How do you make it proper? Undercast by 200 means what? You have shown lower. How do you correct it? By adding 200. 4,000. How do you deal with this? Like what did we do in the previous question? See, there was 3,000 rupees worth of goods which belong to the next year. Right? But when did you take it? In the current year, right? That means does that belong to this quarter? The answer is no. So you have to remove it. Then you have something which you received next quarter, but it belonged to this quarter. So you should be adding it. So see here, goods purchased 70,000 minus 3, that is of the previous quarter, add 4 comes to 71. Did you understand this? Guys, are you clear with this? right? Now next one, sales invoice to the customer 90,000. Of this 5,000 belong to the goods dispatched and 4,000 for the goods for the current year. That means again the same story, minus 5, add 4. But what did I tell whenever there is a sale? What price should we be taking? We should be taking at the cost price. How do you find it at the cost price? By reducing the profit. So let's try to find out the profit. See here, the gross margin earned by the company is 25% on the cost, and the sales will be at what price? Selling price. So we have to do the table. Are you clear? Now, what do you mean by credit note and a debit note? What do you mean by credit note and a debit note? Credit note is which return? Sales return or purchase return? Credit note is a sales return, no? Credit note is a sales return. So now first let's look into this. What did I say? Cost, profit and the selling price. Cost, profit and the selling price. Now see here, my cost is what? 100, profit will be 25, selling price will be 125. Why did I do this? Because there's a profit is on which price? Cost price. Are you clear? Now let me find out the selling price. I had goods worth 90,000 here, goods worth 90,000. In this I will reduce 5,000, add 4,000, that comes to 81,000. Now do the cross multiplication. 81,000 into 25 divided by 125.
16,300.
Hey, 89, no?
89.
89, sorry, I don't know why I wrote 81. 89. 89 into 25 divided by 125. 17,000. Therefore, what will be your cost price? 72. 71. 200. Right? Understood? Now, see here. Again, I'll do for the sales return. What was my cost? 100. Profit 25. Selling price 125. Sales return is 1000. Therefore, what's the cost price of the sales return? 200. That will be 800. Now, what was the format I told you? See, if we are doing from December to March, add purchases, add sales return, minus sales, minus purchase return. Correct? So that's what we are going to be doing it here. So see here, undercasting anyway we knew we had to add it. Sales, purchases I'll add, sales return I'll add. Overcasting which was there 1000. Little bit, just do some more questions now. And don't break your head if you're not able to get inventory questions right. Correct? Because it's not like a compulsory question which is going to come in the paper or other stuff. It's like come in, not come in, come in, not come in. So I'll try to spend time. I've taught you all the 3 kind of questions which is going to come in. Do a little bit of practice. And the theory questions, make sure you learn it properly. Solve all the theory. You should be able to get this right. Even in the exam, if you're not able to get, at least do the purchase and the sale entry. Nothing happens. Sales you know how to do. Purchase you have to. Just use that logic. 90% of the questions, if you see all the past paper, it's always been on the physical stock. So I've given you one more question for practice so that you can do it after you have understood everything back home. So are you guys clear with this? We are done with this chapter. If you guys have liked it, do subscribe. It's gonna be fun. Thank you guys. See you soon.